Welcome everybody. This is London. We're on the channel here for the Crypto Kingdom. I want to play a little music, kind of relax, get into the evening so we can check out Harmony 1. Let's check out Harmony 1. Let's tune down that music. That was a nice intro with the music. For once it seems like the music was okay. So congratulations. Seems like our music was a good start. Now, let's see what we have. The details on Harmony 1. We're currently looking at Harmony 1. It is, what have we got here? We are looking at the acquisition kind of in process. We have been discussing the acquisition and have been kind of approaching it with a tiered approach, kind of a heavyweight or a double down or triple down. Heavyweight, we have called it. Scaled in, I'd say a scaled in approach. You guys who have been following have been watching and seeing these price levels work out perfectly. This was our tier 1 approach. The current price of Harmony 1 is, looks like about a little under 14.5 cents. That is no problem for us right now. We appreciate the opportunity to acquire more Harmony 1 at a good price. So as we look at this zone, for those of you who are new to the channel, turn on subscriptions and notifications. We promise to bring you accurate and timely information to maximize your returns. Those of you returning know that we've been extraordinarily accurate down to this most recent price entry point. And around 13, I believe some of you got up to about 50% on that, at least 30% on that run in a matter of hours. So we're anticipating the next run, we're anticipating that next trajectory to the upside. Before that occurs, we need to facilitate an acquisition at a good price, and we have put forth a strategy in order to kind of capture the lowest price with the greatest amount of money that we're willing to risk in this level. We have predetermined that level in terms of, let's say, that level of risk, and we have put in some examples on the left-hand side here. About 100, about 200, that may be 1,000 and 2,000. You may add 1 0, you may add 2 zeros. So that is up to you, as is this entire strategy. This is a strategy that is used by some key investors. I have a former history owning a private hedge fund, and at 22 years old, I recall I was a financial analyst. Started off my career in finance, doing $1 billion deal when I was 22 years old. So I understand these programs. We're looking at TradingView. TradingView is the primary application that's shared on all of your platforms. So get to know TradingView. You can upgrade your membership and get a premium membership if you can learn the details. I always caution people, and I'm going to take you through a really great example. You guys will enjoy this. As we look at the current kind of acquisition schedule, it's very smooth, extremely smooth, very well planned out. I'd like to show you. You guys will enjoy this part here. As we look at this central kind of level and around the 50% retracement. Now, many of you right now are going through an acquisition schedule based upon the fact that we may experience an upside, okay, an upward trajectory similar to this 30%. We have a contingent plan if indeed it decides to go down to a level that we will just discuss as the golden pocket. We'll go over those details again. The Fibonacci, kind of a lower level here, which may be more important, which we all know may be more important for the overall continuation of the bullish bull trend here. So this trend is a phenomenal trend, 20 times your investment, okay? Many of us were aware of some issues going on with Binance in and around the peak. There's been some talk that it has had a long-term effect. I don't believe that. I don't believe that just the exchange with limiting some withdrawals of the actual Harmony 1 by the owners. I don't believe that would cause a long-term disruption. I think the fundamentals are still very sound. and I would expect to continue to see the bullish trend pick up at some point here. Whether or not it can pick up here will depend upon the buyer interest. So that will be you, that will be anyone else who chooses to enter. Will also be gauged by the seller interest, which may be you as well as you look at other opportunities. This channel is a great place for you guys to hang out, not just on a weekend evening, staying out of trouble. We appreciate you guys are doing that. There's plenty of fun to be had in life without getting in trouble, whether or not it's a weekend or a weeknight or an afternoon or just a quick break in the day. We're able to bring you good ideas, such as the entry price here. This target price was predefined. 30%. You guys did well. You guys who like to trade did very well. You did very well up in this area, I'll recall, in the 28th of March. We called the fake head and shoulders. The fake head and shoulders, and many of you were able to capitalize on, I believe, a 32-hour run of green candles. So that was phenomenal. You made great money there, great money here, and that's while we're experiencing kind of this frustration with Binance. I believe we will get past it. Will we get past it now? Well, it's going to depend on the nature of your buying and your selling, and we'll get into that. I think you will like the. You'll like the lesson here. This is a really great lesson. Those of you who are getting involved in Fibonacci, getting involved in some advanced acquisition techniques, okay? Just some advanced acquisition techniques. Now you just saw this. We'll have to really get tight on this here. As we've reached the different levels, and let's make sure our Fibonacci's are perfect, we will try and make sure they are perfect. I will bring up kind of a caveat here. It's one issue that is a prime example as to why it is best to potentially not always rely on someone else's Fibonacci's or someone else's chart, but there are tricks to at least the technological trade. Okay, we saw this, and I think you'll appreciate this very much. Please pay attention and watch this. As you see around this area, the first level of acquisition. Now we pepper in very lightly. Okay, at the first level. So essentially nothing in the red zone. Okay, and this is a predetermined, these are calculatives. They are built into every trading program, guys. You can't get away from a Fibonacci and in the market. You just can't. So the fact that we can teach you about it, we're very excited. Now, you see how this line held, okay, in and around the 15.5, and it's such a specific numbers. 15.55, what is it? Yeah, 15.553. 15.5 cents essentially. So this held 1, 2, 3, 4, 5, 6 times, guys. There were 6 levels of small orders, okay, which went across. Just people willing to say, I want to make sure if it does continue, because it had this trajectory where it had continued. It had kind of pump faked, drawn back, and it wanted to continue again. And then look at all of this acquisition in here. Okay, the 1, 2, 3, 4, 5, 6. Okay, 6 individual hits along that support line. That is phenomenal. That just shows that there is an acquisition in progress, a light level of acquisition in progress. As it dropped down to the 0.5 level, I think you will appreciate this. We saw a little bit of action here, but what I started to see as well. Now, if you watched it on the actual, if you watched the tape unfold, there were some hits in here. Some of these, like this is currently below just a touch. Some of them form and then the line will reform around it. Okay, it's just the nature of how this develops. If you look, however, this is the 4 hour, I believe. If we look at the, or maybe, I'm sorry, it may be the 1 hour. Let's look at the 4 hour. I'm gonna bring this to your attention so that you can understand, depending upon what you are looking at, you can miss a price target. And let's see, let's go into the, now we are on the, I'm going to verify this, we are on the 4 hour. We had been on the 1 hour. And for more detailed work, more detailed acquisition, I typically suggest, a 1 hour look if you guys are paying attention on that kind of a level. 1 hour makes some sense if it's kind of a, if we're dealing with a weekend, you may not want to just receive information on a 4 hourly basis. That's kind of an extended time frame to just trust the process. If you understand what I mean, you could, unless you have your orders in and you've already predetermined, etc. Now, I can tell whether or not you guys are using the 4 hour or the 1 hour, no problem. on the 4 hour that we're looking at, I want to show you this bounce right in this area on the 14.9. Let's see, it is the 14.8 to 14.9, and it's perfect. Okay, this is a perfect bounce and along the support line. I can also tell that in and around here, due to the nature of this, if we really get tight and zoom in with this, that it's receiving support. Now look at this again on the 1 hour. We were not essentially precisely on this line, and I can ensure this the exact the parameters of this Fibonacci, but I looked at this earlier today. It's precisely on this. On your 4 hour, it's just precisely on there. So you may be either, there are one of two options. Either people are using their own programs, which is good. It's very good, but it's comical because some of you may be on the 4 hour Fibonacci. Some of you may not know that it's on the 4 hour when you're drawing your lines, when you're doing your Fibonacci. As long as you know that you're on the 4 hour, that is fine. If you don't know that you're on the 4 hour as opposed to the 1 hour, I will know that you're on the 4 hour because I will see the price targets. And again, as you go down these different levels from the pale green to the kind of the bright green in here to the teal area, as you hit the teal, this is a whole nother price target, an area of smaller, yet increased, okay, a multipled increase, yet still a moderate level of acquisition to essentially achieve a lower overall cost basis. If it were to take off at this level, we want to make sure we have some exposure. All right, but we don't want to have complete exposure at this level, okay? In and around the 14 and 9/10 of a cent, around almost 15 cents. We don't want to have complete exposure. But the funny thing is, I can tell who even placed, let's say, set up their purchase orders on the 4 hour. Some people may have just said, okay, and it looks like one of two things. Either people have set them up on the 4 hour, gone back to the 1 hour and played between them, or we're just seeing a larger kind of, I don't know, almost like a follow through. We're kind of seeing a conformance, okay, of the micro or the individualized kind of the, I don't know, think the smaller time frames, these minutes and these hours, our individual hours, are conforming to a larger overall pattern. So it could be that it started off with people very, very concentrated on the 1 hour scale and making sure things were precise. It may have even been because we were doing that. We were very, very, we were, giving lessons. We were trying to teach people this process so as to maximize your gains and minimize your risk. And that just includes, it's very simple, guys. We never want to pay, and I mean never, okay? We never want to pay a high premium or a high price for anything. The goal is to get and achieve a low price. We want a discount. Okay, that is what we want, is a discount. How do we achieve that? We don't invest up at the top at all. We pepper in slightly. We may double that down, but it's still a small amount. We do gain some exposure in these top levels, okay, these top tiers, okay? As we go down, we do double down, okay? As we get into this, it expands rapidly, okay? And as we expand rapidly, we gain more exposure to this frequency interval, this pricing frequency interval. Okay, we gain that exposure at a better price. Okay, that is essential as you look at your profits, as you look at your strategy. No, as you have to say no, as you guys look on your trading platform and you see, well, I want to see what is up right now. What's the hot stock right now? Everyone wants to catch things, and I want to just teach you guys something. And this is all educational, okay? And you guys know that. If you want to fill out the forms and waivers on trading, on international and state law, go to your financial advice center. You're not going to get those warnings here. This is all educational. I'll talk about the good parts of investing, the bad parts of investing, but not all those legalese. We won't go through that. So this is not formal financial advice. Just educational, based on my historical my own acquisition of knowledge, if I could spread that with you. Now, when you see, okay, you see on the charts for the days, the results, you'll pick up and you'll do a search. You want to know, what's up today? I want to get in on something that's hot. I'm going to show you immediately now, Okay, when we pointed out this target, this pricing target here, okay, that is nice. What had just happened there? Let's look at exactly on Harmony 1 what had just happened there. Look at how much it had lost. Okay, look at this. Okay, so you would have literally missed this opportunity. I mean, absolutely almost guaranteed you would have missed this opportunity. Now, we had a few events in here where people were able to make some money, all right, in and around 10%. The club here loves 10%. The birthday gift or the Christmas gift for the members at the Crypto Kingdom is literally, they're going to say, oh, please tell me it's 10%. I joke with everyone here. For all of you that are here, if you could just hit the thumbs up, and I'm going to take a second, and I am going to make sure that you guys have, if I can do this, I'm not sure that I can, but I'm going to try and make sure that you have the Discord address right now. That's just a chat room, is all it is. And it's a good chat room. It has good rules to it. You guys are not going to be, it's a very clean environment. It's a wholesome environment. We have a good moderator, and it's good content. So I want to make sure that you guys have that. If I can, let's see if I can bring this up and put this onto, let me see if I can put this onto the chat real quickly. Let me put, let's see, I believe I can bring the video up and just put it in the description. You'll have to give me just a second. Let me see if I can put in here. Let me put in edit. I believe this is the one we're live on. It may not show me. Well, I'm going to have to probably just add this into the chat. Let me see. I'll put the, here we go. I will put this Discord. I've got it up now just so you guys have that. Also, make sure you follow us on Twitter. Okay, Twitter is very nice. We have the Twitter is the kingdom. It's very simple, but that's an immediate way for us to get information out to you. All right, so you will be able to stay informed, and we are serious when we talk about needing to provide you with accurate information. Okay, accurate and timely information. So let's go ahead, and I will leave the Discord up top. We had a giveaway today on the Discord, and I want to thank very much Yosuke. Yosuke is our moderator at the Discord, and he is doing a phenomenal job. He orchestrated a giveaway today. So there are kind of contests, there are prizes, there is good stuff going on there. Let's see, Discord, there we go. So let's see what we have here, and let's go ahead and if I can pin this, can I pin this? Oh, okay. I'll tell y'all the chat. I'm not very good with detailed, triple. What do you call that? Multitasking. I'd rather stick with my charts, so I'm happier now. Getting back into this activity. Let's see. Now, as we got through the main portion here, remember we are now on the 4 hour. We're either seeing a conformance of the overall individualized, behavior on the the 5 minute, 10 minute, 30 minute, or the 1 hour. Okay, those are all selected options that you can look at, down to a second, 5 seconds, 15 seconds, guys, 30 seconds. We're either seeing a conformance of your trading behavior, onto a larger time frame, which is this 4 hours, or it's also possible that people are only trading on the 4 hour. So just be aware, choose and be aware of what you are trading on. Make sure that you have an awareness that you're on. For instance, if you're on the week, some people may not know. They may be on the day or the week or the month and not be able to read the chart. If we go to the week, for instance, the week chart on this, the weekly chart, is going to be something that people are not going to be able to manage necessarily, and it's going to be a nice chart. A lot of people right now, it's a good thing for us to look at. Now, I can eliminate all this noise, and I will for us in just a minute. We may come back to this, but understand, as we look at this, and I may be able to just pull, this is going to involve a lot. This is a for instance. Now, this is where we're at on the weekly. I will come back to this and clean this up so that you can see what the weekly looks like, because it looks nice. It looks nicer. It looks healthier. We have been looking at least the 4 hour, I will say, in terms of detail, if not the 1 hour at times. But this looks like a nice chart. This looks like a good, healthy run up, 20x, okay, 20 times your investment, okay, originally here during this primary cycle, the frequency, the impulse, whatever you will call it. Now, it looks like a healthy correction right now, a small little retracement, let's call it. It doesn't even look severe. Now, when we go back to the 4 hour, people have been concerned. People have been saying, well, everything's negative. Everything's going down. It's crashing. It's crashing. No, it's the same. It's the same that we just saw on the weekly. Now, didn't that look nice on the weekly? Yeah, you guys could get used to that if it were to continue to do that on a regular basis. And let's get in here. If it wanted to continue to exhibit this type of pricing behavior, I don't know anyone who would have a problem with it exhibiting this type of pricing behavior. You know, you would ask, I guarantee you that you would ask whether or not you'd be able to sell here and buy back here to maximize your profits. But even the holders since the time of, let's say 2 cents, 3 cents, they're happy with this weekly. So these retracements are a part of the natural pricing behavior that we look at. Excuse me. So let's get into, and I just do bring that up because the phenomenon is either there's a conformance of the individualized behavior to, let's say, the 4 hour, which we're seeing here on the 4 hour, okay? Or people they're not aware of the difference between the 1 hour and the 4 hour. And I hope that that's enough of that discussion that you will understand there are 2 different options. You may want to know which one to use. Make sure you know which one you're using and why, okay? So as we look at that, you'll see the clear bounce off our key indicator level. And this is where you can't make this stuff up. Clear bounce off of the 14.9, okay? Clearly, okay, clear bounce off right now. We're watching this pricing action develop. As this is developing, the market maker is taking in the orders. He is taking in the orders. And the demand at this level, okay, as these are executed, is driving up the price. He is able to take these to market and sell them, okay, at a higher price. All right, that is what the negotiated price is amongst the buyers and sellers, as facilitated by the market maker, okay, by the exchange, Binance, crypto, this and that, whatever you're on, KuCoin, etc. They receive orders on this level. They attempt to sell them to others at a higher price. As they market this, okay, as they market one to others, okay, they achieve this dynamic, and they will typically take a fee, or they will take some sort of a percentage in and around here to fund their exchange so that they can continue to bring this price action to the buyers and sellers. So that's how the market maker works. You can see, now this is what's called the golden pocket. Let's get into this on this micro frequency level. Now, it's kind of a magical number. Not everyone knows what a golden pocket is. All it is the 61%. It's a real fancy terminology. Just plug in, just laser focus on this for a second. All it is the 61% retracement level. That's it. Out of all of this, okay, we start here at our target price. We nailed that, okay? People made, you guys know, people made 30%. Just wham, great velocity on the upside trajectory. We started in the target price. We had this precisely, okay, you guys know, for almost a week out, giving you this figure, and it's just mathematics. It's just based upon these retracements. It was a retracement level. So we say, well, why was that price important? Well, understand, it was important because, as we saw, on the weekly chart, this is just part of a retracement. Okay, we know for a fact that this level right here, okay, based upon our chart, based upon our Fibonacci, that this level was critical, okay? So as we look at that, we notified of that. We gave you accurate and timely information on that. We saw a lot of volume come in, and wham, up 30%, up to 50% during that time. So on this micro frequency, or this individual pricing action that we're looking at right now, you may want to know, or you may want to see, what is this? That is just the same percentage on a smaller scale. That's all. It's the same percentage achieved here on a smaller scale. Now the complication comes in, okay, when you realize the following. People will say, well, if it went up here on the larger scale, on the overall trend, shouldn't it also go up here on the smaller trend? Potentially, and let me actually look at that. I'm not sure. Okay, that's not, and that is not the golden pocket here. That was the 0.5, which was an important level. The golden pocket we're working down into now. That's going to be your question. If we're heading down towards that, and that's where I'm going now. The question is whether or not this one will hold. This one is at the 0.5. I believe I said that earlier. They have just gotten that the other way, but this is at the 0.5 where we receive that in and around the 13 cents. So let's get that straight. This is the 13-cent mark, which we did predict, which you guys go back in the video if you'd like to. That 13 cent and the Fibonacci, the good thing, if we get anything to you guys, the Fibonacci chart here never changes. Okay, so that's good as gold. The question is going to be, and I think we had moved. Yeah, we had moved this little guy. Let's keep our chart together. As we look at the Fibonacci, that Fibonacci level is the 0.618. That's where we're at on this kind of micro scale right now, on this smaller frequency, 0.618. Now, it's good because we have already marched through this key target area. We've marched through the key target area of the 0.5. Okay, the equivalent on the smaller scale, on the smaller frequency of this individual impulse that we just saw, this trajectory up, this leg, you want to say this leg up, all right? That equivalent to this drastic event here was in and around, let's see, what was that? Almost about 15 cents. Okay, so that's what you see here calculated. It's done by the program. These are kind of natural ordered proportions. You can't get away from them. Percentages. You cannot get away from the fact that if you go from the base of this price action to the top here, that the 50% retracement is literally right here. You cannot mess with the math. You cannot change it. It's inevitable. That is the way that the calculations work. Now, the fact that it will retrace to the 50%, you guys know we were up in this level about last night, I believe around yesterday evening, and people wanting to know, well, should we go all in? Well, okay, look, it had just gone up 30%. People were excited about the upward momentum, but we were in this channel, this kind of level, level one, really, because there's zero in here, in and around the top. We never invest, okay, personally, never invest in anything with a high price, and people don't learn this, and it's very tempting to look at the board and say, well, I want something that has a positive price action on it. What's really hot right now? Well, what's really hot right now, okay, on the board is in this phase. This first leg, this high velocity phase, okay? And that's the amount of price change in a specified period of time. If it's a high velocity, that means it goes up very fast in a short period of time, okay? So when we have that high velocity, that's what you're looking at. You're looking for something with a nice appreciation in price at high velocity. But what happened? Well, naturally, it's going to fall off. That is the nature of pricing. That's the nature of pricing behavior. So don't worry about the ones that are all green. Don't worry about that. They are destined, I promise. They are destined to go through, and I promise this. Pricing behavior goes up and down. The ones that are all straight up are destined at some point to go down. We want to get into the kind of the mass behavior, or this what do you call it? Like the collective effect, and believe that the next one's going to go up 20x, okay? And most of the people that are that impatient, I'll tell you, get involved in whatever that next one is, and they don't have the patience to see whether or not it will. They'll get disappointed by a pullback, much like this instance. But we did discuss this, that no, we expect it to pull back to this level. We also expect it to pull back to the next level, okay, of acquisition. So don't be impatient like that, and don't get your expectations completely, out of what do you call it? Confrontation with reality, out of reality. Don't get those expectations completely twisted, we could say. So in looking at the fundamentals after the price increase, we have a normal kind of retracement here. We're getting into an interesting zone. We're getting into a very interesting zone, because in and around here, this 0.618, and I've described it is the golden pocket. Why? Because that's just a standard go-to figure in terms of the retracement. And just as you cannot change the mathematics, and you need to understand on anything you trade, the difference between this entry price, which we were able to provide, and the maximum, which about 30%. Harmony One has a very good record of about 30%. This one went up about 50% all told, but about 30% locks in People want to know, well, where do I take my profits? It's very consistent in and around 30%, up to 50 it has been. But along this retracement, okay, people were seeing, and I want to bring up the 1 hour chart because you will appreciate on the 1 hourly chart. Now this was the, and see, we have to move the Fibonacci slightly because you see it has to go to this peak right over here. So the 1 hour and the 4 hour, you wind up needing to redraw your Fibonacci's. Okay, so please know which one you're operating on. That's why I say I can tell people are operating on different ones. Please be careful of that. So as we see the pricing behavior here, 1, 2, 3, 4, 5, 6, bam, 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 okay, within this first tier. And this is light, this is very light trading, people becoming involved at a light level. I'm talking, $100, just very light levels. That's the recommended, that's what's in the example, is a very small amount of money in and around this, just to make sure if it does go to the upside, if this does decide that it wants to take off in the positive direction, that what? Well, we're going to be able to experience some of that if we haven't been in the market or we were kind of forced to take profits. Now, individuals who hold is beautiful. It's always important to hold, okay? In terms, I always believe if you're invested in something, it's important to hold, not a bag of it, I don't like that, but to hold part of it in terms of your long-term portfolio. You have to love what you invest in. That's why we continually surround ourselves with Harmony One culture, with the fundamentals. We enjoy it. So of course I hold long term. When I talk about exiting, forced to exit, I do that based upon the current need, or the ongoing need, let's say the ongoing need to achieve a revenue, or not just a revenue, a profit maximization that is forcing me to do things. Okay, so I operate around principles of revenue maximization. That's why our channel is very effective. That's why we do definitely appreciate your subscriptions and notifications, because we bring you information like this price right here. Bam, okay? We give you days notice that this is a key element based upon the calculus, and we let you know the program is telling us this. And that's not just the program, it's the information, it's the market, it's the pricing behavior is telling us this is a key level, right? Beautiful upside, okay? Great trajectory, great leg up there. The question is now on kind of a microcosm. This was around the 50, okay, the 50% retracement. We can't change the numbers. We just heard that. We cannot change these Fibonacci calculations. It's impossible. They are what they are, okay? You can refuse to learn them. You can say they do not apply to you. I'll tell you, they're in everything that you do in the market. It's just a fact, and it's nice to see you guys interested in them. I see you in the Discord, which that is pinned at the top. I do see you guys working on your own Fibonacci charts. That is phenomenal. That is great to see. You're working with the technology. You're learning which tools are and options are which tools and options. I definitely recommend TradingView. You're going to like it. Just take your time with it. It can take you up to a year to really start learning it, guys. And if you're doing, if you're accelerated ahead of that, you're probably an advanced, maybe you're an advanced thinker. That's phenomenal. But as we look at this, just to get back to this zone 1, now the top zone 0 invested. This next zone, we want to kind of plan for the fact that it could really beat the odds. I mean, it could really beat the odds and decide to only come back to this level, and maybe it'll just go on the trajectory up. That's possible, right? It's possible. Is it probable? No. And we informed you of that last night. It's not probable. But as it was hitting off this level of support of this next zone, and as soon as it hits this bright green line right here, we have cash available. Okay, the investment model, the strategy has more cash available. Why? Because the probability of it taking off from this zone is a little bit higher than this original zone. Okay, it's so low at the top level. Okay, we don't invest anything. At the next level, okay, we invest very lightly. At the next level, we double down, but it's such a low amount here. All we want to do is grab that pricing action on the way up if it decides to kind of defy the odds, to beat all the odds, okay? But people were interested because there was enough pricing behavior here, right? There was enough support here that people believed it might take off, okay? So that phenomenon was people asking me, should we go ahead and get in? London, should we get in? I don't know, it's looking good. And I said, no, it's going to, and it didn't go down because I said that. It's just the probabilities are that it's going to fall through. It's a healthy part of the pricing action. And as I bring this up and you say, well, we don't like the way that looks. Well, let's look at the other pricing action. Let's look at this beautiful run up that we had. Now, as we look at this beautiful run up that we had, you know, one of the biggest gains that we had was in and around March 20th. Now on March 20th, let's just look at it, guys. Let's take a quick look. Let's click on the fib retracement. Okay, these are just calculations. All right, as we draw that fib on the trend, guys, we are. I'm going to tell you, we're down through the 6-1 there too. Okay, we didn't stay in the top tier. You know, we didn't stay in that second tier. You know, so as much as you want to say, well, you know, why is everything negative? Why are we even talking about things? We should continue to go up, you know, into the stratosphere without hesitation or pause. That would be great. That would be great. Okay, what's the reality is that even on your best gains here, you have given back. Okay, and the market maker, he's probably going to manage that because what the phenomenon that you experience is once people, if you incur a loss, you want to get out of the market and you never want to go back. All right, a severe loss. If you experience a phenomenal gain, it has an effect. Okay, and you'll start to see that effect in and around this area. Okay, and that is the phenomenal event here, where we formed level 1, step 1. Okay, pretty good support. Level 2, pretty good support. Level 3, very strong support. And these coincide perfectly with the Fibonacci's, with the calculations. So you guys know we're not just making this up. This is just phenomenal structuring to the pricing event. You know, step 1, you know, acceleration, support. Step 2, acceleration, support. Step 3, huge, massive acceleration. Okay, a lot of pricing behavior, a lot of group dynamic in terms of a lot of crowd excitement, and a huge pullback. A normal pullback, right? It looks like just carving down into the heart of Harmony One. A normal pullback, we'll say. How about a normal pullback? You may want to know, well, let's look at the pricing behavior on something like this, because, you know, this is completely different. You know, London, I agree with what you're saying here, but maybe Binance was playing around with things. You know, on and through this area, let's look at one of these, the pricing support. This could have been the recent event could have been more like this. Let's take a look at that. If we look at that, let's even draw out the behavior and the patterning here. Now, did this? Let's look. And this was one of the first legs up. All right, guys, this didn't even hold in the first level. In fact, we held better in the first level on the recent pricing frequency than we did on this event in and around, what was that, March 14th? Okay, we broke through. The top level is inconsequential, okay? I'm gonna say the percentage of times that you break through the top level is extraordinary, okay? After a good leg up, we'll call it a leg up, a spike in the price. We did not even really hold level 1. We did not even really hold level 2, okay? That's while all systems were go. Literally, launch was imminent upon every single level. So you guys see that as we're looking at the current pricing structure and what is going on in terms of the acquisition schedule, that nothing is going wrong. Nothing is out of the ordinary. This is very much what we would expect. The fact that it does not hold, let's say, this first level here, and it decides to go in and down through the next levels, that has already been repeated throughout the phenomenal gains that Harmony One has experienced. So I don't want you to think, well, this is bad. It could have gone up. Yes, it could have gone up. The probabilities are it's going to retrace into this area. This becomes interesting because Harmony One in the past has shown that it can take off from these areas, which will give more of an incentive for people to begin to acquire at these areas. Now, as we get through this golden ratio, this very important zone, the 0.6, it's 0.618 to 0.65. All that means a 0.618 retracement, a 61%, almost a 62% retracement. That's just it. That's all that means. Okay, to the 65th. Okay, percentage of retracement. You'll see we're getting a bounce, okay, on this area. It's kind of a key indicator that pricing activity is going on live. Now we're kind of frustrated between the 4 hour and the 1 hour. If we click over to to the 4-hour, recall again, and I think people are using the different charts. That's okay. That's okay. Maybe that's to be expected, and that's nice. Well, still, we should see a consolidation of the pricing activity into the larger time frames. We can't cheat the week, okay? Whatever the smaller increments are, we cannot cheat the week. In terms of the overall week that we experience, all that pricing behavior will be consolidated into the overall week. So we were on that smaller time frame in and around this first level. We got down through into these other levels, say tier 1, tier 2, tier 3. If you want to tier this up, we did see an expected spike. You just saw this lay down a little bit more. What's happening as this lays down? You see it just pop up here and pop down. That's not me, guys. That's live action. That's live market activity. Okay, as the market maker takes this this scale at 1900, this previous point at 1900, okay, and he is currently negotiating this next position. Is there enough pressure? And this is, you guys can learn a lot on this. Is there enough buying pressure relative to the sellers in the market, or his ability to sell it in the market? Okay, as he markets this out, is there enough buying pressure to substantiate a move up? Okay, how much liquidity is in the market? How is he able to negotiate that liquidity? So that's kind of a live picture right on. And just look at this, guys. See, this is the level above, okay? This is the level, the next level, the natural cascade of pricing behavior. You see that move? Okay, that's a natural behavior. You see that move? That's not me. That is the market at this level, okay? Continuing to go up. It's a natural, kind of exhibition of pricing behavior. So see that is occurring. Understand that this is normal. Now, if it continues to the upside, that may also be normal. There should be an increased interest in and around this level. At some point, the market maker will continue to, I'd say, facilitate the normal pricing, let's say, I won't say mechanism, but the normal trend. The market maker will consider the overall trend. He may consider the retracement phase. He may consider, and really the program, the exchange, everyone, literally everyone, all the participants are considering the fact that we are in a retracement. We are headed back, just as we're headed right now, through this golden pocket, through this key area. And I'll clean this up real quickly. I put these here to send out a tweet to some people. Do you guys have the Twitter? Are you on the Twitter? We have the Kingdom. You guys make sure and follow the Kingdom. I can get you a brief. Let me go ahead and get that for you. We have some really good communication channels in addition to that Discord that you currently have. Okay, we have some good communication channels. And what I'm going to do? Why don't I clean this up so we can see the price action? I have this labeled right now. What I had sent out. Double, okay, the double down zone, okay? Then I have the triple down zone, okay? The double down right here. That's good. Double down, triple down. All this is managing the increased probability that from a specific level down or from the next tier down, this I have maybe a 5x down. 5 times the amount of money that someone could have had at a higher tier as we look at this. Then I have maybe a 10 time. Okay, experimenting with different numbers, doing different calculations. Then I have maybe maybe 20 once you get below that and you get down to a golden pocket on the overall trend. So I'm trying to negotiate. I was doing some calculations in terms of the overall returns, depending upon where you're at or where the market is at or what kind of sentiment you're going through, whether or not you're in the pure bull phase or whether or not you're in a small retracement. Okay, those numbers are going to vary. They're just going to vary, and that's going to depend upon your risk tolerance. They're going to vary, all right? So some people may say this seems too risky right here because it still could fall and go to this ideal level in here, right? And I want to pick it up here. I want the lower price here. That's what's being negotiated right now. That's what you're determining right now. We know that we were able to pull this figure up extremely well and target in and achieve this 30% gain. we also know that you are all currently, okay, deciding whether or not you will, okay, engage in, okay, heavy purchasing in and around these areas. The fact that you are withholding cash and waiting for a better position for Harmony One at potentially a lower level is a great thing, okay? Because that means that you're sharpening your toolkit. You're beginning to make use of all the strategies that are before you and the technology before you. So that's a phenomenal thing that I see occurring in the community, is that it's not this brash kind of rush to a judgment kind of behavior wherein no one is calculating the overall trend and the formation of the the pricing behavior that we're seeing modeled or exhibited. So congratulations on the work you guys are doing. We will clean up this chart just a little bit. We'll talk about some moving averages so that you guys have a better kind of picture here in terms of what is going on. Let me see how we can best clean this up. Now, this looks like what this looks. Let's, if I just remove this, okay, this begins to look very differently. And let's see what we have. That's the pricing. We had brought over these different percentages. Now, these are just the numbers of the Fibonacci, okay? We had brought over different compounding figures for increased levels on the way down to catch this pricing behavior. If it wants to shoot up, it will shoot up if the buyers or the buying activity is sufficient enough. It should be as things go down, assuming you all are willing to risk enough of your investment. If you would rather, you individually, you guys, the market participants, if you would rather see this go on down to the next level and achieve a greater bargain, the extent to which you're prioritizing that on this financial concern, on Harmony One, okay, specifically on this concern within this dynamic, and the degree to which you're willing to maintain your cash position overall in Harmony One, as opposed to, let's say, some other, I don't know. I mean, we did bring you, and please don't tune out right now, because this is the type of information that we do bring you. Okay, we brought you information on XRP. You guys will recall that. Ripple. What is it at? $1.43 right now. It got up to about $1.50 earlier today. We brought it to you at about 80 or so a few days ago, and pointed out the importance of Ripple. And we looked at it in the 2018 context of the market then. Okay. Now, Ripple has not done anything near as important as Harmony One. Don't be confused. It hasn't done anything nearly as important as Harmony One. It just has not. So this is a very good thing that you're being able to appreciate what has gone on with Harmony One as you look at Ripple. Ripple has been up. If it's up 50%, it's up. It's up over 50%. It just in the last few days. That's a phenomenal return. Well, we got 50% in the last few days. You guys got 30% to 50%. Okay, how many times have you gotten 30 to 50%? Quite a few times. But you guys may get impatient. Okay, you may decide I'm gonna hold off on this round, on this little frequency event, this little pricing frequency event. I'm gonna hold off on this. I'm gonna go ahead and plan for this one down here. Get my schedule booked together for about a week from now. And in the meantime, I'm gonna be hanging out in Ripple, and hopefully it continues to skyrocket and it doesn't correct to 89 cents. All right. Hopefully it doesn't correct to 89 cents where it was. Now we brought it to you at 80 cents. It went up to, it's at $1.50. Okay, it's almost doubled. So when I talk about, well, the members of this channel, some people in the last 12 days have doubled their money. Okay, when I say that, people are like, I don't believe it. That's too good to be true. The market's gone sideways and it's gone down. You guys know. I mean, everyone here knows that has listened to the tapes. I brought you Ripple, and we did a decent diagnostic on it. I brought out some charts and I talked about reserve money. I said, this is foundational reserve money in terms of, yes, this is serious reserve money investments, so that was a deal where you guys got the notion on Ripple very clearly. And when it was at 80 cents that I was serious about reserve money, bring out the coffers and crank some in. You guys got that. So I'm happy to have brought you that. You may want to know what's going to go on with it in the future. All I said was at 80, you'll never forget I said reserve money, right? And I mean put your reserve foundational money into this because it has a good history of upward trajectory in the market. 2018 it did very, very well. Now Harmony has done better. Okay, it has done better. That's it. Period. You want to know, will it continue to do better? That internal discussion that you will have, you may wonder, why did you bring up Ripple if, why'd you bring up Ripple if we're supposed to just stick with Harmony One? Well, I don't bring up many, and I don't do diagnostics on many at all. You guys know that. I just don't do the diagnostics. I don't bring out the Fibonacci's. I don't bring out the historical backdating and show how important it is while the major players are being challenged. Okay, challenged by new all-time highs, etc. I don't always do that. When I do that, it's a big deal. And especially when we have a little bit of time to play. I'll just say time to play with some extra cash. So that's all it is. It's just playing a different hand for a moment. So if you guys got in on that, I'm impressed. I wouldn't be surprised because of the way that I presented it. So, and guys, I have been out jogging today. I went out for a heavy jog today. So it was a good day out in the kind of Texas heat. So let's go to the chat real quickly. Let me look at what's going on. You guys understand the pricing behavior you have seen. Let me go ahead and throw our Fibonacci's back on here so we don't lose them. But you do see these levels. And let's go back to here. Let's go back to here. Where's our Fibonacci? Don't make me redraw you. Well, we may just have to redraw this Fibonacci. That's no big deal. We're happy to do that. Looks like we got it back. All right, so you guys understand the pricing activity that's going on. You understand there are different time frames of these charts that you need to be careful of because they can adjust enough your input, okay, or your determinations and calculations. Yes, it's the same calculation, but the mechanism of the program is different. Okay, the mechanism of this pricing action changes from the 1 hour to the 4 hour, from the 30-minute to the 1 week. And you need to understand those differences before you solidify in your exact targets. Now, I normally give you exact targets. You guys know that. I normally give you the exact targets. Hey, Anthony, shout out. We're talking about Harmony One, brother. Good to have you here. What will it hit the all-time high? Let's see what we're doing here. Yeah, everyone thinks Harmony One is about to pump. Well, it looks like it's just gaining a little bit of ordinary traction. It looks like it is good. I'm glad that you guys to interface with you guys. Is Harmony One about to pump? That's the question right now. How much pressure do the buyers have in this market? We're at some critical levels right now where it would not be unheard of given the pricing past for Harmony One to gain an upward trajectory. Okay, we're at 0.61, which is known as the golden pocket. Okay, that's a prime, kind of a prime retracement level, wherein historically, if you had used the 0.618 level, that same level of retracement, the calculations built into the functioning of the market, if you had used that level in the past, historically, you would have performed well. Okay, because it is built into. It's kind of a key ratio built into, okay, the formation of trends. So we're in a bull trend in Harmony One. You know, based upon the standard mechanisms, the historical mechanisms, you would have performed well at the 0.618. It's a key indicator looked to by market specialists. That's it. That's the bottom line. That's the truth. Now, can it be surpassed? It can. The risk of missing out on the overall trajectory goes up as you're looking at your acquisition of Harmony One on a value basis, trying to get the best discount you can. The risk begins to increase the further down you drive the discount. This is kind of a key level here in terms of upping into real money, people who want to play on this level of a trajectory up. The individuals who want to play on the trajectory up of this recent pricing event and say, yes, we believe it's going to continue this bull market. And there's a lot going on in the market right now. There's a lot going on in the overall broader market. We don't have to discuss that necessarily, but it may be associated with Harmony One. So we're at a key level. We're at a key proportional percentage level. The risk of missing out on any future pricing action to the upside increases if you're not involved at this level. The only remaining level underneath may be the heaviest level upon which to get involved. It may be a level that people are willing to put in 2 to 3 times based upon kind of, the approach that I have brought forth. This next level down, what is this? 0.78. Essentially, this 0.78 is repeated, guys, throughout the previous pricing behavior. This retracement before the 30% to the upside. All right, and this is kind of whale money. You want to talk about, well, who's guiding the market? What are people doing? We're participating at a very exact, almost literally down to a science. Okay, as you look at these different levels, we're participating, calculated down to a science. Okay, right in this reacquisition schedule. Now, we don't want to overpay, so we pepper in lightly. We kind of double down there, the next level, the green. The teal, well, we'll double down again, but we're still at a very light amount of capital. Okay, and the strategy goes that at the next level in here, and this money's starting to become available. Okay, that's why you see the price spike. This is a real level of capital. This is a real kind of, we don't want to miss the boat and the train on the way up, right? So this amount it's a larger amount that goes in. There's a much heavier level that goes in around this kind of foundational core. Okay, we're willing to kind of risk it all and say, okay, based upon the probabilities, we believe there will be another pricing event. And it gets down to frequency timing during the duration in which we have seen on a standard basis, and we'll get down to those timing intervals. That is what will kind of guide you here, okay? Based upon the previous intervals, how long should we have to wait? What is the timing within which we should expect Harmony 1 to react? Well, we're currently at, what are we at? 3 days, okay? From the peak to where we currently are. 3 days and 20 hours. Okay, let's write that down. I want people to be able to refer to that 3 days and 20 hours when we look at the previous history. Okay, the previous history on Harmony 1 shows, okay, within about that time, and let's go back to some of these initial ones, shows, now we went from the peak to where we are right now. So let's go, from the trajectory up, from the leg up to the ultimate here. Now, this one was 4 days, 5 hours, okay? So we were at 3 days. We're currently at 3 days and 20 hours. One of the first ones, 4 days, 5 hours. I'm gonna circle that. I'm gonna write this down on a pad for us so we can analyze that. We're going from the leg up to the next price movement. Leg up to the next price movement. Well, this one is only 2 days and 12 hours, okay? So we may be running long on the schedule right now or over on the schedule right now. As we look at this, we'll do leg up, okay, to the next low, leg up to the next low right here, this next low. This is the leg up right here, leg up to the next low. We're looking at, here we go again, 2 days and 8 hours. Okay, so let's write that down, 2 days, huh? And I say again because that's close to where, it's a shorter time interval. It may make people a little bit anxious. As we look from the first leg up, okay, this is the leg up to the next higher low. We're gonna say, all right, 4 days, 16 hours. Okay, 4 days and 16 hours. So as we look at the 4 days and 16 hours, as we look at the few other ones, the 3 days, okay, what do we have? 4 days and 16, 4 days and 5 hours. We have 2 days and some odd hours, 3 days. So 3 days, 2 days. We don't have many that are long and attenuated beyond that. I will tell you that. Even the first interval, let's look at the first interval from the leg up to, okay, you're looking at 2 days, okay? So we are in between 2, maybe 3, sometimes 4 days. Now we experienced this event, this retracement, but inside of that retracement are plenty of pricing events that people took advantage of, okay? As we look at that, we're looking at, that was 2 days before a significant pricing event, okay? About 2 more days, okay? And probably about 3 days there. Let's see, 2 days, then about 3, okay? 2, a significant pricing behavior there. So 2 to 3 days is standard with Harmony 1. The most recent trajectory kind of leg that we took, okay, 3 days, 16 hours. I bring those up. Are they predictive perfectly? No. We can bring up some Fibonacci. If I get into Fibonacci timing, it's just going to get maybe a bit too mathematical. We don't have to necessarily get into that. But right now, where we're at is from the recent, okay, leg up. The most recent leg up. And all I'm doing, guys, is clicking on this ruler. It will give you a time interval that you can look at, an informational interval that you can also measure percentage changes. So it's a very good tool in TradingView. So let's see, this is, what is this at? We're at 4 days. Wow, we're at 4 days. Okay, well, we did have another 4 days. Huh? We had a 4-day, we had a 3-day. The first one that we looked at was 4 days, 5 hours. Huh. Kind of seems like maybe we're due, huh? I don't know about you guys, but it kind of seems like maybe we're due soon, huh? Seems like maybe we're due for some positive pricing activity, huh? Did you guys listen to those days? The previous pricing intervals. Now, history doesn't have to repeat itself, but I have to say that's I mean, we have 4 days, 5 hours was one of the first ones. This is right now right at 4 days. We have a number of hours to meet that. Some of the others were 2 days, 8 hours, 3 days, 20 hours. Another one was 4 days. So a couple that were 4 days, one 3 days, another couple that were 2 days. We're about to hit 4 days now. So yeah, it looks like we're kind of due for a pricing behavior. Now people want to know, is it going to pump? What is it going to do? It seems like on a frequency analysis, just a basic frequency analysis, that we're kind of due here soon. Now, can it stretch on into a longer period of time? Yeah, it certainly can, especially if you guys are exhibiting kind of a more patient hand. If you're showing that you're willing to accumulate in a more patient fashion and allow the market maker to really work and really do his job, and you're slowly working down to the next level, and you're in a calm, cool fashion, you guys have probably cooled off quite a bit from, and I'm just going to say, I'm not going to say this, I'll say it in jest, but from this activity that got us into this 20x problem, huh? This 20 times your money problem, you guys have been out of control, huh? So it seems like you finally have brought yourself under a disciplined approach, huh? But that's funny. But you've done a good job in getting it where it's gone. So I'm not gonna, who am I to tell you guys how to repair it and keep it up? I've been around a few deals in my life, so we can try and kind of bring this boat back to the shore and make sure we're ready to sail it on again. And we did that with the most recent pricing target here. So yeah, it seems like we're within that interval, but you guys are exhibiting an incredible amount of discipline. So it seems like anyone who's looking has to be picking up on that, because you're just nailing your Fibonacci's, you're nailing your investment levels. You're doing a phenomenal job of acquiring on a very disciplined level. I mean, I'm very impressed. You guys are doing a very good job. Overall, the market is exhibiting an incredible amount of discipline, and I mean, a really high level of sophistication, because they see. You guys, the market makers see, anyone who's looking at this sees that the individuals in the market are slowly and surely acquiring a nice little, increased amount of volume here, based upon the fact that we're planning for the contingent of another dog leg up. We call it a dog leg. Another positive price action is what we will specifically say. We call this a leg up, leg down. Okay, just to get into the kind of the colloquial. As you're going up and down, we'll call them steps. We'll call them dog leg up, dog leg down. That's just that is how we refer to them. So these pricing events. So we would expect another dog leg up, and I just, out of jest, I'll say you guys are exhibiting a lot of discipline, though. I mean, this is really, really tailored behavior you guys are doing, and credit to you guys. You're doing an excellent job as you look at, and I love to see, because I know that you're increasing your positions at a lower rate based upon the contingency that things could go north, but not at a heavy level of exposure up top, just a slight level. And as you get in here, it's just another slight level. As you get in here, well, a little bit heavier into this level, and you can just see what you guys are doing, and it's just phenomenal to see. It's a good strategy, okay? Because as it goes down and you risk the possibility of hitting that leg up, of hitting that positive price action, you're involved just a touch more, okay? And now you've hit this, and you are involved now. Right now, you are involved more. The overall community is involved more. So it's nice to be able to witness you guys in some nice professional market behavior wherein you are, you're composed very well. You're very well composed in front of the, you're in a top 100 coin. You're a $1.5 billion market concern. So yeah, you should be running this. You're running your portfolio like you're a part of a $1.5 billion market concern. So congratulations on that. You're doing an excellent job. You're to be commended. Hats off. Good job, good job, good job. Congratulations. Congratulations. Now, let's see. Do you have good life insurance? Well, Eric, we're not talking about life insurance. We're talking about investment insurance. Why? Why? Shout out to Eric for bringing that up. Because at lower levels, the reason we hold back some cash and we don't throw it all in at a higher level, people who throw it all in at a higher level, they blow up their accounts, okay? They lose their money. You won't last in the market. We want you to last for a period of years, okay? We'd like to have you around. We'd like to have you as part of the community, okay? So when you look at insurance, what is insurance? Insurance, investment insurance, I'm going to tell you, unless it's formally written through like AIG or some big shop where they're going to insure your risk of loss. We're talking about insurance through having heavier amounts of capital at lower levels as this retraces naturally. Let's go to the week view because I like this weekly view. It gives us a very, very nice picture. We said we would clean this up, so let's see if we can clean this up. Let me see if I can. Well, this has gotten stodgy. Hold on. This is. Let's go to maybe the week view is not the right view. Let me get. I've zoomed in on the entirety of the screen. That's not what was intended at all. That's how things got off. Let's see. There we go. It didn't like the week view, but there we go. All right. Let me pull it full screen. That'll get us out of that dynamic. So as we look at this, let's look at this weekly view. All right. This is the Harmony One weekly view. Ooh. That looks nice, guys. Look at this pricing action. Look at this. Now, you want to talk about what's the overall trend? Is Harmony One still bullish? What do you guys think? Look how beautiful that is. That is a phenomenally beautiful pricing activity that's on the weekly chart. That's very nice. That's almost not even, you have to say for people who bought in here, we're looking at the scaled in, we're looking at the microscopic, magnifying glass on all these trades. Look at how well they're doing. Congratulations to the Harmony One holders. Look how well you're doing. You're really doing well. This is a beautiful, beautiful chart. This is on the weekly for Harmony One. Look at how beautiful that breakout is. It's a gorgeous chart, guys. You should be very, very proud of your holdings right now. You've done a very good job. For those who are consolidating right now or who are going through an acquisition, a reacquisition, or an initial acquisition in this area, look at what you're buying into. It's very nice. Very nice chart. I would be very excited. I am very proud of my holdings in Harmony One. You should be also. So that is beautiful. Let's look at the 4 hour again. Let's go back into the 4 hour. Look how detailed we get. So detailed. Now the story, it looks like everything's changed, doesn't it? But you saw how beautiful the week is, huh? Look at the weekly chart. Okay. Once we zoom in, huh? We got to get all these rockets lined out. We gotta be able to. There we go. Look again at that weekly chart. Huh? Oh, we can get rid of that. Let's get rid of some of this noise here so that we can see how beautiful you guys look right now. Look at this. Let's look at that. That's phenomenal, guys. That is phenomenal. Look at this chart. That's a weekly chart of Harmony One. That just looks beautiful. That's a strong chart. You're holding up in and around the 20 moving day average. You're just dancing along that. I wonder what the odds would be that even if you pull back a little bit into a golden pocket, etc., if you hit the 50, if you decided to hit the 50, I'm going to tell you that's going to be it should be a very huge slingshot. I'm going to tell you that first of all. I don't know, looking at the weekly, do you guys think that you're actually going to make it all the way down to the 50? The 50 is a green line. This is where you guys are going to have to make your decisions, huh? Do you believe that you're going to make it all the way down to this 50? I don't know. It's a little ways, isn't it? When you look at the weekly, it kind of changes things. Like, I'm not sure about that. It's had a nice trajectory on the way up, hasn't it? 20 times your money. And look, you're just now dancing through this 20. This green is the 50. The red is the 20-day moving average. That's exactly what it sounds like. 20 days moving average. essentially the calculation. The 50 days moving average, all right? Okay, down here we've got the, should be the 100. I think we've got the 100. Let's make sure, I always bring it up. I don't want to misrepresent. They've got the 200 on here. We can change these to be whatever we want. This is the 20, this is the 50, and this is the 200, which is the blue. So as we look at this, you're dancing around this area right here with the, you guys see that on the 20? I mean, look at this chart, guys. People are worried about it crashing. Are you kidding me? Look at this chart. This is the weekly chart for Harmony One. Are you kidding me? Anyone wants to bring that up in my Discord? I'm just going to tell you that's my Discord. You want to bring up the fact that Harmony One is crashing? I'm going to tell you. I have to tell you that no, this is not a crashing scenario. This is not a abort scenario. It's just not. Look at this. This is a beautiful chart. Very strong. So before you come in the Discord and you want to affect the price or the community or anything like that, you just take a look at the weekly chart here. Yeah, and take a look at the fact that if you want to walk into a stupid comment, that's fine. You can do that. We'd prefer that you guys keep a good head on your shoulders in the Discord. The link is up top on the chat. Make sure you subscribe and make sure that you also turn on the notifications. We'll bring you the pricing mechanisms and everything else. And we have about 113 in here right now. If we can get the thumbs up, just let me know that you guys, if you've joined, if you see the Discord right there, let me even know that that's showing up for you in the charts, or in the, not the charts, the, what is this, the live chat? Yeah, the live chat. I guess we could put it in the chart, put it up here on the screen in the chart, or we could just have it in the live chat. Go ahead and let me know in the comments. Just put a Y or something like that, or just hit the thumbs up. I'm looking at the likes and whatnot. 115 in here right now. We have about 45 likes. It'll help this get out to more people in terms of individuals that need to know about Harmony One. Guys, it's done better than GameStop. Okay, it's better. It's a better financial investment than GameStop. 20x your money, 20 times your money. I mean, you almost have. I mean, it's just going to help the community to let more people know about it. So hit that thumbs up, okay, and hit that thumbs up if you do see the. Let's see if you do see that. What is it? That Discord. There we go. A few of you are seeing it. I appreciate that. That's fine. That's fine. Let's see, a few thumbs down. I don't like those thumbs down. People sometimes just come in here to give a thumbs down. That's inevitable. We don't like that. We always try and earn that thumb back up. We try and get that thumb back up. But some of you are just thumbs down kind of people. So there you go. I appreciate all that. Shout out to you guys. Looks like we got some Discord folks in here. I like that. Discord's fun, guys. You may not know what Discord is, but I'll tell you, it's just an environment to chat in and talk about your investments and learn more information and share your charts that you're working on. Share information about Harmony One. I think we should start up we will start up a staking, for people staking. We have one for hot cryptos. We have one for general announcements. We just had a great giveaway in the Discord. So that's really exciting. We had a giveaway in the Discord. Big shout out to Yoski. Yoski is in charge of the Discord. He's doing a phenomenal job. You guys have got to get to know Yoski. When you see Yoski in there, Yoski's the guy in charge. Okay, he's the guy in charge. He maintains all the rules and decorum. We make sure it's good for your friends, your family, your kids, or anything. And now it's not intended for children at all, but we want to have a good, clean environment for everybody. It's just, that's the way that it is. We want to have a good, harmonic kind of, good place for us all to hang out. So, yeah, shout out to all you with these thumbs up and all this other information. The Discord link is expired. Don't tell me that. Don't tell me that at all. Let's see. The Discord link is expired, someone says. Whoa. Well, I appreciate that. Let me get on to this. Hold on one second. Hey, now we got a shout out to somebody who just corrected. I told you I was having technical difficulties when I did that. Let me see. Let me get on into this and pull up invite members. All right, you're getting a fresh invite incoming. I'm glad I did that. Fresh invite on its way. And let's go ahead and tag this up to boom. There we go. And let's see. That's not fair to everybody. You can't even get You can't even get into the Discord. That's not fair at all. I'm sitting here talking about a good environment or something. Now, is this still expired? Well, how is that? Well, Yoski, I think Yoski may need to go ahead. Yoski, if you're around, if you can do a Discord, I can tell you. Let me go ahead and restart my Discord and try and, because it's kind of the backdoor channels that we use, guys, to come up. We discuss pricing, we discuss all types of things in the Discord. Let me make sure I'm sending the accurate current. Let's see what we got. Invite members. Let's. Links expire 1 day by default. That shouldn't be the case. Should? No, I see there's an expiration point here. Expire after no limit, a maximum number of uses, infinity. Create a link. Grant temporary membership. Let me see. Automatically kicked when they disconnect unless a role has been assigned. No. Create a link. Okay, now this one, I'll be impressed if this does not work, because that means they may have a flaw. So I don't want to say I'm impressed if something doesn't work, but that will mean that we found a flaw in what they are doing. So let's try this one more time. Let's see this. And pin. Okay. Now this one has got to work. There we go. We're on. We have a live Discord invitation. You guys can sign in. Crypto Kingdom has invited you to join. So enjoy that Discord. You guys have the live link there now. I apologize about the other link. People may have tried it and it didn't work. Go ahead and plug into that now if you are not already in the Discord. That is a great environment. You'll like the layout, and it's just, it is where we talk all things Harmony One. Now look at this chart, guys. It's just a phenomenal thing to be a part of. It's a good thing that I'm glad we're focused in on now. And as we look at the kind of the opportunities that we had here recently, we've been able to achieve a 30% gain here within the last week. Last 2 weeks, we've had two 30% gain, phenomenons, two events for at least 30%. So that's exciting. I like to see and hear about people making money. At the end of your sentence, let's see what else we have. So big shout out to all the people in the chat right now. You guys are doing a great job. Thank you for confirming on the Harmony Discord that we have, the Crypto Kingdom. What we do here is we make sure to give you accurate information. We give it to you about Harmony One. We also bring you ideas with other investments like XRP. I wouldn't run away and look at XRP right now. It is high right now. We brought it to at 80 cents about 3 days ago. It's increased almost twofold in 2 or 3 days. So that was a nice thing to discuss, kind of foundational, big amounts of money going potentially into that. Hopefully you've done well with that. If anyone's done well on XRP, I'd like to know about it. Just shoot up in the chats if anyone thought that was a good idea that we brought you. Let's see. I'll play with a small amount. Thanks for the great streams. Yeah, absolutely. Shout out to Bullocky. Very nice. Shout out. Thumbs up. Thanks again, brother. Yeah, shout out Jimmy Bond. What's up, brother? You see this acquisition and the strategy in play. Huh? It's nice to see people. It's interesting because we talked about it's just going to be like an orchestra, and in terms of how it's playing out, people are doing really well. I mean, you're really seeing a lot of discipline in the markets. That people are, and if we see this level of discipline, I know that people are really strategizing. They're not reacting, they're planning. And it's one thing in the market to react. When people react, they typically lose money, okay? When you react to the market, it can push you in the wrong direction. So it's very nice to see people that are planning, okay? And we just draw this Fibonacci. It just wants to be drawn. Look at this. Just very nice. Very nicely, we'll just make it perfect, as perfectly as we can. So as we draw these out, it's just to get the calculations. It's just to look at the different levels of support. It's just for us to have this great conversation in terms of looking at this pricing action right in line. Now, kind of slight, but you'll see there's more price action here, okay? There's more pricing action at this next level down, which is what we anticipate. That's what we focus on. Double down, triple down approach. And it is, we just went through, it's getting to the point in time, getting to the point in time where we're kind of along that level, okay? We're kind of the frequency, the duration, we're kind of getting there. Now, I don't know that we'll get there necessarily very, very soon, but we're kind of getting there. It's about 3 days, 20 hours. I start scratching my head a little bit, just a little bit, and start saying, well, not getting anxious, but starting to say, well, it kind of seems like, 3 days, 20 hours, we have several 2 hour, or, 2 days in 2 hours, we do have another that's 3 days, 3 days and less than that. Another one that's 2 hours and what is it? I keep saying 2 hours. It'd be nice every 2 hours we have a pricing event. Wouldn't that be great? 2 days and 2 hours. There's a few slower, kind of a slower time periods in here as we look at the retracement. But within that, we had some positive events. You guys know that. As we look back at the history here, these are what I'm talking about. From the leg up to the next leg up. Now that one's 4 days. Okay, that's 4 days. All right, 4 days. Maybe we could wait 4 whole days. Do we have to? I don't know. What's the next one? What was the next pricing behavior that was exhibited? That was 4 days. This one, okay, from leg to leg. This one, 2 days. 2 days, 12 hours. All right, well, sounds like we're due there, huh? 2 days. This one, let's go to this leg. From this leg to the next leg, just measure this out so we can get some sort of comparative analytic going on. 2 days, another one for 2 days. All right, and we're past that now. If we go leg to probable leg, yeah, we're at 3 days. Wow, so a few of them have been shorter. Okay, a few of those frequencies have been shorter. Right, let's see. If we go leg to leg, yeah, we're looking at 2 days again. Let's see, just reconfirm. We go, this one was a kicker, huh? This was 3 days, 20 hours. Should have been a leg. We won't talk about the should have been a leg. Shoulda, coulda, woulda. We have a good community. We don't have to worry about what might have been. We don't have to worry about that at all. So you guys are having a wonderful Saturday night. I would anticipate you're here with the Crypto Kingdom. We are trying to bring you consistently the most accurate information, okay, so that you can maximize your gains, minimize your risk. We're currently on an accumulation schedule with Harmony One, which is exhibited. Take a look at this weekly chart. It is phenomenal. Look at the gains people have made. As soon as I can zoom in through this noise, but look at the gains that people have made. Look at how nice this chart is, all right? This is a beautiful, beautiful chart. This is the weekly chart for Harmony One. Currently experiencing possibly a really good opportunity for people, okay, to acquire Harmony One at a potential discount. You have to say it's gone up 20 times. Everyone wants to get in on something that's gone up 20 times and could go up 20 times again. Everyone wants to get in something that's valued at 15 cents and might go up to $1 or $2. Most people are very interested in getting in. We're very interested, okay? We're going through the details right now. People say, well, what are you into? What are you talking about? We're talking about acquiring this at the best possible price. And you guys have got to admit, for those of you listening and watching, you have to admit that we have become very detailed, extremely detailed, all right, on our acquisitions. Okay, this is not just something we say, don't worry about it. Let's just throw the money in there and see what happens. No, this is probably the most detailed channel I've seen in terms of an acquisition with a backup plan, if we can even get a better acquisition. Because if you're throwing thousands of dollars around, I just have to tell you, if you're throwing thousands of dollars around, you have to be careful. You have to be careful in terms of what's going to occur to your money. It may go up, sure, but we always plan for that contingency. Like someone brought up, we always have that insurance. Eric, shout out. XRP, you missed out on it. I'm sorry about that. I did bring it to your attention. I did some diagnostic on it because I thought, relative to where it had been already, that it was a great investment. It's almost doubled in the last 3 days. So I'm sorry that you guys. There you go, Rick Lane. I'm glad about that. Good job, Rick. XRP is making some money. Good. Shout out to Rick. He acted on his own advice. No fundamental reason for XRP to be up. Ride the wave, ready to take a profit. Okay, shout out Ray. Shout out to Eric. Eric wants a bargain. He wants a bargain here. So we'll go through some shout outs here in terms of, there you go. Shout out to Candy, Coated Poison, thinking that XRP will bust again. I don't disagree. Long term, it is not maybe the key player in the market. And as we look at the key players in the market, you guys, let's take a brief jaunt and look at where Harmony One is on the overall scale of events. Now this here is coinmarketcap.com. You will see all the, today I think we surpassed, okay, $2 trillion overall for the entire crypto market. So it was a big day overall. As we look at the market capitalization, we will find that our Harmony 1 is currently in and around 1.361. 1.361, okay, 1.361. And what do we have here? Excuse me. Was running in a field this morning, just part of my exercise routine. Harmony 1 at 1.361, coming in at number 80. Okay, I like where Harmony 1 is, guys. I like where it is. Why? Because it's not kind of towards the top of the board. Okay, the top of the board is kind of covered with the big guys. And 200 billion, 71 billion. Those are big numbers. They're talking about whether or not Bitcoin will eventually go and eclipse the gold market cap, which is 100 trillion. It's at 1 trillion. So if we're down at about 80, I still see a lot of growth potential. I see an exponential growth potential compared to those top dogs up there. And just top dogs, their technology, their overall promise in terms of returns may not make them a top dog. Harmony may be one of the best dogs in the hunt. But I like this area in here. I like where they're operating and how they've been gaining. All right. So I like the fact if Bitcoin were to go up essentially 100 times in terms of its market capitalization, that we could expect maybe Harmony 1 to go up even more. Okay, these other smaller cap, I'd say smaller cap investments may get an exponential kind of increase. Excuse me. They may get an exponential increase as people make money in the larger market caps. This is a possibility that the funds will continue to be diverted from the larger cap investments down into the other interests like Harmony 1. Very clearly stated, it shows more promise, in my opinion, than a big, large cap crypto coin. So that's just the truth. Let's see. You guys may have questions about what's going on, what we're specifically doing. We're watching the price action right now, okay? The acquisition, okay? The buyers in the market, as they say, yes, we want to be a part of Harmony 1. We want to get back in and plan for this upside. We believe on this frequency duration, how long this trajectory is taking, we are getting into that range. And I'll say we seem to be maintaining a decent price. Okay, it seems like we're maintaining. This should be exciting news. I'd like to see your opinions on this. It seems like we're maintaining a relatively good trajectory. It seems kind of, I'm not going to mutter the word bullish. I'm not going to quite say that yet, but it seems like we're definitely structuring something here, which could kind of be something, maybe an indicator or signal that, yeah, we may be due for a leg up here. I don't know that you guys agree with that. What are you seeing in the charts? When you see this chart, what do you see? Because I'm seeing, based upon the frequency analysis we just did, the typical standard duration, okay, in between the legs, the positive price movements, I'm seeing that we're about there right now. Now, we may have some flux one way or the other, but I like the fact that we have maintained price. I like that we've maintained price. That's a beautiful job, guys. Very well done. Very well done. So I can pounce. Please drop a little lower so I can pounce, says Eric. Shout out. Yeah, exactly. Because now you're starting to see it looks a little bit bullish. People are doing a good job at acquiring at the higher levels. Okay, and just peppering you. Not a lot of money spent. But see, this is fun. This is price action. I mean, you want to talk about having fun in a market. This is, questioning based upon the frequency analysis, the duration that we're expected to wait based upon, which we qualify that by looking at the previous durations, okay, of price movements, knowing we had some price movements in and around here, okay? And during this normal retracement, this is something that's starting to look like, well, we are really maintaining. Now, I'm not going to say that it is, and I don't want to I hesitate to use that word bullish, but the overall trend is certainly bullish. You guys looking at the weekly chart, it's certainly bullish. Certainly bullish. If we can go to the weekly chart here, you guys, I don't think anyone is going to debate the fact. Let's get into this chart on the weekly. Look at this. This is beautifully bullish. That is beautiful. That's a 20-time return on your money. Yeah, that's phenomenal, guys. That's about the best you're gonna find in the business right now. You guys realize that? This is about the best you're gonna find in the business, huh? So phenomenally well done. Phenomenally well done. And that's what people are trying to get in on, and they're saying they want a better deal. They want a bigger bargain. They want to make their returns, huh? So they're probably trading. Just sold your vet for a 50% profit. Hey, glad to hear that, Eric. Glad to hear that. Let's see what we have. London, I hear you. Very good, James. Jimmy Bond. Almost called you James Bond. I'm surprised we don't have a James Bond in the crypto kingdom, huh? One of you guys want to turn into James Bond? That'd be fine. That'd be fun. Let's see what we have here. Talking about XRP, talking about different stuff, talking about Harmony One, the chart. I'm just looking at the different comments here in the comments section. Appreciate all you guys. Lugi, huh? Nice to have you here. Shout out. Bobo Django, nice to have you here. Luigi D-Zone, nice to have you, sir. Of course, Eric Benjamin, shout out to you. Rick Lane, shout out to you. All you guys, shout out. Falil, hey, good to see you, Falil. What's up? Good to see you. Good to see you, Falil. Let's see what we have. Oh gosh, someone put up just a really bad. I'm going to report one of these comments. You guys let me know if we need to. Someone is harassing our butt. It was just a hate speech. Well, one of these guys put something stupid in the comment section. Well, I took care of that. We may need to get a new moderator. For all I know, that was the old moderator. He's a little disgruntled. I don't know. Anyway, I won't say that for the record, but you never know. I'm not sure where the moderator is. He may not be here. So, Toguro, can we please do XRP again? You want to look at XRP again? Hey, from Australia, down Aussie, huh? What's up, Aussie Kiwis in the house, huh? Get wrecked most times on stop losses. It's true, huh? Can't happen. Stop losses they defy the convention, huh? When people put in a stop loss, if you got in at a lower price, there should be, unless you're just directionally trading. But you know, you should have more of a demand at a lower price than you do at a higher price if you're in it for the long run. Unless you're just purely directionally trading, just taking the risk on a directional trade and trying to go with the trend. But the odds that I guess the trend reverses. I think if it's a real trend, it's kind of odd. I wouldn't anticipate that. Let's look at this volume. As we look at the volume, let's look at some volume indicators. Then we'll go into maybe some other coins here as we trail out of this. Currently, again, people trying to acquire at good prices on Harmony One on something that's looking very nice. Is looking very nice. This frequency interval here is looking very nice right now. A lot of support coming in. I mean, nice trajectory, guys. Very nice trajectory. I'm impressed. So a lot of discipline being shown by the market participants. I think that's probably being recognized by some individuals like the management, etc., that might look at the price. They might be impressed. Let's see what we have. Let's see what we have. Now these intervals, this is the duration it takes to get to a new leg. Okay? Duration it takes, get to a new leg. Duration it takes, new leg. With retracements, huh? With retracements, huh? Here, retracement. We were going to have a leg here. Someone decided not to have a leg party. That's all right. That's all right. We still love Harmony One. We just had a new leg here. Yes, we did. Now we're trying to have a new leg here. Now, wouldn't that be nice? We're trying to have a new leg here. Yeah. We've held very well. We're trying to have a new leg up. If we decided to go down, we're going to hit this key level in here. I'm going to say this key level. All right? in and around this 0.618 or the 0.65, which is the golden pocket. That is a Fibonacci. You can't run away from that mathematic. That's a strong level, traditionally, very strong level. We don't have to hit that at all. We can take off right from here. If the buyer interest is enough, people decide, I don't want to risk it. I don't want to hold off. I have to hit my 30%. I want to get in on this. I'm going to go ahead and pull the trigger. I don't want to wait. It looks like a good value to me already. I like the story. Harmony One has already gotten a 20x on the money. I'm going to go ahead and I'm going to sink my cash into it. Some people will decide like that. We're on a very disciplined approach personally, and we're trying to create at least an educational forum where people can understand the nature of long-term investing and strategy, to where you can survive in this industry and not just flip around real quickly. And I'm tired of this exchange. I want to get out of this. It's underperforming. I have to get into a different, financial concern, a different investment instrument. When people swing around different times, different exchanges, I'm, frustrated with one going to another without doing their homework. Guys, that's when it'll cost you money. I'm glad that you're here because we do a lot of homework. You guys know that. We do a lot of homework. And I don't think anyone ever really went broke being patient with their investments. Being really patient, making sure they're making good decisions. I just don't think that has occurred. I haven't heard of that occurring. Someone did too much research. Someone was too patient, sat on the sidelines and just said, you know what? Until I have a really, really good understanding of this, I'm not going to go ahead and go into it. So no, that's the kind of thing that we like to hear. That's what we like to hear. See, Drive You, I just bought 100K on Harmony and hold until end of this year. All right. What's your pricing target? What's your pricing target? Dot Ordano. Let's see. Jumping around, had it 12. Lyle, shout out to you. Nice to have you here. Hayden, nice to have you here. Have you guys hit the Discord? Have you hit the Discord? Go ahead. That link is functional. Make sure we get you in the Discord because you will like the environment. It's a bunch of good people. It's just like the chat here. You're able to communicate, and it's a nice environment. So you will appreciate that. Darshan Baba. Hey, Darshan Baba. What's up? Welcome. GIC staffed events and automotive marketing. Okay. Nice to have you here. We have some people. Joseph. Nice to have you here as well. I do respect London's videos, and he has a good TA, but man, let's be real now. Put that aside and read the writing on the wall. I'm not sure what that means, Joseph. Let's see, Joseph. Low market cap, high dollar coin, not token equals win. I don't know what that means. I'm not sure what Joseph is getting at. Sounds like he's a resistor. It sounds like maybe he's frustrating the process here in the chat. That's okay. Fanboys, you all better sell on the next pump, and that's going to be weeks away. No. Yeah, Joseph, I'm gonna go ahead and get you out. Joseph's thrown out. So Joseph, you're going to get banned because we're going to put user in timeout. We're going to put you in timeout, Joseph, because you're spreading things that just aren't true. So we put Joseph in timeout. Okay, because we disagree with that. That's bad financial advice. Okay, it's going one direction or the other, and that's not. We're gonna give him 30 seconds or 300 seconds. And he comes back and says some more information that's misleading. Then we'll say that we deal on statistics, we deal on probabilities and averages, and we don't need. Haters in the community. I'm not sure why Joseph is here if he's just doing that, but see, guys, that's what you see. 3 down thumbs right there. 3 people that don't like this. There's people in here that don't appreciate what's going on at all. So if you could give me a thumbs up and just say that you're here for the right reason, because we have 105 people in here. I'd like to know that you guys are here for the right reason. And if there's people here that are just here for the wrong reason, trying to affect the stock or the price negatively for whatever circumstances, then we don't need to necessarily do all of this right now. So it's a lot of work to do this and bring you the detailed information, the charts, and the analytics, everything else. So you guys hit a thumb up there. We have 105 people watching. We've had probably 200 to 300, maybe 350 cycle through. So let's go ahead and see if we can get, that's good. That's good. I appreciate you guys hitting that. It just if you're in and part of the discussion and you're not supposed to be part of the discussion and you're just here to disrupt things, if you come to the Discord, you're going to get reported here. You're going to get reported in Discord. And at some point, if you're purposely interfering, they're going to look. At some point, they're going to look at you as a market interferer, trying to interfere with the market. So you can just go on home now before they try and look at your DNS. Okay, your address. Right? Yes, your address, your DNS address, and where you are from, and what you are doing, and why you are here interrupting. You understand, right? Thanks for the thumbs up, guys. I appreciate that. Just to make sure that you are here for a good reason. We don't need people that are trying to disrupt or causing any kind of problems. So let's see. I like those. Hey, that's good. You guys, shout out to GAC. Lan Yu, hey, shout out. Good to see you. Welcome back, Lan Yu. Shout out Yoski, Luigi, Dyson, Rodriguez. Nice to see you, Luigi. Javier Masters, Andre Timex, Luigi Dizon, and GRGA Zrilik, and Jimmy Bond. Yeah, shout out to all you guys. You guys are doing a great job. And some people may just be listening, maybe relaxing, kind of like a radio affair where they just enjoy listening to things going the way that they are. Let's see, Ivan, his brother bought in. That's nice. You guys feel free to report people who are spreading anything negative. Eric, what is that? I like Eric. He says, when you are negative, it's going to be a long, miserable life. Stay positive. Absolutely. You guys know that. That's the truth. So that's just the truth. Let's see what else we have. Rick Lane, shout out to you. You guys are doing a good job, and here to learn how to invest a little smarter. We appreciate you. Thanks, JC. I appreciate that. Yeah, and you see how detailed we get with things. We go through the acquisition schedule. We go through on a more, in terms of this, some of it seems like it's unmanageable, but there are platforms that will allow you to put in different, just call it a limit, a market limit order. I'm only going to pay this amount of money for this many of them at this price. That's the limit of what I'm going to pay. So they'll allow you to put in different limits at different tiered, at different prices, different amounts of money, etc. Some of you may have a click button kind of system where you're not able to take advantage of that, but a lot of you may have a different system where you are able to take advantage of a market acquisition strategy. So that's really phenomenal. Let's watch the pricing activity. I'm going to turn this on for a second. And I'm going to go get a drink real quickly, and we'll put this on. I'll put just a little bit of music on, and we'll make sure that you guys have any questions. We'll go ahead and answer them, and I will get we'll go on a 30-minute time interval here, and just put on a little bit of music. Let's see. Put this. I think 4 will be okay. Let's see if we can just put a touch of music on, and I'll be right back. Let me go get a drink, and we'll be right back with you. Just 1 second. That was quick. Okay, we're back. Let's see. Crypto Kingdom, we're back. And let's see what we're doing. We have got about 97 people here. That's not bad. Hey, it's a Saturday night. It's nice to have you guys here instead of out having any problems in life or anything going wrong. So congratulations, you guys are doing well in life. That's nice to hear. I know you're doing well because you were right here. So you're welcome, Luigi. Well, let's see. Loving the background music. Thanks. Great info. That's nice. AYC. Playlist, please. Jeff Marquez, you want the playlist, huh? Yeah, okay, the playlist, this is called Cloud Stepper. Okay? Cloud Stepper. I'll turn that down. Cloud Stepper. And it's by Good. Nigel Good. Nigelgood. It's made for YouTube. You have to make sure you don't, or you buy the rights to the music. You have to buy the rights to the music that streams out on anything in YouTube. They're very particular. They'll shut you down. So, I appreciate that, Jimmy. What do we have? Only just saying go Harmony 1. Okay, that's good, Darshan. You're funny. Let's see. XRP will. I don't think XRP will necessarily crash. That's another thing that's probably. You guys want to direct funds with what you're saying. You don't need to. Let the math do the work. Let your charts do the talking. Okay. You don't need to do much. Just let the charts do the talking, and they have been doing that here. Now, we're going to see, I anticipate we're going to run into a pricing event, and you guys who have stayed late, I'd say this is the benefit of being here right now, and some people may listen to this tomorrow, we may refer back to this, okay, and say, well, if you had been a part of the chat, so you guys may be here for the right time. I would anticipate that we're going to run into a pricing event, okay? So that pricing event looks like it's going to occur within at least, I'd say, let's go ahead and draw this out. You know, now the maximum that we've gone, aside from anything else, I'm going to just pull this to the maximum that we've gone in and around. Now, whenever we target this, normally it goes a little bit longer, okay? But normally it goes a little bit longer. But normally, some sort of a pricing event within the next, okay, up until about, that's the 11th, at, I'm just pointing at the, this 4-day figure, 4 day and 5 hours, and around this 4 day and somewhat hours in here. I'm more calculated. I can get to the higher level of specificity. I can go ahead and do that. But I'd rather leave some wiggle room in here for things to kind of develop because you're showing so much patience in terms of your acquisition. But I would say in terms of running out of time, I want you to realize that it's possible that we're kind of running at least low on time based upon the average frequency interval, the average amount of time it takes for a pricing event to occur. Okay? Now, you could have already been back down in this level. We could have already been down in here and anticipating some sort of a spike. All right? We're not there. You guys have shown a lot of patience, a lot of accumulation strategy. So that's positive. Okay? It hasn't retraced all the way down to, say, the 78 percentile to 13.5 cents. It has not done that. It is currently at 14.39 or so. Okay? So you have to say the higher that the support levels show during the frequency duration, we are looking a little bit, it seems like we're looking a little bit, stronger, a little bit stronger than we could have otherwise been looking. I think it's because of the discipline that you've put together with this strategy. So now the good thing is if the price moves down, you're covered, okay? You're lightly involved and you have insurance at the next level. All right, you have insurance at the next level. Let's go ahead and redraw the Fibonacci on the larger time frame. And you guys see how, yes, as you go down, you're gonna have insurance. Now this is beautiful. This just flows right together, doesn't it? You look at this Fibonacci. Okay, let's look. Yes. You see these wonderful levels of support here. After, spike in price, retracement. Spike in price, look at this beautiful support. Leg up, beautiful support. Spike in price, etc. So it looks like this is trying to achieve something almost as phenomenal as something along these first mechanisms, almost that bullish. Okay, now these would be certainly bullish if we were looking at a circumstance where this continued to hold at this level, and we probably could have solidified in at that level at a heavier amount of cash. Personally, you guys know we could have solidified in at that level to kind of replicate what was done earlier on here. We could have done that. We have allowed the process to take place, and we have looked for more of a bargain. Why? Because we're still kind of in a retracement zone. I'll say in the zone of retracement, having just recently had to struggle to get out of this channel. If you guys will recall this downward channel, and let's go through history real briefly. This is good that we're going through this, that you've been here. We appreciate that, and your time spent. You don't have to be here, and so we do appreciate the fact that you are here. Let me take away this arrow. As we look at the channel, let's just roughly draw this channel. The good news is that we have broken out of this channel. As you guys will recall, we got the confirmation on that breakout. I traded the breakout at a very light level just to go live and say, let's go ahead and do this. Some people made an additional 10, maybe 15% on that. Good job on those who did. In addition, that was in addition, maybe a 10% in addition to the 30 to 50% you had already made. So we had some fun that night just to trade it, just to get into it. Now this is this channel, as I recall, went right up to here. We have broken out of this channel. And this is important because as we have broken out of this channel, okay, this channel was kind of, that was not a thorn in the side, but it was something, it was a necessary corrective activity, etc., etc. It was something we experienced due to whatever phenomenon was going on with the price, a normal phenomenon with the price. As we look at the week, again, the weekly chart, I want you to realize how phenomenally good, and let's get into this, how phenomenally good this chart continues to look. Now, you think we're going through a huge correction, a huge problem. No, guys, this is a phenomenal chart. Absolutely phenomenal. Look at the Harmony 1 chart. And I'm not pushing anything to buy. Okay, you make your own decision. I'm telling you, this looks like a phenomenally appreciating asset. You want to tell me around here, yes, I would like to get in. Can I still get in? Is it still going to go up? Look at this. Look at the bullish nature of this asset. This is beautiful. Beautiful chart. Okay, we're in a possible zone to acquire this, to acquire additional instruments of Harmony 1 or additional volume at a discount. Yeah, count me in. Now that's what we're doing on a very detailed level. We're going through and we are acquiring at increasing levels as the price does go down. We're planning for that next trajectory up. While we're discussing that, I am getting into the details as to exactly the fact that we have broken out of this downward trading retracement channel. So that obstacle, okay, that obstacle has been met. I'll just say it's been met. We have conquered that obstacle, correct? Yes. So that is that's positive. That's very good for everyone. I wanted to see exactly what's occurring right now. So as you look at what's occurring, this is what I wanted to see happen, is we have created a trajectory somehow that has pushed us off away from this channel. And I thought the biggest risk here, and I think you guys will agree, I'd like your opinions, but I believe the biggest risk here was falling back down into this channel. So we have avoided this pitfall of just a repeat. We have the possibility of essentially regaining our momentum to the upside. So that is very positive, and it's nice that we're not on necessarily in prime time, because I don't want to push that idea necessarily, but I want to discuss that with you, that yes, we may have that ability to push this to the upside, and that we have broken out of that channel. So that is that's a fantastic element of the pricing action that has gone on. Now, we wouldn't want to continue this channel, but I'll tell you one thing: we were not acquiring. People were not acquiring this at a discount, okay, during this channel. All right, that was not the purpose of this. A lot of this was a pricing control at different levels of interest. This is more of an accumulation strategy, okay? This is more of an accumulation strategy, okay, wherein we're looking for an upside. This was, we're looking for a downside target that we can all agree on based upon the calculations, and we did. Here, we had a kind of one. Here it was a multiple of that. It was beautiful. We still have that ongoing currently in the price. We have different levels, and well, when we reach here, it's going to be a multiple of this, possibly at a smaller level. As this stretches out though, and we realize that we're outside of the channel, I would say we're almost clear of the channel. We've had enough sideways kind of consolidation and support and around level 1. If we continue to get support, I mean, it's just almost like we are very clear of this channel. So that's something I want to bring up. It could become bullish very quickly. Okay, it could indicate a reversal of the retracement very quickly. Okay, now that's not to say that that the risk of the downside is over and you should abandon your market principles of this insurance at the lower levels. That's essentially you not running out of money on the lower levels, having capital to reinforce your position. When you have capital to reinforce your position, you're not going to, I mean, you're very likely to make money. Okay, you have insurance. Okay, if things go down, you can double down. That's not a problem. And you play that upside with a larger amount of capital, you'll be, and that's a big boy kind of approach. That's a big, heavy investment, I'd say investment institutional, heavy kind of, leveraged kind of an approach. People want to leverage in their position. Well, if this goes down, I'm going to leverage in my position. We'll leverage in and we'll regain any losses, right? So that's kind of a big boy. When I say it's a kind of a big guy mentality, yeah, we're just going to go ahead and recapitalize in at a larger level, and we're going to regain any losses. That's nice. Okay, that's very nice to be able to do that, and to have the discipline to do that shows kind of a level of maturity in the market. There's nothing wrong with having that level of maturity. So a lot of red on the board in general as we look at the overall price action of the market right now. The market's going through some challenges. Bitcoin's trying to break out through 60,000. Can it do it? Because that's been a thorn in the side. It hates 60,000. You guys know that. We've been talking about that for a long time, huh? Yeah. Hates that 60,000. So we'll see what that does. If it pushes back, we may see more cash going into Harmony 1. You guys may wake up literally with a frustrated Bitcoin who can't break through 60 either tomorrow or the next day, and you may see Harmony 1 go up by 50%, literally on the dime. Just immediate. That can happen. That's what happened last time. If you guys will recall last time when Bitcoin started to go down, it was frustrated. It started to go down. Money flowed directly into Harmony 1. Harmony 1, that's when it started to skyrocket. 20x, right? So that's relevant, okay? It's not we're talking about something else. That's what brought the cash into Harmony 1. Okay? So that's pertinent. That's history in terms of your earnings and your profitability, your overall strategy. You need to kind of understand those dynamics. So let's get out of the chat exactly any questions you guys have. And let me see, I have an alert from crypto. That's fine. Fetch, yeah, we've been looking at Fetch. It looks like it's getting a better price. I haven't looked at the pricing action a lot. With XRP, I went into detail. There's a video on XRP, so you guys can watch that if you want more information on XRP. Hey, Kent, that's fine. You'll come back when it's ready to moon. As long as you'll know that, just go ahead and email everybody on this list so that they'll know exactly when that's going to happen. We'd appreciate you doing that for everybody. Let's see. You have been more bullish. So good. And you, let's see. Okay, you guys are just chatting. You guys make sure that you have the Discord there. That's fine. There you go. Hey, Yoski's in the house. I like that. Yoski's in the house. That's great to see Yoski. Yoski is the key player on the Discord. I almost want to show you guys the giveaway that he did. It's really cool. Let me see if I can pull that up. Let me see if that will actually happen. It may work. It may. Like all these politics always come up here. Look at what Yoski set up for Crypto Kingdom. And I have to say, Yoski has been just phenomenal. Very supportive. He has boosted. Okay, he decided to boost the server for Discord, and then he decided to give away the boost. So he financially supported, what I understand, he financially supported, and someone put in these vice grips over this article you may have been reading, not sure what that is. Token rallies 700% in March. That's about a 700% gain in March on Harmony One. Great to see. Let's look at the giveaways that Yoski had set up. Okay, Yoski had set this up, and look at what Yoski did. This is just cool. I wanted to see it. I wanted to see if this will play. It's a giveaway for. Let's see. This was a giveaway. Let's see. Look at this. Isn't this cool? People were able to enter into the giveaway. He set up a spinning wheel, and it looks like La is the name of the person who won. And I just thought that was really cool. So that is a shout out to Yoski, who has been phenomenal in terms of supporting the channel and the Discord. There's a lot of members of the Discord, and it's just a place to catch up on market action in general. And yeah, it's just it's an exciting place to be. So I want to make sure you guys have the opportunity to join that in addition to the channel, and that you understand that there are prizes, different things. And let's see. And hey, I see American Diesel is back. Hey, Diesel. But yeah, Yoski has just pulled up and has been a great supporter of the channel. And I do appreciate the other night that I think American Diesel had offered to support as well. That's very friendly of you. And if you would like to donate or support or tip or do anything like that, you're welcome to do that. I can get you that information. You can contact me. I'll never contact you on the chats on any of the videos and solicit you via WhatsApp. If that occurs, you guys know that's not me. So if you ever see anything in the comments saying, go ahead and contact WhatsApp, no, that's not me. But big shout out to Yoski. He's the primary supporter, and that spin the wheel competition we just saw was someone winning something that Yoski had set up. So not only did Yoski support the server, the Discord server, he also arranged a giveaway. So yeah, big. I mean, that's huge. That's just out of the kindness of his heart. He didn't have to do that. An incredible guy, and we really appreciate that being around in the community, because that kind of an attitude is what Harmony One should be about, is being able to give to the community, and that's exactly what he just arranged and what he was able to facilitate. So that's awesome. That's awesome. And if you would like to facilitate to the members of the community or to the channel here, you're welcome to do that if you've done well. Let's see. Hit us up on Discord for more giveaways. Says Yoski, yeah, for sure, for absolute sure that will occur. Let's see what we got going through this and that. Sell out. I'm trying to read through your comments to see if there's anything. Market between 35%, but after we expect to see a stabilization followed by triple hedging, and my wife's kicking you. Yeah, you guys keep it professional. Let's see. Arthur. Hi, Arthur. How are you? Good to see you in the chat. Shout out to you, Arthur. Let's see. Looks like some people have some different coins. That's okay. That's okay to be diversified a little bit. Make sure that you are diversified. You are diversified. Let's see. That doesn't mean buying something with the same risk profile. It means buying something with a different risk and a different profit. Let's say a different profit and different loss kind of correlation there. You want to make sure you're diversifying your risk. You're not buying the same type of asset with correlation between the drop the Coinbase wallet. I can do that. If you want the Coinbase, I think I gave that. Let's see what we have. I'd like to see if any of you, we asked a little bit earlier, which ones of you did get in on the XRP. I think some of you got in on that. I mentioned some heavy cash going to that, foundational money, etc. And that's nice. I think that you guys did well on that. Anyone who watched that video, we did chart out a bit. We went through the history of it, etc. Went into a little bit more detail. I may mention a few here and there, but I may not get into the details. When I get into the heavy details and the historicals, etc., how they interface with hedging and different things like that, I think you guys know we're a little bit more serious. So that was one that you've made. It was 80, you're up 60, you're almost up 100%. You're almost up 100%. Let's see. This is wallet Coinbase for Kingdom. And that's wallet Coinbase for Kingdom. Let's do that. And I'll just put support. We'll put support. Let you guys support. I used to not let anyone support me in anything. I was always like that. We had a big nonprofit in California and worldwide. We wouldn't let anyone support at all. And so I realized later on in life that I was kind of robbing people of the opportunity to support. And let me put now this is redo this, and then I'll maybe post it for a minute. Wallet support for Kingdom. I'll do that, and it's a BTC address, so you know that's a BTC, whatever a BTC you guys feel you'd like to. If you'd like to support, and the good thing is you don't have to. I'll put this up on top for a moment so you guys can see replace pin message. I'll put the Discord back so that you have that wallet support for Kingdom BTC. That's so you know it's official. We'll never solicit you by WhatsApp and have kind of strange discussions or point you to someone you don't know. That's my address, and we're happy to bring you the information like entry prices, etc. I have a feeling I have to go through this. That some of you are more technical than others, and some of you may be frustrated by the technicals. Some of you may kind of feel like you're in over your head. The news is good on that front, that you have a long time to learn this stuff. You don't have to rush into any decisions. You don't have to, you don't have to. The more that you rush your investment career and your development, probably typically the bigger the problems that you'll have. It's because you don't have the skill sets yet to be profitable, and that may put you in a rush situation where you feel kind of a panic. That's probably the worst thing that you can do, is feel that panic and feel like you have to make a decision now on anything, on Harmony One or any other investment instrument. So the more time that you can take, that is going to probably, it's a sign of maturity in the market. So the fact that this is unfolding kind of slowly here and nicely, I think is positive. Again, we're getting into that duration where I would anticipate a pricing move. And that move will come around at some point whenever it decides to come around. The market maker can always have other plans. I'll just say that. The market maker may always have other plans, okay? So that's up to him. Now, if he wants to push the price, I'll tell you, if the exchange has a lot to execute on the downside here, they're going to execute it. That's it. If the market maker has plans to get down into some lower level, he's going to get there. I'm going to play with my holdings and the acquisition amounts that I'm acquiring. Literally, I'm going to play this upside. If it decides to disappoint, that's okay. I have double down here. I have a double down from this, or a triple down from this level, to where I'm fine. If it decides to go down into this next level, I'm fine. If it wants to surpass 13 and go down to the next level, I'll double down. And I believe at that point we will have hit the critical level to where we will begin the trajectory up. We may be able to do it right here because this was a phenomenal 50% to the upside. That was a big move, guys. 50% to the upside was huge. We called that level. So to say, well, we're going to disregard that, I wouldn't say that that's worth disregarding. I say that's a phenomenal enough event. If we can repeat that, we're going to be just right up along the bull path there. So you guys, pay attention to that logic. It's clear logic. So let's see what we have. Let's see. What's the Twitter? There we go. You guys want the Twitter? I will give you the Twitter. That's a good next thing to go over. And we'll throw that up there in a minute. Diesel, I put up that address for you. It looks like we're getting some good Twitter people right now. And I will go over. Let's see. Let's go to the Twitter. Let's see what we got. And we got, shoot. Let's get that. Give me 2 seconds and I will post that up. Let me see, messaging. That's what we got. I'll try and put this in the description so that anytime you watch this, you'll have this stuff in the description. I'll plan that stuff out. It's more technical information, so I can do that, but it's additional kind of headache built into things. Here we go. Here you go. Found the Twitter. There you go. You guys can have that now. So yeah, the Twitter is a nice it's a nice environment for us, nice space. So yeah, I think you'll like that. Let's see. Take 9 days. Wow. 9 days? What? That's interesting. Something takes a tip. It takes 9 days. Interesting. I didn't know that. I like the Hummer that you've got there, American Diesel. Very nice. Very cool. I like that a lot. Very impressive. So I'm not sure what that is. 9 days to deal with something. Sometimes moving crypto takes a while. If you operate in between exchanges, you will have the opportunity to kind of experience the movement of the coins, etc. And if you have just bought into one coin, you may never experience that. You may be completely happy with Harmony One. I'm interested. We'll probably form a staking, probably a staking, something dealing with staking on the Yoski can probably set that up. Let's ask Yoski to set that up. Chat rooms. I'm going to put a chat room in for staking. Okay. Staking. I want to put staking Harmony. All right, there we go. Create channel. Staking for Harmony. There you go. You guys have a staking place to discuss staking. All right. I'm going to open up another one called Bridge Technology. Okay. Bridge Harmony Technology. Okay. So there is that. So you can discuss that there in the staking. You can also discuss the bridge news if they want to do a bridge with BTC. I think with Bitcoin, I think that's phenomenal. So that could go well. I've heard some chatter about that. So not sure what you guys have heard, but the possible bridge with Bitcoin. Let's see. Oh. Interesting. Okay, Diesel. Interesting. Didn't know that. That about Binance. Binance is real interesting. I hope, American Diesel, you've been around. I hope that you're getting a good price right now on this dip, and that all of you are not over heavily leveraged into the pricing action. That's the goal of this entire front here, is to be able to pull the trigger if we need to pull the trigger. And I'm gonna say this, guys, to pull the trigger, you know, I had written here earlier on 5 times, you know, whatever this amount is, if this is 100 and 200, say 300 going into here, and it may be 1,000 and 3,000. But down into this level, okay, if it's 1,000 there, you know, this is potentially in and around 11, okay, 11,000, or 11, what is that, 11 to 18,000? Yeah, down here. Okay, these are bigger figures. All right, this was a $300 to $500 million market move in and around this area with this specified price target. That was a $300 to $500 million market move on a $1.5 billion concern. All right, so not everyone is playing with $100 or $200. This is a lot of cash that's flowing in and out of this market. All right, it's a $1.5 billion market concern. So when I talk about, you know, 18,000 going in or 1.8 million going in, etc., at this level, once this key, this would be the golden pocket. Once that's reached, that's a heavier, you know, downloaded kind of area. That's a much heavier area. So And it will work out. You'll see the mathematics work out to where it won't be me, it won't be us per se doing those calculations, but to let you know kind of the processes and the bulk flow of capital into the markets at those different levels. That's essentially what you guys may experience. Wow, you have Coinbase as well. Weird. I did not know that. There's a I want to say Yoski, message me on. I'm going to do this real quickly. Yoski, I want to make sure you message me on Discord and confirm that this is you. Okay, Yoski, message me on Discord now, because I want to make sure that this is you and verify that this is you, because I see you interacting with other people. So, and let me make sure. I can just flip over and make sure that that is you as well, because I didn't recall you having. Yeah, I didn't recall you having. Yeah, it is 5269. Yep, that's him. That's Yoski. That's Yoski. All donations to channel go through Coinbase. We'll say go through Coinbase. Okay. We'll just do that for now, just to let you guys know, and we'll get you some additional pricing targets. We'll get you some good information. Let's see. Don't you guys think it's great that the calculations, the scientific calculations, give you the market? I mean, these figures, along with an approach, they give you the market. They let you know the levels you should invest in. So we're bringing you those scientific calculations. I mean, and that's all donations to the channel go through Coinbase, BTC, and we'll just do that. That's fine. Just so we know, don't ever redirect donations to anybody. Always make sure that we are. If you would like to facilitate through the Discord, etc., we can discuss that. We did a giveaway today, and Yoski facilitated that. We give him a huge shout out. He's the number one. He's been the number one supporter thus far, and he's helped push the Discord. If you guys would like to further support the channel and the work we have going on here, the hours that are put in, the control devices, mechanisms, everything else that we're able to bring you, the technology interfaces will probably be advancing soon. We're kind of gauging the market interest, and it's a nice community thus far. So, we're getting 2,000 views to 5,000 views on streams overall, and we have a good, nice group right now. It's a good, solid group, and we don't need it to be huge. We're growing at the right level. As Harmony One continues to grow, the group will grow. So it's nice to be in kind of on that floor level. You guys are doing a great job. Yeah. Let's see what else we have. I'm going to go to the chats. If you guys have any questions about Harmony One, you let me know. Again, we're trailing off. We're outside of the channel. That's what I like. I don't see, I'll tell you, we're either going to dog leg up. This is why I say, guys, another pricing event is almost inevitable. I'm going to say almost inevitable if we do not want to go back into the channel at all. Okay, so, at this rate, we could kind of maintain a sideways trajectory here. That's, let me just, how do I delicately want to put this, huh? How do I delicately want to put this? Let me get into, I don't want to couch it to where I'm just saying nothing, and I'm describing everything on every different angle. By the way, some of the larger channels, I got to tell you guys this, you'll get a kick out of this. Some of the larger channels on YouTube and everything else with Bitcoin, some of the loud cartoon guys, you'd love this. After we've been doing all the Fibonacci's, today, finally, they decided to bring out the Fibonacci's. I was looking at it, I was like, really? I was like, now you've decided to formally pull out the Fibonacci's. And it was interesting because, all of a sudden they're becoming Fibonacci experts. I'm like, really? You've been screaming at a screen for a while. And they seem like great guys, I'll say that. If I could scream that and talk that quickly into a screen, I would be able, I would probably do it as well. It seems like a lot of fun, but it's nice that they finally got into the Fibonacci's. I'm like, yeah, welcome to the club. I was like, you know, have you been watching our channel or what's going on? Because we've been very accurate. So they finally tried to pull in that level of accuracy to their channel. And yeah, after they did, it was interesting. After they did that, Bitcoin had an accurately positive day. So, and it's back down. It's quite a routine there. So as we look at this price, let's zoom in and let's kind of cover this as a good recap for what we've been discussing. Okay, we are let's pull this up here and go through. We are, after this recent pricing escalation, okay, 30% up, we are achieving additional levels of accumulation at the expected, exactly at the expected different tiered, down, these different interval levels defined by Fibonacci. Okay, those are just ratios. That's all it is. The 50% line. That's the 50% retracement from top to bottom. The top of the leg, the bottom of the leg. The 50% retracement is right in here. This gives more or less a probability of not only a good price, okay, but a probability of the level it could go down to before we have that pricing event. Now the pricing event is something like this, the 30%, etc. The 50% are almost the doubling of your money that you're seeing. So we're building into these pricing events, we're building in the dynamic of trying to get the best price, and we're trying to also bring in the interval level. How long of a time has expired? What is the projected expiration of time that we will see before we experience another beautiful, a beautiful trajectory up? And people want to know, how much do we put in this level to see if we need to wait to this level? Because it could go down into here. It could flow into this pocket. Okay, I'm going to go ahead and put up a small rocket. All right. Now, the last time we put up a rocket, we got 30%, right? Yeah, let's put up a small rocket. We like our rockets. There we go, rocket. Come on now, come here. Let's throw a rocket on here, okay? I'm going to throw a rocket on. You guys have stayed up late. I'm going to put a rocket right there. Now let's move it. Let's move it. Let's put it right here. I like that. I like that. All right. The layout was changed. It sure was. We put a rocket on it. Now the rocket we use, why? Because it has an acceleration of force, okay? It has a velocity. The price establishes a velocity, which is the change, the magnitude and change of the price to the upside within a specified period of time. That is the velocity with which the price moves on a price chart. So the fact that we use a rocket, it is gaining speed. It is literally taking off. The velocity becomes a phenomenal event, okay? I want you to understand, why are people using rockets? Why are they? Well, the velocity of the price action is similar to a takeoff on a rocket. Okay, it establishes velocity and it escapes, its current its current range. Okay, so we have a lot of fun when those launches occur. So I'm going to leave that right there. Okay, and I'm just going to say within this specified period of time, and let's measure this. Let's just measure this, because it's going to have to. Let's see what we have. It's going to have to kind of beat the odds a little bit here. Yeah, guys. It's going to have to beat the odds to not have any kind of a price action within that rocket range right there. Now, it may not be a huge event, but it's going to have to beat the odds, because the other intervals in which it's had a price interval are at least through there. So it's going to have to want to reconsolidate even further and not operate by any of the previous, and this was an incident, okay? So we may be, I'm just going to say it's going to have to beat the odds, okay? It can beat the odds again. It can do it, but it's going to have to beat the odds. And I mean, they're pretty good odds, guys, that we're going to have an event in and around here. So what you're focused on, now this is where it gets to it. That could be anywhere in here. We're about due for it. I'd say within this time frame, we're going to be about due for something. Okay? Something. I'm just letting you guys know something. All right? As we look at this, we've maintained value relatively well. People may say, yeah, the problem is we've maintained value well enough that people want a better price. Hey, I'm right with you. This looks nice, huh? Doesn't this zone look nice? Look at this. Yeah, in here, that looks nice, huh? Doesn't that look nice around, 13 looks phenomenal, right? 13.5. 13.5 looks good, doesn't it? I mean, 13.5 is all right. What do you guys think? It's not too bad. If we have a little rocket ship, if we have a little rocket ride, that'd be nice. Now, how much of a rocket ride? We don't know. We don't know. If the market maker decides to just trample on the stock price, on the price of Harmony One, if he decides to just get his boots out, it's going to be difficult, right? I mean, we don't want to just say, well, the market maker got his boots out. What do you mean? He can if he wants to. He can stomp all over this thing if he wants to. He shouldn't, but he can. Okay? So I'm ready at this level to really double and triple down. This has all been easy, okay? This is an easy acquisition level. We're ready for the possibility, and you say we have to be ready for the possibility because you see, as people mitigate their risk, okay, as they mitigate their risk, all right, you see in this zone it's pushing things out in time, and we're meeting this frequency duration. We're meeting this time interval expectation, and we've been able to push things sideways. That means that people are getting in at a price that could be a bargain. Okay, I'll just tell you that. When they think they're buying in a little bit at the high level, the more it's pushed out, or more expensively, the more it is pushed out, and the more detailed that these become, the more discipline you show. It could be that we're actually acquiring at a higher level, and this is an interesting dynamic, please pay attention, that we're acquiring at a higher level at more of a bargain price. So that's one of the dynamics of getting in and having a better controlled discipline, let's say, and approach to the market. Do you understand that? The more disciplined you are, you may find that even those amounts put in, those smaller amounts at a higher level, are a better bargain because they're buying time on the action, on the price action. Okay? And that time is intervaled. Okay? That time has expectations. There's a time function of these price movements. All right? So we did not maintain that here. We went straight down into a channel. You see that? We were just collapsed into a channel here. Very, very, highly volatile. Here, we're up. We're all right. Look at that. All right. So that movement and this rocket, this rocket was this rocket. That was a good rocket, huh? We'll leave this one here. We'll see if we want to stack this rocket, if it's that big of a rocket. Right now it's this big. All right. If it moves up to here, okay, if it goes up to here, I'll tell you what, if it goes up to here, it's going to be as big of a rocket. All right, we'll stack that one down and we'll place this rocket right on top of it. We'll start stacking these rockets. Okay, we'll put this because I expect some degree of pricing activity, some positive price activity within this range, in and around here. It would have to beat the odds for there to be no launch. It would have to beat the odds for there not to be any kind of an acceleration as we get into this key area. Now, do understand, as it was hovering through here and people were saying maybe it's time to get into Harmony 1, it is holding, it's maintaining well. I said it's likely going to go down. It's likely going to achieve these other levels. That's based upon probability. Now we're dealing with a different probability, which is the frequency duration, or the average time it has taken to achieve this positive price trajectory throughout as we look at the entire interval of the pricing interval. Okay, the overall trend, the bullish trend, the pricing interval here is, essentially this entire wave function. Okay, as we look at the specified intervals within the overall, I'll say scheme, within the overall pricing scheme, those intervals come at a specified duration, a number of days, a short number of days, consistently a short number of days. Okay, all right. This was an aberration. This was outside of the normal. This trading channel was outside of the normal for Harmony 1. Okay, so this trading interval is starting to push the envelope of what we would expect to be normal for Harmony 1, outside of what has been abnormal recently. So, and there were reasons for this. There were also a few instances here where people were able to get a 10%, etc. Now, that is a pricing event. This is more of a pricing event that we appreciate. Okay, and we're kind of caught between expecting or hoping for a larger, and this is where time becomes a factor. You need to judge the time, okay? But we're judging in between, okay? Judging between, essentially balancing kind of a risk-reward ratio, you will, because we get more reward if we go lower into the price, okay? So we're willing to leverage more cash. The time is fighting against us, okay? It's making us think, well, there may be a pricing event, so we may be at a limited, the upward acceleration, or the amount of the acceleration of the price, okay, the upward trajectory may be limited, or it may be constrained, okay, it may be kind of pushed into, you know, a higher price, wherein we achieve the higher price irrespective. It's going to depend on the books, the market maker, and what he decides to do. Either we can see a smaller pricing event here, or we may see another 10% in here and a reconsolidation down. We may see that, or we may go ahead and see if things may be crammed up due to this extension in time, because we saw so much. I mean, we saw so much support here. We have dipped down. We've seen at the appropriate levels small reacquisition is exactly what we expected. This a little bit large of a reacquisition. As we get into this area, anyone may pull the trigger at any point in time and send this thing skyrocketing, okay? That may be coordinated by the exchange. You guys wonder, how is that done? It may be coordinated by the exchange. They may decide to push this out to, someone makes a move for 5%, okay? It's within the frequency range that they're expecting this price to travel, okay, again, to the upside. So because someone makes a move, their algorithm will pick up on it, and they decide to go ahead and float that out to 5 million users on their exchange, okay, who say, yep, it's about to move, it's time, we've done the analysis. Even program traders will say on a technical basis, yes, that algorithm will catch itself and gain legs, and all will start to buy into it. So that's what you're gauging here in this area, is based upon the duration of the time, okay, that we have. Based upon this duration, how much time and how much price movement do we have left? This gets to be somewhat critical in, first of all, in staying out of this channel. Okay, I believe they're going to want to try to keep it out of the channel. Okay, and we're hitting the levels where it's going to get close to where we're probably going to see, based on the mathematics, probably in all probability, we're going to see some sort of positive price action. So this is getting into kind of the nuts, I mean, what do they call the nuts and bolts of the argument. It's getting into kind of a pressure cooker kind of situation. How much can it tolerate in terms of additional time, with the desire to get additional bargains in the market? It's going to become tighter. The market's going to tighten up in and around this area. Expect it to tighten up. It won't be as loose and fluid of a peaceful kind of, trajectory here and everything nice and no problem. Hitting our intervals is great and beautiful. It may get more aggressive to the upside. Okay? I don't see any reason right now why it would get more aggressive to the downside. I don't see that. Okay? I don't see that. You may make a hypothetical. You may make a guess as to, well, if Bitcoin decides to go and break a new high tomorrow morning or Monday morning, maybe that would pull more money out of this market. I'll tell you, I don't like to see that. I can't stand when I say something even possibly negative and I see this dip down right when I say something negative. I don't like to see that. That's not good. When I say something plausibly negative and I see this just go right when I say something plausibly negative, it's just a hypothetical, man. Anyway, but I don't like that immediate reaction on the price chart. You guys understand why. So what we're looking at is this time frame getting stressed. Okay, there's a box here. There's kind of a stress box in here. All right, I'm going to draw this stress box, and it's going to go. We can do it through this area. Let's see if I draw kind of a stress box. This stress box right here. I'm not sure why we have noises going on. That's okay. This stress box, all right, in between here, and let's just draw it in between this area right here, okay? This stress box is kind of a time stress box. Time to event, stress box. Okay, this is where time is getting tighter in here. And the stress is people are planning up for this. I don't know why we're getting all of these. I don't know why we're getting... I have no idea what that is, huh? You know, I have to tell you guys. You guys, I have no idea what that little creature is. I have to tell you that. I've seen that on my program. Anyway, let me get back to this stuff. I have no idea. I have to choose a new theme, I think, on this Streamlabs. I'll do that. It's like some zombie walker. I have no idea what that is. I'm not like into zombies or anything. Something on Streamlabs. Anyway, I hope you find that comical because I have no idea how to get rid of that. But I'll research that tomorrow. I've been focused on the charts. If you guys can understand that, I've been focused on the charts. This is the stress box. It's very interesting, huh? That cartoon comes up that someone has subscribed and it scares people out of the room. That's not intended, huh? But that's okay. We're covering very important information. I know that we're covering it. It's accurate information and it's timely delivered. So we'll work on the details in the presentation. I do apologize for any. I have no idea what that thing is. It's some game theme. I have no idea what it is. I don't play games, so I just picked something that was one of the first themes. So we'll put something nice there. As we look at this stress area, okay, the stress is the downside here. As this price action continues to float through this area, continues to explore, kind of the extremes here, kind of the probables or the extremes in this area, that creates a tension in the market, okay? Not attention, but a tension, okay? A specified tension in the market, in that people are expected to come in at heavier levels here, and that would create more of an upward trajectory and momentum on this side if they come in at the proper levels. The fact that we have maintained, that we have maintained a good price trajectory throughout this portion and have scheduled limit orders, buy orders at specified prices throughout this zone, means that we are creating this pressure and this dynamic of what do you want to say, this almost pressure cooker kind of elasticity which wants to be released to the upside. Now, the degree to which it will be released is yet to be seen. The market maker, again, can affect this decision, but this elasticity, this rubber band is getting wound up and it is getting pressured. It is getting stretched by time. Time is the factor right now, particularly given the support and the duration, the levels of support and the duration that it has gone through. Okay, meaning the amount of time it has gone through and the levels of support that it has hit and maintained, it has performed well. Okay, it is continually performing well during this frequency interval, during this pricing interval. So now that we have maintained and we're running lower on time in comparison to the overall intervals that it has to present us with, we are showing that we are potentially getting into a scenario where, yes, it's not under any kind of pressure or duress. It's not under any kind of strain that is negative that I would see. It is just under some degree of an acknowledgement by the market participants right now, meaning us, okay, that we are currently in a position, and let me go ahead and draw this exactly where I want to, but we're currently getting in a position where we realize there is kind of an elasticity function going on here, and there are a few hours left within which this should be able to operate. Okay, and it's not necessarily down to this level. If we maintain this position, it's going to get tight and it may actually attract and push people into the market at higher levels than what they were anticipating being involved at. That's one of the reasons this is, we're right at what is this? Is this the golden pocket? I believe it is. Yeah, this is the teal. This is the golden pocket. Once we've hit here, it's interesting that we've hit this in the dynamic and at the time where time seems to be of the essence, and we're creating this. It's not tension, in a negative sense. It's tension that can possibly and probably be relieved to the upside, okay, in the form of a positive price movement. Okay, so that's why we have the rocket right up here. That tension can be released to the downside. I don't see a reason for it being drastically reduced to the downside, given the scheduled financial support, given the limit orders and people playing this market. Okay, the duration is long enough, the wait is long enough. We're getting into, if this box is the box of possibilities, we're getting into the zone where I guess, will people wait there? They might. They might go ahead and wait on through that. If the orders, if it comes back down through here and people hit the golden pocket again and say, this is a key ratio, I'm putting my buy orders in, I want to experience what has essentially been a very consistent return basis. Following a spike, we have had 1, 2, 3, 4, 5, really 6. 1, 2, 3, 4, 5, 6. We've had 6 spikes, okay? 7 spikes. Now, of the one spike, we had one spike wherein we were not followed. Please pay attention. We had one spike wherein we were not followed by another significant event. One. Right here. Just one. Only one of those was not followed by another positive event to the upside. So we have a crowd that is very accustomed to receiving a positive price confirmation. This should reinforce to you all, okay? This should reinforce to the community that this is a positive, the price action, too many P's, that the price action of Harmony One is positive enough to create some momentum in and of itself. It has accustomed us, it has kind of trained us to have this level of expectation. And that level of expectation it's becoming due. Okay, do you understand that? It's arrival date. It's becoming due. All right, and after the pricing event of this nature, it has informed us in the past that its regular behavior is to continue to the upside, irrespective of. And I'll say this because I can say this because of. Okay, because of the fact that it has maintained these levels of support, because the pricing structure seems to have returned quite well. So if that is to be continued within this zone, I'm going to go ahead and say that that's positive for a conformance of this pricing event and the next pricing event to be more in conformance with what we have seen on the standard trajectory of Harmony One, which has been phenomenal in terms of overall returns, which should be, that statement right there, okay, that viewpoint should be very reassuring. It should be encouraging to the market, because you're falling in, we're beginning to fall in with the characteristics of these previous gains, these gain events, these positive movements in the price action followed by another positive movement in the price action. It's beginning to look like somewhat something that could turn into a stair, into another step up a rung in the ladder, or up the staircase. Okay, we like to think of this as walking up a staircase. Okay, step 1, acceleration. Step 2, acceleration. Step 3, acceleration. Step 4. So this staircase that is built on the left-hand side here, this is starting to feel like another staircase, okay? Technically, it's starting to feel like another staircase, and we're running kind of semi-short on time. I just say kind of semi-short on time. It's not urgent. We're not in an urgent nature, but I think I put critical, something like that, in the title of this. It is becoming, okay, to the point where we can say, yes, this seems like it's something that we can understand. This is urgent to look at now. This is critical for us to look at now, because we're getting into, if you're out of the market, you're going to want to know, well, I mean, is it going to hit my price target? If you have accumulated thus far at an increasing level, you feel better right now than if you have not accumulated at all. You already have a position. All right, that's nice. You already have a light position, a little bit heavier now that we get into this zone. into this blue zone. You guys know the strategy here. Okay, you know the strategy of the double and triple down. Every zone would go down here. So within your budget and within your own strategy that you have ultimately devised, that you have put together, this is for educational purposes, to mitigate your risk, to maximize your returns. You understand that yes, you want to get on the ride, you want to experience the positive price action. We're getting into that zone. So this does become critical on this kind of this frequency interval. If you want to box this out or square this out, that's even relatively, okay, that's even somewhat connected with the previous price movements, because this is where it starts to get close, guys. I mean, we're looking at 3-4 days. If you want 3 or 4 days, I mean, we're at, I'm going to tell you, we're at, okay, on, you know, at 1900. Okay, at 1900 today, by, you know, this afternoon by 1900, we're at, and now we're really over. We're getting to the point, and this is why I say it's getting tight. Okay, it's getting tight in terms of the pricing movement and where you would expect something to go. That's why I say it's becoming, there's a tension that's being created on the upside, because this frequency interval is acting like a support wall that's wanting to thrust this up. People are becoming impatient. They know the history of Harmony 1, this repeat cycle, the cyclical nature of these upward trends. Okay, they know that, they feel that, they've been trained by Harmony 1, essentially, by the price mechanism, by the overall market. They've been trained. They are starting to become a bit, not anxious, but, you know, a bit more heavily handed. It's time to play. This is time to go. Not now, maybe the next 3-4 hours, maybe they're doing calculations. So enjoy that aspect right now, that we have a scheduled in approach thus far. Lightly on top, doubling down lightly, tripling down lightly. But as we're tripling down, you're starting to see, well, you know what? London's right. I have to tell, you know, that it seems like on the frequency basis, we've looked at the other intervals in terms of how long these other frequencies have taken, these durations. 3 days, 2 days, 3 days, 2 days, etc., whatever. We've been through those numbers. A few, there was one 4 day, okay? 3 day, 20 hours, 4 day, 5 hours, 2 days, 1 day, 2 hours, 3 days, 2 days, 1 day, 3 days, okay? We're starting to look at, and not to be repetitive or just repeat numbers or days out loud, understand that is important, because now we are at, in this frequency interval, we're already at 4 days. So the movement is becoming due. And now you can see the importance. If we're due on a frequency basis, you can already see the importance of me having brought up to you. Okay, now it may extend as much as the market maker and the market participants decide to remain calm. It may continue to extend. Okay? However, we're getting to the point where we're past due. We are past due for a movement. So people who thought this is just not worth the time, I'm going to say on the upside, were this to occur within the frequency duration that's expected, I'll tell you, the people who are in the market and not really worried right now at these higher levels, at a slight little amount, boy, they look intelligent to me right now. Because I'll just tell you, the ones acquiring, they look intelligent based upon the frequency analysis, the duration analysis of these prior pricing movements. Now, can it be delayed? Sure, it can. But if they're ready to double and triple down even at this level, I'm going to start saying they have a good strategy, because they've played this timing perfectly, in line with the previous pricing actions, in line with the durational events and the velocity movements that we had to the upside. What do we want? We want another positive velocity movement. We want another appreciation in the price. And the timing is looking beautiful. And it's scheduled out with a support line and a kind of a longer duration and a nice natural flow down, nice scheduled event down. And it's just, the timing is looking really nice. I have to say, it's looking really nice. Nicely done, guys. Nicely done. You guys appreciate that. You see that timing interval, the duration of this trade is starting to be confined. It's starting to hit this level of, hey, you know, you guys right in here, I got to tell you, normally by this time, it's going up. It's going to the upside during this time. So you're kind of pushing this envelope in here. I appreciate, okay, you guys have been around this area. You decided to kind of get in early and schedule in. You decided again at this next level down, the second tier, to get in additionally here and show some support. You've decided now to go ahead and continue this level of support. Okay, you've decided to continue that. Yeah, and the time is, and we have to say, the time, you know, kind of the essence. You know, if we look at these other timing intervals, and again, major move to the upside, right? Yes, major move to the upside. What happens on the other major moves to the upside in this? Well, we have another major move to the upside. That's right. That's right. Now, something happened during here. I don't want to go through the details of what happened in the channel of this downward pricing channel represented by the two retracements. We don't have to go into that. I want to talk about the bulk, the probabilities, the 6 out of 7. Let's talk about the 6 out of 7. Okay, 4 days. 4 days. Okay, what are we at now, guys? What are we at right now? We're at 3 days and 16 hours. When are we going to be at 4 days? Well, is it 7 a.m.? Hold on. When are we going to exactly be at 4 days? All right? This is the behavior of Harmony One. This is what it tells us it does. It's not necessarily what we always do to it. It's telling us what it does. Market maker's telling us what he does. The exchange is telling us what it chooses to do with our money. Whether or not it chooses to make more money for us and in what time intervals. We pay attention to these signals. People want signals. Timing, duration, analysis. This is a signal. Okay? So this 4 days puts us at 7 a.m. I'm just going to say for the record, that just puts it 7 days. At 4 days, that puts at, I don't know why I said 7 days. This entire deal was about, I think longer, was about 9 days. That was 9 days. Within the 9 days, we can cut off 2 days in increments. That will give us the 7 days. This was an aberration. This was an abnormality, okay? This was not normal. Within there, we still had frequency. We still had buy-in options on frequency intervals of 2 days. Okay, that's very interesting. Okay, 3 days, 2 days, 3 days. We still had price movements. Here, we're looking at, if we get into 4 days, guys, we're just due for a pricing event. We're due for an escalation in the price. I don't see anything that would move us to the downside. I don't see any reason why we would just completely catapult. I would see people becoming more interested in line with our strategy that are looking towards reestablishing the nature of the bull trend, because it has the characteristic right now of a positively formed interval. I'm going to say that, and this is a pricing interval. Okay, these are all intervals. When you see the dynamic escalation in price retrace, these are intervals, both a timing and a pricing appreciation interval. Okay, so during these intervals, these specified intervals, we receive characteristics and behavior of the market participants, the market maker. Okay, the price ultimately tells us, it gives us that behavior. Based upon the previous intervals, guys, we're due. And it looks very solid. It's starting to look like an interval which has the potential upside that we have been hoping for. And that's good news. That's good news. Now, what's the security interest? What's the level of security? What's the insurance behind all of this? Well, we're ready in and around this level to take more of a macro approach, to scale back out and say, I want to look at the weekly chart on this. I want to zoom in and say, you know what? I still like this. I think it's got a lot of potential and upside. This thing could go to $1, $2, $5. I'm not sure where it could go, if they want to burn tokens, whatever they want to do. But yeah, I think, I'm going to go ahead and sign on with the fact that, yep, I like that chart. And I think we're getting into a position where, yep, it looks like we may get a discount. You telling me this thing's going to continue to go up? It's got solid fundamentals, a good management team, and it's got a good story and technology. They're building something important. I like it. They've gone from 1 cent to 20 cents. You think it can go to $1? You think it's worth that? In this market, yeah, okay, let's take a look at it. Let's throw some cash into it. We got some big players. Let's go ahead and throw some cash into that one. I like it. I think it's a guy went to Wharton. He's got a PhD from Wharton. Good. PhD from, or a master MBA from, Harvard Business School. And the other one, the management team, the other one from Stanford. I like that. Yeah, I like that. I think those guys know how to run something. Oh, the guy, he already sold a company to Apple. Oh, okay. He sold a company to Apple. I like that. I definitely like that, yeah. Those are the kind of fundamentals we're working on. Those are the kind of situations where we're looking at the frequency duration and trusting that this thing is being managed well. Okay, managed by the market maker, managed by the exchange. You guys understand that? I mean, that's part of the challenge here is knowing that being, in terms of being convinced. We can't be certain. We cannot rely on that certainty. That certainty is not there. Okay, that's what provides volatility in the market. But to the extent that we have a reasonable expectation of that, I think that's beautiful. That's part of the dynamic of the market. That's what makes this a unique investment and why we like it, why we're involved in it. So, yeah, let's go to the comments real quickly and let me know your thoughts. Let me know. Go ahead and drop in the comments. What are you looking at? Look at this. Is it time to triple down at this price? Isaac, shout out to you. I appreciate you asking that question. I'm just going to tell you, we're getting to the point. You have the pre-existing levels. Okay, you have these pre-existing levels, and let's go to the 1 hour so we can just really chart those out. This is why it's just the scheduled approach is really important. It's an approach used by the top investors, some of the top investors, institutional. BlackRock level, okay, $3 to $6 trillion in management kind of level of investment prowess that's managing with this. We're ready to double down. That's their philosophy and theory at different levels of pricing. So that's the mechanism that you're capable of seeing. Now, I don't want anyone to pull the trigger that hasn't been engaging in some kind of a real market potential, okay, and a market acquisition potential that's very scheduled. That's already in play necessarily. If you're late to the party, we'll hit another round here in a minute, guys. You guys just you can stay and watch, you can get involved, etc. Let's see here. Now, it's funny that we bounced along this. That's just the difference between the 4 hour and the 4 hour and the 1 hour. So as we look into this, it's getting to the point where we're getting the inclination to stay outside of the channel, and we're getting into the zone. The more, the lower in the price, the closer in the price that we get, it looks like we're more chaotic, which is why I don't always like it. But what is still evident is we are still in this zone wherein timing becomes crucial. Now, it could go down on into this next level. I mean, it's proven to us that it can in and around these areas. If you look back up where the cursor is, I don't want to drag the detail box everywhere, but it has. It's corrected sharply. But these are instances where it hasn't shown quite this much resistance. I mean, it's showing some good resistance in terms of our support levels. It's resisting re-entering this channel. I think that's important for the story. As we look forward towards the story, it's important that we resist this channel. All right, so that's important. I like this. I like this positive price support action that I see here. I like this in the previous step that was formed by this upward leg. I like this positive price formation that's being formed there. So, as we look at this on a kind of a micro, kind of magnified level, just understand that the further that this continues to show support at this level. Now, the people say, was it a good time to get in at this level? I'll say your orders may be in between the 14.48. They may be heavier. They may be heavier even now. They may be somewhat significant at the 14.48 or the 14.5. They may be significant now. They may be double or triple that at the 13.6. But they may be significant enough, I'll just tell you guys, they may be significant enough to where the market maker will fill some of those orders and then will run out whatever that increase in price is. This is his determination as he decides to fill and make this market. okay, between the buyers and the sellers. He may take in your light amount of money, or it becomes a significant amount of money. We're in the blue zone. So a significant amount of money in and around the 14.5 cents. He may take those orders, allow the price to increase and escalate, and he may immediately get that out to people, or it may be programmed. I'm going to tell you, it may be programmed depending upon the timing duration that's part of this trading program. Okay, there are automatic trades which go through. You guys understand that? Program trades which we're competing with, which is why we do detailed technical analysis to understand what those program trades are doing. Okay, the market maker is not always sitting in front of his computer 24 hours a day. You guys understand that? There's a desk, there's a computer station, there's a software, there's a program, there are expectations technologically that flow into. So when this is met, and I'm going to say this in and around the 14.48, if enough cash is there, they can decide, okay, and it can be a functional, it could be a variable equation on a program trade, it could be an absolute discretionary opinion by an individual to say, let's go ahead and hit this. Let's go ahead and hit it out to everyone on Binance and crypto and KuCoin and we're going to go ahead and push this, get this 5% out there right now. It may catch additional traction because it's within a time interval that people have become expecting, have achieved an expectation, let's say. They've achieved an expectation of a positive price trajectory. That's assuming we're getting back into this mainstay overall, and I'll say probable behavior, the probable behavior after that we see in the majority of the pricing events to the upside, that probable behavior after the majority of the events. We only have one instance where there wasn't this phenomenal upside event. So we're going to be technically betting, and particularly after seeing a good degree of pricing support, operating upside outside of the channel, to the upside out of the channel, we're going to be operating against the odds if we don't give this any degree of expectation of going up. I'm just going to say that, okay? We're around, okay, this 20-day moving average. It may not like to be below the 20-day moving average. That's just a fact. It may have breached that to pick up the heavy orders and around 13, our pricing target. That may have occurred. It may hate being below the 20, okay? We haven't hit that yet, that circumstance, that idea yet. And you can see the last time that it did cut through the 20-day moving average, what happened? Well, that was right here when we hit the 13, right? Everyone says yes. You see this? Look at this. The moving day average is this red line, okay? Let's zoom all the way in. You guys pay attention to your screens if you can. Now, the blue line is your pricing action, okay? That's your price action. So when this did cut through, all right? Now, it tranched through, and we said there was not much there to catch it, right? There just wasn't a lot there to catch it. Period. There wasn't anything in terms of price action on the left-hand side. I didn't see anything, did you? I mean, look at it. It's just a straight line up. Absolute velocity, just extraordinary velocity on the way up. Nothing to give a hiccup. There's no Fibonacci interval. There's nothing. Now, we're in a circumstance here where, when it cut through, it had a huge trajectory back to something that turned into kind of a, let's see, at least it conquered back through that 20-day moving average, okay? Now, that if it wants to stay on top of the 20-day moving average, and we can say, wow, okay, well, that was maybe a trigger event that, yes, we saw a huge phenomenal event to get us back above the moving day average. That turns into less of maybe a discretionary function on behalf of a market maker, the exchange, and the participants. That may turn into an actual kind of executive style decision. I'm just going to float that idea by someone like Binance in conjunction with the CEO, etc. of Harmony One, that we have agreed for the most part to keep this above the 20-day moving average to kind of solidify expectations. You can start to look at that as, well, it's possibly true that this entire event was more along the lines of getting us back to say hello to that 20-day moving average before we continue back up. That's a nice way to look at the story. that would not be inconsistent with the way that a bullish trend could work, is to get back in touch with our 20-day moving average. It's an indicator. There are a lot of indicators. You guys know that. But the reason I bring that up, and please pay attention now, is because, and specifically to this, aside from that rationale, retouching the 20-day moving average, is because when we cut through like a knife, okay, we experienced a 50% return. We had this on target. It required getting down through the 20-day. We did. We got through the 20-day. 30 to 50% return for the subscribers. Now here, we're already through. I'm going to say this. We're already through the 20-day moving average. If we scale in, we've already pierced the 20-day moving average. If we're going to continue the uptrend and operate in line with the majority of the other pricing events, if we're in line with the probabilities, guys, this is someone at the free throw line who makes 9 out of 10 free throws. Okay, you have to say this is somebody if we get into the nano here, etc., the other small indices, this is someone who has made 9 out of 10 free throws in front of us. Okay, and he likes to hit them on a streak. He likes to hit them on a streak. Watch him. He's going to go. He's at the free throw line. He's going to go. Watch him. Okay, now he just hit one. He missed one. Oh man, but he hits 90%. Don't worry about it. Okay, well he just missed one. That's okay. Watch this. And he's just automatic. You can almost say he missed one. Don't worry about it. Watch this. And the guy's got a 90% average, right? He just boom, 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 boom. Well, he missed one every now and then. Boom. He may hit, who knows, he may hit 20 in a row. We don't know how this is going to operate. This is a great investment. But we know that we have had consistency of boom, 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 all this different stuff. Well, we missed one. All right, so maybe the management team or the market maker, somebody decided that you got too hot at the free throw line. He literally may have been set down on the bench to give the equation the right way. He might have just been pulled off on the bench. No, hold on. You can't return these. We're not going to let you get traded. We're going to restrict your. Binance says we're going to restrict your coins. Right? It's just too hot. It's too hot. There's too much heat on the market. May cause some overall larger dynamics. The one dynamic we see now, and I mean interplay between what their management books kind of require of them to deliver to their. I mean, they have a board of directors. They've got a big management team at Binance. They've got a management team of different interests that they're managing. Okay, from Harmony One to every. Think of all the coins that they're managing, all the interactions that they have. It's big business, guys. So they have expectations. They have kind of conformance protocol that they need to keep things within a conformance. I always try and appreciate those dynamics without giving them too much of a leverage, too much of an opportunity to misbehave. So that's never good. So we do look that we are right now piercing through that again. Now, I see more buying opportunity due to our scheduled in kind of mechanism. And I'll say, aside from our scheduled in mechanism, I see more of a consistency, okay, with an upward trend. Let's start there. Okay, more of a consistency after a spike of this nature. Now, these were smaller spikes, guys. This was 10% in here. People still played this. We had that's our target, okay? Period. 10%, they made that. This was our next target. 10%. People doubling their money in 12 days. Phenomenal. Okay, great. Now, if you add up those returns, that's great. Now what we're looking at is the following. That we are expecting a positive price event in line if we are to consider the previous pricing interval escalations. The previous escalations in price in those intervals and the following intervals, okay? That's when you get into kind of an interval analysis, okay? Because each one of these represents a duration, a timing, and we have intervals, right? Each one of these intervals has produced an additional pricing event. Correct. Until Binance got funny with it, guys. Binance got a little funny with things. Binance isn't being funny with things right now, are they? No. So on the whole, this is a guy at the free throw line that can shoot. He can shoot shots, right? He can shoot. He can drain that shot from the free throw line, no problem. Very easily, he can drain that. Now, we have experienced this downward channel. We're outside of the channel. We have conquered that. We have maintained well. Okay? It will depend upon, and I'm not going to just say it's going to depend on you and whether or not you want a better price. You'll have orders in. I would not change my orders. I would hold fast to your investment approach. And I would look at the fact that, well, we've already gotten in, and this is why it's beautiful. We've already gotten in lightly at this level. And when it dropped down, we've already gotten in a little bit more heavily at this level. Just a little bit. Double down and just some little pepper. Just pepper in a little investment. We double down, just pepper in that. We double or triple down here. That's fine. But we have heavier levels. Bam, hitting. We have heavier levels like a 10-ton hammer on this interval relative to this interval of cash available hitting in this level. All right? And of that, and we can use this. This is where the heavy hits. Now it's just strained because we have this timing which is getting compressed, and this thing is going to start rumbling at some point. This rocket is going to sit here, and it's literally going to just start rumbling. It needs some action. Now that's going to come in the form of a program trade. It's going to come in the form of an advanced exchange, kind of algorithm, something that is guiding. I say that has sent this thing to where it is already. It may come through a pre-existing relationship on behalf of the management and Binance, etc. But that's programmed. That program has told us that it's behaving in a certain way, so we can have some predictive future market intelligence based upon that. But yeah, this rocket's going to want to start shimmering, shaking, and kind of achieving some sort of a pricing event. And I'll say it's not likely that it's necessarily going to run into this same event. We have the trajectory. We have the Fibonacci retracements from this. The math speaks what the math speaks. And so it may not just depend upon your whim or your decision. I'd rather not play this as heavily. I'd rather just wait till. You may not get the I'd rather just wait till down here. Now, I always recommend, again, having that additional cash, okay? Having that additional backup, that additional security, that additional insurance policy on everything you invest in. Never go all for broke. Never go all out. I'm going to do it. Because that mentality doesn't usually lend itself towards being patient. Okay? And the people who are patient typically have more money. So the impatient often transfer their wealth to the patient in a market, to the patient people in a market. So I don't like people to become impatient. All right? It's typically a bad sign. So let's see what happens here. Let's view this in the context of the previous, nice, beautiful, just, not even jump shots, just straight there on the floor, swish. Straight there on the floor, swish. On the floor, swish, swish from the free throw line. We got into an issue where coach is like, you go have a seat for a minute. I don't get the inclination that those same variables apply, and I see a lot of stability in the price. It's not to say coach isn't going to say, well, he's not quite ready to play yet. Harmony One doing a great job. He can definitely play the game, but just not ready to completely play yet. You guys make that decision. But you see that we're getting into something which is just compressed in terms of the timing and the expectations. It's like, no, this kid can play ball. We know it can play ball. It just played ball, right? And people they're getting into the phase where they're going to expect it to play ball again. And around this, it's becoming due. All right, it's becoming due. So that's just the facts. And I'm glad we're doing this kind of late at night because it's giving a different feel to the scenario. Let's see. There you go, 13.5 if you're heavy. Hey. Okay. I like what you guys are doing in the chat. I just looked at the chat. Okay. I don't disagree at all. I like to see the strategy. Now you guys have the insurance. I just read that in the chats. You guys have the insurance at the lower levels. down to the golden pocket. You understand what this thing can do, and you understand the money you can make. You understand you may have whatever you're heavy at, you may have, I'm just going to say, you may have 5 times whatever that heavy amount is. You guys do your own math, but you may have heavy down below. All right? In the lower order is what I would do, Daniel. Heavier in the lower order is what, yeah. You're right on, Daniel. You're getting into your pricing efficiencies. What we're doing is we're acquiring on pricing efficiencies. If we establish a lack of volume efficiency at the top level through a small acquisition in and around, I'd say tier 1, if we establish, okay, a lack of volume efficiency, meaning we don't have a great degree of or position in volume, we just bought in a few at just a small amount of money, no problem. At the higher levels, it's okay because you're still involved. And at this next level, we'll get a little bit more volume. We'll spend a little bit more money, but not much. We'll kind of double down into it. That's fine. But these are really light levels, guys, up top. This here, well, it's one more level. We want to become involved. And it's not just us. It's programmed traders with a lot of experience saying, yes, on the aggregate, you can look at our chart. We're telling you what we're doing. We are accumulating on the way down because it broke out and it has such a phenomenal story. We're going to tell it. It has such a phenomenal story of 20x your money. And that's not a hype. It's got a 20x on your returns. So we like that. It's starting to behave again. Okay, this one channel, that's like a, it's a highway to another line of channels. That's what I'm gonna look at right now. Is that a highway to another line of channels? Okay, and through successful entry and through a nice, I'm gonna say a nice positioning, accumulated positioning of our cost basis within each specific channel, we stand to profit consistently on Harmony One. It has incredible price action on a good frequency basis, on a good frequency duration, to where we're able to say, yes, every 3 or 4 days that thing's going to hit, period. Every 3 or 4 days it's going to hit 30%. We just have to be very, very, very careful, and we have to be as predictively intelligent as we can and state that, yes, it's due. It's becoming due. People are wanting to get in down here. I like that. If you have the order on the books, the market maker might say, fine, I'll go pick these kids up. I'll stop by, I'll pick these kids up. I'll pick them up on one of these. They want me to pick them up, no problem. I'll pick these kids up right here. I'll pick them up on one of these. He might say, you know what? I like these guys in and around here. These guys started peppering in around here. Not bad, huh? Pretty solid, huh? Nice line of support in around here. I'm going to pick up all these guys, and all these guys. And, I may not get quite down to those guys. I don't know. We may launch early. We may launch a little later. I may pick up everybody. Typically, good investors who are structured out well, he'll try and pick you up. I would probably say he's going to try and pick you up. But he may not pick you up as much as you want. That's what you get into, the relative strength index, and your patience may cost you more because you may go in what you think is heavier. But he's like, I can't believe these guys down here waited. There you go. Congratulations. You hate to see that. It's like he'll give it to you, but he'll work on that relative strength index, and he'll tell you, well, that's fine. I'll pick you guys up here. I'm going to drop you off right there. Good job, huh? Now what do you guys want to do? You pushed me too far. You pushed the market too far. You forced me to give you a bargain I didn't want to give you. And the problem is I don't want to unload those at much of a price right now. I'm going to hold on to them. I'm going to make you hold on because you made me hold on. So there is that push. And he says, I may want to reward these guys up top. I like what they did. Look what they did. They got us out of that channel. Now you guys want to take me down into here because I tell you, I got to tell you, you're already talking about putting yourself down into where? Into that channel, real close. You already talking about putting yourself down into that channel again? Whoa. See, I'm going to reward these guys. And if you want to play in and around that channel, what I'm going to do, market maker might say, yeah, I'm going to go ahead and I'll pick you up right here. Then what I'm going to do, I'm going to put you right here. There, boom. You got your appreciation in price. There you go. Yeah, what are you going to do? I don't know. You guys going to start using this as a support line, a support level? You're going to bounce out of here? You're going to reconfirm? You're essentially turning into that, guys. You want to rebounce and reconfirm, and this is just a dynamic to look at because you did reconfirm, you bounced up out of this channel. Is the likelihood that you're almost literally going to start using this as a support line? Maybe, maybe not. It would be odd. It would be odd to have this. It would be uncanny. It would defy the expectations. that some kind of a support channel like that on the way down would literally turn into some sort of a line to bounce on top of. It doesn't. Have you guys seen many charts like that? I don't see a reason. There's no manipulation in the market. Otherwise, that Binance has said we're going to manipulate. We're going to cool this off permanently. I haven't seen that. It's just recently performed very well, and it's performed well in the past. So, there's been good news about SushiSwap. Good news about some other stuff. Staking interest, development in the community. So. You guys, you see the danger of waiting too long, and that's your decision to make. I'm not going to give you any advice on that. I'll explain the factors for you to understand and weigh in the decisions you make. For those of you who are stubborn, you may not care. That's fine. You may still think we're going to go in heavy enough. We're collectively going to get a 20%. And understand, when you collectively go in and you get a 20%, or it may go out and be marketed. Yeah, American Diesel, you're welcome, brother. I've known some big, heavy hitting traders. So hired some of the best ones on the Wall Street, out of the bond desk on First Boston in terms of the. You want to talk about top-notch traders with insight and skills and ability? I've run them, personally, just in my hedge fund, etc. And they're great guys. They still have questions just like you do. They still come to me and they want to know. The top guy was literally asking me questions on what do I do here? What is this? What is that? What do you think about this? And that. I mean, it's a normal routine we go through. But that market maker, I just want to bring up the possibilities and think through the situations that you understand that what you're getting into is a tight situation where you're frustrating. At some point, you understand you're going to frustrate potentially, or at least dance along the line. Now, if you can hit it just perfectly, he may say, fine, let's rocket this sucker up and let's get back over into here, right? What you're looking at is the following. You're in the tight zone. You understand you're in this tight zone. He can do what he wants to do. The exchange can do what they want to do with or without you. And I'll just tell you, they can have some programmed activity and leave you out. That's the plausibility of what can truly occur, is they can leave you out of this equation. If you stand steadfast and you decide to maintain this interest and it does leave you out, essentially what you'll have is a reconfirmation that this is the investment instrument you want to be in, and you'll watch it for the next 3 to 4 days. Or 5 or 6 if you decide, I'm gonna put the timer on. I'm gonna relax and put the timer on. Just no problem. We're gonna dance this around, and it could be in part because, well, you know what? We're gonna let this one go 4 or 5 or 6 days because it could fall out of this channel and stack up over on the side because, well, these guys don't want to play ball right now. Look at this pricing support. You see? I want to get in at level X, Y, or Z down here. I'm going to be kind of pushy, given the fact that we have shown a good, or in spite of the fact that we have shown a good level of support, right? I want to be pushy. I still want to capitalize on this pricing level. Nothing wrong with wanting a good price at all, right? Nothing wrong with that. But you may push it into a scenario where the average frequency duration is 3 to 4 days. Beautiful, right? Yeah. Even 2 days. Okay, 2 days. So we're pushing it on 4 days, on this upper end of 3 into 4 days in this area. As you push this level down here and say, fine, we'll give you the support down here. The bulls are waiting. They're back in the pen with their heavy cash. They're waiting on this. Well, understand that could adjust your frequency duration, your expected frequency duration, your time interval within which you expect to capitalize. That changes the nature of your investment, okay? And when that's done on the collective, it's a nice thing to look at because when it's done on the collective, you understand that's changing the market from what it has been. You may be reacting exactly in line with what kind of the psychological or the psychological effect of this has put you through is now I want to wait and I want a better price because I know you're going to still perform in terms of the upward mobility of the price action, but I'm going to make you wait a little bit more and I'm going to be a little bit more reserved. That may be a very mature standpoint to take, or kind of a viewpoint or expressed strategy and discipline to go ahead and employ. You understand? I mean, essentially, you've made me wait through this and we've gutted through this. I want a better price. That may be the effect of having gone through this psychologically. So there may be nothing wrong with that. And it may just be a part of the psychological play into getting this back into a zone that can flow up and that can be nice on the upside, as it has been, dramatically good. And you don't want to necessarily, I'll tell you, you don't want to necessarily just fall back into this beautiful pattern behavior. We had a spike in price, but what we do have is not just a spike in price exiting that channel, but we also have a pretty dynamic show of support in and around here. That's dynamic, guys. That could have taken off. I'll just tell you, it could have taken off. And you guys know this. It could have taken off to the upside from here. It's jumped down. He's filled the trades. We had program trades up. We have, and you have to look at that. We've had program trades up. We discussed that. You know, having different levels of programmed entry. We meaning the community. Correct? Yes. So if you guys say you have program trades up right now, all right, if you have those program trades up right now, you may be looking into, well, they're just going to recreate this whole, and this is what we don't want to happen, but well, we're just going to recreate an entirely new channel. If you guys want to just create an entirely new channel, you can do that, and you can push that entirely new channel all the way down to the next. This is the functionality of it. If you really want to do that, you can do that. That's no problem, you know, if you choose to do that. The problem is, even if we do this, let's do this, and it becomes functionally not just humorous, okay? If we do that, okay, what we're going to want to do is we're going to want to draw, and we're going to want to clone this, right? We're going to want to clone this, and it's going to have a frequency duration, okay, aspect and component to it, right? Yeah, everybody's like, now we see. Okay, now we see. Making sense. And what's going to occur is essentially we're going to also want to clone this. Nope, not that. We don't want to clone the, I don't want to clone the fibs. I want to clone this pricing action. And now your question's going to be, now I'm going to say this is inaccurate because you're higher up. Probably your midline is here on your channel. Okay, so this is the previous channel. You probably have another midline. We can do this with pitchforks if we. I mean, this would be a great time to look at pitchforks. Okay, because this is essentially where you're at. Is if you want to play this routine in and around here, you're going to do kind of a double breakout here at some point, and you're questioning right now if you'd like to do kind of a double breakout in comparison to where you were, but you're at the top. You haven't recompressed to the bottom layer. You've shown more strength, and this is what makes me a bit more positively understand this, guys. I'm not going to use the word bullish right now, but this is what creates more of a bullish or a positive, let's say a positively scoped projection. Okay, is that, and you'll agree with this, you haven't fallen back in to this level. Essentially, if anything, when you confirmed up out of this channel, this channel here, when you confirmed up out of this channel with the price action in here, essentially what you've done with these program trades is you have confirmed outside of the confirmation, okay, of your exit from the channel. This being your channel, you have confirmed outside of that in your positive price action. Now you have essentially established a new line, okay, even further, which is confirming outside of that, essentially confirming the confirmation, okay, the new zone of that confirmation. Do you see that? In here, you have bounced back and you've confirmed outside of that. You seem to be pushing even further outside of that. So as this occurs, yes, time is passing, but you have to ask, it becomes almost more reasonable to expect a similar, because these 30%, it likes this 30%, guys. It knows how to move. There's some money on the side of this, trading this thing. You guys know you're using the money. There's some other money in addition to you. But as you continue to kind of walk this out, I'm going to bring up even another line where it seems like, well, and now we're even kind of furthering that. You see, So when I start looking at, well, where is this going to occur? This is where it becomes interesting, okay? Because if, again, on top of this, if something were to occur that we're going to push this out again, I mean, we're essentially pushing up and out this projected this price target. So as this takes effect, okay, and let me move this here. As this support takes effect, we are pushing out, okay, over and up. We're pushing over and up what? This here, the expected trajectory. We're pushing that over and up. Okay, that's the positive dynamic of this occurring while we're in a constricted frequency duration based upon the prior elements here, the prior positive price interactions that we've had, those positive price events, okay, those trajectories, the upward legs that we've received, those positive, the money makers, right? So what you're telling me and what's interesting and what fights against what you guys want right now, and for those of you who are programming up trades and into trading, understand this. And I don't mind if it's a big audience, small audience, a couple thousand people may ultimately watch this. It's very good rationale here that's going on. Because as you're stepping up out through these areas, you're telling me that you want to capture something further down. You see the problem here? You're starting to say, well, we want to capture something down in this area. We want to capture something down here. Now you're going to interrupt all the progress that's been made. At some point, the market maker may not want you to interrupt that progress. And it's not just falling back into this original channel here. No, we're talking about you've already kind of confirmed almost being outside of that channel. Now you established even kind of a further, line of, I'd say a different channel. We're not in this same dynamic right now, guys. We are not in this same ebb and flow here of just absolute constriction and cannot move. We seem to be moving over, up and over. I'll say just over and, over and upwards. Outwards and upwards. Let's say outwards and upwards. Outwards and kind of upwards. And we're just kind of doing that. A little bit of retracement, but we seem to be pushing beyond, because this exiting this channel was critical. You received the confirmation. We traded that. We had a little bit of fun. Lightly, very lightly, okay? At these top levels. Always lightly at the top levels. As we go down, we're confirming being even out of that zone of kind of confirmation. So as this pushes outward, the trajectory pushes upward. While that's occurring within a constrained time period, okay? The time periods may not change because you still have an expectation and you don't want to conform at all. If you want to be stubborn and you don't want to conform to what you're seeing in terms of pricing support on the dial of the watch, literally just pricing support, just sideways pricing support along this first tier, and then another kind of sideways event here on the second tier and third tier. As you do that, you say, no, I still want, you're going to have to turn this thing, this thing's going to start shaking because it's not going to want to go back down into necessarily this other zone that you want to get down into. And if things kind of hold in line, it looks like, if anything, we are achieving more positively dynamic kind of levels further and further out away from that price target. If you're looking at establishing something that's potentially in that zone, you're looking at a duration of, if you were to extrapolate on a worst case scenario and you were to say, well, what would that be? Just looking at it, okay, you're looking at 6 days potentially. Okay, that's double. Okay, that's about double. That's 50% to 2 times as much. Essentially, if we look at 2 and 3 day intervals up to 4 day intervals, if you're looking at 6 day intervals, that's some of these, that's double what some of the other intervals were, triple what some of them were. That's 150% of what some of the other intervals were. That's a difficult word to say repeatedly. Intervals. So That's essentially what's happening in the price action. This gets a little bit messy, but I want you guys to understand that's the conflict you're in, and that those are the, you want to say, oh, the bottom line is will he pick us up or not? Yeah, maybe, you know, it's just going to depend on these are the realistic decisions you get into, which is why it's good. Hey guys, it's nice to play with a lot of money, okay? It's nice to have in program trades where this is still some degree of money. Like, and I'll just say on $1 million, and we don't have to play with $1 million. So you understand though, on $1 million in this arena, the top level is like 12 grand. Whatever that amount is, it's 12 grand. All right? Just so you understand the dynamic involved with kind of a hedge mentality. You know, okay, well, we got $1 million, we're gonna throw in 12 grand. No problem. We may have 50 million on the bottom. This may be 1,000. This may be 1,200. Maybe 120. It may be $12. It is the point is, can you manage the expectation? Can you see the charts? And can you employ the discipline to where, and the expectation, can you manage this expectation of both the market maker and yourself to where you're still fine? You don't have to get in. You're already in. So if this doesn't hit, that's fine. You have program trades up at higher levels. If they don't hit, you're fine. If the market maker chooses to take advantage of your price entry point at any point in time, you can rest assured that's his job, and he's going to go filter this out to the broader community of either the community of the current holders or potential holders, you see. So that's his job. Let him do his job. What's your job? Your job is to establish your pricing levels, which you're doing, which is phenomenal. But I want you guys to understand the conflict. Now, should you ever change? Should you ever say, well, this has changed? Because you'll start looking at it and be like, I don't want to miss out on the 30%, dude. I understand that. I don't want you to either. But what's the good news about this investment is it's consistent. Right? And if you're solidly but slightly involved, and I'll say you're solidly involved because that level held very well. That makes it solid. You know, your inclusion's pretty solid right now. If you do have this upward trajectory, so that's the benefit of employing a disciplined strategy in and around here, and saying, you know what, that's fine. And I understand what London's been saying. You know, you understand everything now. You understand this has created a great dynamic, and even one I think you all will admit, because you might have been like, why are we doing this right now? Look at what we have created. Look at what the market has done. Okay, and it's not just us, it's everybody looking at this, okay? When finally the big YouTube channels are starting to do, the crazy ones are starting to do Fibonacci levels, they're starting to get into that. You can just see what we have put together and what we have been working on and why these do make sense. Within the structure of that, you guys you see that walk up? Bum, 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 bum. All right, now on the frequency analysis, you guys understand, they may not want to pick you up all the way down here on day 6, all right? They may say, you guys get in a little bit earlier, we're gonna hit 4 days, come on. This is not a waiting game here. Just, get in on price, do what you can, get in light if that's y'all's strategy, and let's zoom this thing up. They may have a pricing target they want to get to eventually. On the other end of the spectrum, they may say, you know what? These guys are just lagging. If it's going to take them 6 days, I guess, 6 days. Well, anyway, 6 days, I guess they don't mind if we go all the way down to the golden pocket. That's fine. We're heading straight there anyway, way out here at 12 days. I'm going to tell you, if that occurs with no pricing activity, with no pricing event, if we go 10 days and 21 hours, if we go 10 days with no pricing activity, I'm like, not going to happen. You're going to hit, what are you going to hit first of all? You're going to hit that 13, right? So, if he made you wait through that, I don't know. I would hate for him to build those purchase orders, those limit orders. I would hate him to build those purchase orders into the RSI. Let's take a look at the RSI. We're going to be sorry we did this. No kidding, huh? We're all going to regret we did this. Let's look at the RSI. Let's look at what he's done to this market thus far. All right. Let's look at you guys want to look at the 4 hour? Let's see what we got. Let's look in around. The RSI on this, guys, is so relative. I can't stand it. I know you guys can't either, right? Now, it is showing me, I guess, but I mean, you have spikes in around this area at 38. You have spikes in around 47. You have spikes at 47. You have spikes at 41. So this is where if we're going back into this zone at all, it becomes kind of dangerous to look at. It just does. It is misleading. It is not nice. Let's go to the 4-hour RSI. We just came off of an RSI in around 28. Okay, that was a strong RSI, but we have made big moves on the 4-hour chart at 53. At 53, you see how relative this is? It's just, it's conducive towards kind of a bearish expression in your, I'm just going to say that, towards a bearish expression or bearish strategy in your trading. And that's because it's not really a nice indicator. That MACD, etc. I'd rather look at this 20-day moving average. I'd rather take a look at that 20-day moving average. Okay. Now we're on this level. We've been in and around here for a while, haven't we? We really have. It hasn't moved a lot, but you guys understand the dynamics involved. You understand where we're at in terms of RSI right now. We're about 40. We are off of that. And it seems like, if we look at the RSI, now again, I said we'd be sorry we looked at the RSI. It seems like it wants to kind of forgive down a little bit, doesn't it? But I'll just tell you, as acquisitions go forward at these different levels, if we're rebuilding like that, then I wouldn't trust the RSI very much. I'm just going to tell you, because we're kind of reconstituting it in line with the heavier accumulation patterning that was occurring here when everyone was getting into it. That's what this strategy attempts to do, is to reintroduce the accumulation strategy after you've had a positive price movement that is more in line with the pure bearish sentiment that was going on, because that's all that was going on. We went through kind of an aberration or a kind of a diversion in the retracement. That's fine, okay, that's fine. But then we're back on target. So what were we doing here that was crucial during these movements? We were doing exactly this. We were showing a good support in terms of people willing to further accumulate, and just the pricing support was phenomenal. So we have kind of reestablished that. We have gone down. That's fine, into the other levels. Those orders have been filled by the market maker. They've been on the books most likely, and they have been filled. I'm saying they've been on the books because literally they're on these exact levels of the Fibonacci, and we may have to adjust back to the 4-hour versus 1 hour, etc. But those are being filled. So if you have, I'll say this too, and we have to look at this, as a big picture deal. As we look at, what is this? Just subscribe. Thank you for the subscription. I appreciate that. I don't know what that little running creature is. Don't judge the channel on that. I'll change the theme. Don't leave either. It's just it's an odd thing. Hey, you just subscribed. Thank you so much. I appreciate that. I'll change the subscription notification. I'll get into the details tomorrow. Thanks for subscribing, and we'll definitely get you some positive. I don't know why. Just, if you guys like, I don't know what that is. It's not. We can change it. I can probably try and change it now. You guys can probably tell me in the comment section how to change this Streamlabs. Anyway, I'll do that after I get off tonight. I'll make sure and I'll change that. I'll make it cool. I'll make it something. Maybe we can throw up a cool picture when you guys do that. So as we look at, now everyone wants to subscribe. That's good. So as we look at this pricing action, let's kind of verify one thing. He is picking up these pricing elements. Okay, the more orders that we have in right here in this level. I have to move it. This little guy just wants to run all over everywhere. I'm wondering if it's just, are you guys doing that on purpose now? If you are, it's okay. Let me tell you not to subscribe right now. It's all right. Anyway, I think you guys are doing that on purpose right now. You may be unsubscribing and resubscribing just to see this guy run all over the screen. I can't even see what he is or what he's doing. Some little apocalyptic. He may be Walking Dead, huh? Yes, 9 kids. 9 kids, awesome. What is he doing? I have no idea what he's doing. I don't even like those guys. How do I change that? Hold on. I'm going to get into here. Do you guys know how to... what in the world is that, huh? I have no idea what that is. The home section. If you guys understand the, I have no idea what Walking Dead. I think that's a bad movie, huh? Anyway, I'm gonna change. See, now you guys are purposely doing that. That's fine. If you guys, everyone wants to see that, just continue to do it. He's walking all over. If he's walking all over the retracement, that's fine. If you guys want him to walk all over the bearish pattern, and maybe he'll turn us back into the bulls will wake up. Go for it. That's okay. We'll change that and put something uplifting and positive tomorrow. I promise. We'll work on that. They're just themes. I think they're weird themes for gaming channels or whatever else. I downloaded this. Okay. So, it may be a little bit off in terms of the timing of when I see and what I'm saying in terms of what's occurring, but I have seen that it takes a second for the stuff that you do to show up to me, or it's immediate, and then it takes a second for you to hear. We have a delay for content purposes to make sure that the content is good. So just to let you know, that delay function is there to make sure we don't have a malfunction on any level. Let's look at one of the facts here so that you guys can hone in on this fact. It does appear, okay, in spite of and it just becomes more critical. You guys judge this yourselves, okay? It becomes important as you look at let's remove. What we're understanding is that these different levels are being achieved. In spite of everything, the different levels are being achieved. Okay? You guys are telling me heavier at lower levels. That's perfect. That's the strategy. You know that. I would just say right now that the levels are being achieved. Someone could rail in with cash, heavy cash, and decide to make this a 30% event. And on some level, the exchange itself would have an interest in making this a 30% event. So you don't want to miss out on it. If you're already peppered into it, you don't have any concern. You won't lose any sleep at all, right? Not at all. So that's phenomenal. That's phenomenal. So everything is working. I'll just say it for the record that it looks like these levels are being achieved. It looks like the levels are being achieved. If you want to wait 5 days, it's uncharacteristic of all of you. Maybe that is what needs to happen. If you want to wait 6 days, maybe that's what needs to occur. Possibly that's what needs to occur. Is we wait 6 days and we smooth on down to this, and we have this slow little beautiful liftoff up to wherever we need to go. All right? If you guys have the patience, you're going to demonstrate that you have the patience. If the market maker doesn't have the patience, he's going to take off. And if he does, it's okay because you're already lightly involved. That's okay. You guys see, it's a good strategy, huh? It's a decent strategy. If you go lower, you have your insurance policy. I just say what we have in Harmony 1 is phenomenal price action. We just do. If it wants to get over, okay, if it wants to get over to the 0.618, and I'll just pull this up there. If it wanted to get over there, guys, on the weekly, it's still gonna look fine. It's still gonna look tough. I mean, tough as nails, like, yeah, of course we're in this, right? We're gonna bounce this sucker. I'm just gonna tell you too, because if you want to just bounce this sucker, you're gonna bounce all right on this deal. You would be literally, when I say bounce this sucker, you're gonna get this. I mean, you want to talk about a bounce? You're gonna bounce up to, you're gonna get a solid bounce on this kiddo. It's gonna be impressive. If and when this decides to really hit and bounce, that could be a big bounce, guys. You know that. So let's see what we got. What do we got? We'll see you at Pigeon Town. Be good, Spoof. Appreciate you showing up. Let's see what we have. Let's see what we have in the comments, you guys. What we have. You can't wait for it to hit the low levels. Okay, Michael, shout out to you. A pump at a time till they are all getting at least special interest coins. Interesting, special interest coins. Okay. Special interest coins. Interesting commentary. So you guys are still here. You understand the dynamics of you waiting. You have an order in. Here we go. Lan Yu has an order in at 13,650 and a substantial amount. Is that too low? Hey, I just told you you'd probably get picked up. You're probably going to get picked up. You know, based upon the pattern, the only thing working against you is the timing. I can't speak for the market maker. If I start to do that on a real detailed level, it's going to constitute not financial advice. It's going to, at some level, constitute kind of proprietary, maybe information, something like that. I mean, that's almost like insider information. The probabilities are that if you are at Lan Yu, the probabilities are. You guys are asking where's the best place to buy it. Kazik, hey Kazik, kifak, marhaba. I'd say the best place to buy it's crypto.com or Binance. If you can get Binance, crypto.com or Binance. I know KuCoin also has it. SushiSwap I think also offers it. I don't recommend SushiSwap. There's positives and negatives. We'll do a review of all the exchanges here soon and go through that. Lan Yu, who's a great member here, wants to know, will he get picked up at 13,650? Let's go to 13,650. Okay. 13,650. That's a good level. That's a great level. That's your heavier level. I'd like to say that, you know, out of all fairness to the market maker, he's pressed on time. Lan Yu, you're part of the patient crew that has done things the correct way. Given what's already gone on, I would say, yeah, he's going to pick you up. And I would say at the substantial amount that you have, if everyone has a substantial amount there, it's going to allow him to dip down and pick that up. And if you guys have gauged your interest levels appropriately, it will allow the market maker to go out and then sell your positions at a higher price. And when you realize the coordination effect, or what the coordinated role is of the market maker, you realize that you're able, the same way that he is able to coordinate a sale of what you have determined to buy and what he's been able to facilitate the sale of to you, of those positions at the 13.5, etc. He's able to coordinate the sale of those to all of his clients, to push those out to his prospective clients. Everyone on the exchanges showing whatever kind of a price increase he wants to as he tries to unload that volume. Okay? Through message alerts, through et cetera, et cetera. The price is going to be allowed to fluctuate up. He's going to unload those. Okay? That's a coordinated event that he's able to achieve on your behalf and on your collective behalf. Because it's a little bit absurd to think we have all of these preordained levels in here, all these orchestrated levels. You know, different pricing levels. Right now, the big pricing level that's been hit is in around 14.4, okay? 14.4, 14.5, and around this 618, okay, the golden pocket level. That's a big level. Now, collectively, there has been a level of support in around 15.5. Another level of support. What is this? 15? Yeah. Another level of support, 14.4. Another level of support, you're telling me 13.5, 13.7, okay? Now, collectively, you have the ability and you have the right, we have the right to talk about a collective, okay, a collective group strategy with the market maker. Why? Because he's going to collect all the orders and collectively distribute them to his entire population, okay, to his entire crew, to his entire, you know, he may have people working underneath him that go and push all these. He may have a department division that gets involved and bam, they're going to float this out to 200,000 people. So you're inside of this collective group that understands the pricing targets, which it would be unfair for us to say, oh, we can't get around and talk about those. I got to tell you, we can't talk about these levels of acquisition. No, we can't do that. It's in the program, man. It's literally part of the program that the exchange that's going to do the collective redistribution is giving us. It's what they want us to use. I don't think everyone understands that. So when you say, will we get picked up? You know, sometimes they pick up at the higher level, but these are the programs, these are the levels that they want us to use. Why else would they have them in the programs? Why else would they have these Fibonacci's in TradingView? Do you guys understand that? I mean, some people think, well, this is an orchestrated event. This is, this cannot occur. This is malfeasance. I mean, excuse me. These are market participants. We are market participants using collective functions of, a common logic and rationale applied to mitigate risk, maximize profits. And the only thing we're using is literally, the actual, as you see on your screen, the actual numbers that they're giving us and the technology they're giving us to enter into. Now, if we have the patience to enter in here, then we're using their program that they want us to use. Binance gives you this program. So don't think on the collective for 1 second, you guys that are still in here late at night, don't think for 1 second that anything we're doing is incorrect. Anything we're doing is, well, this is one of those investment clubs. We shouldn't be doing that. Are you kidding me? We are collectively using the program software that they have asked us or invited us to use, because once we sign up, they give it to us. They could have done anything. They didn't have to give us TradingView, right? No. So I know I have upgraded to the premium package. That's fine. I understand how to work the program, their program that they offer us. So that's the group. You guys understand? That's the group of what's going on here. We have agreed to enter into kind of this collective, different price entries with them. But it's we're literally sitting there talking about their price targets. It's their offering, it's their product, right? Yeah, it's their product. We're agreeing to use their software, which is showing us their target prices. So if we maintain this, pepper it up lightly in this first zone. Well, okay, let's go ahead just a little bit heavier. If we rationally walk this thing down with them along the way, how can we really lose on a good, well-founded, stabilized, kind of quality investment? If we're playing the same game that the market maker needs us to play with his numbers, how in the world can we lose, guys? But how we can lose is we can become impatient. We can become impatient. We can take bad strategies, and instead of peppering in on top, okay, we can be one of the ones that throws all the cash into it up top and just says, I don't care. I don't have the time to play with it. I don't want to put it in a limit order. I don't want to, play the market the way it's supposed to be played. You guys see that? If we play in line, so you're asking, is this too low right here? No. It's pushing the frequency duration. But I'll tell you, if the frequency duration needs to be pushed, the other side of this too is, hey, we've got a great Discord going. We got a great crew going. So if this wants to be pushed, I say if it wants to be pushed to 6 or 16, if they have that planned up, we may not be able to change it. We know that, right? As we get into heavier amounts of cash here, if you're looking at a fifth of your cash in and around this area, and I'll just say if you're looking at a fifth of your cash position in this frequency, okay, in this frequency interval, this price frequency interval, okay, where you have the leg up, 30% up, retracement, nice support here, dip down into. We've seen nothing but nice during this program. Guys, we got on here, and remember it was flat? Yeah, it was flat. This has been a good showing of an appreciation of this. Okay, it has gone, literally from the 14.3 to the 14.7. That's not much, but it's maintained that channel. It hasn't. It didn't have to. You guys got on early. It didn't have to. Okay, it didn't. It just didn't. It was here. You guys remember me talking earlier on, it dipping, it wanting to kind of go down. I said, no, we have the market orders in here. This is our next zone. This is our tier 1, tier 2, tier 3. This is tier 4. In tier 4, we start to invest more heavily, right? Yeah, we start to invest more heavily. Okay, and I start to use the term heavily because on the total aggregate that we have, we have maybe up to like 20% of our aggregate in here. We might have 50 to 60% of our aggregate here or greater. This might be the real heavy, right? But we tier in, okay? And the tolerance level, I say, the more orchestrated you are through this, and disciplined you are personally if you agree with the strategy. Okay, if this is your strategy that you adopt. It's used by a lot of heavy-hitting major players in institutional investments in crypto. It just is. All right, this is the go-to kind of approach that has been proffered, that I have learned from the interviews with the big guys. Okay, and my interactions over the years, etc. It's a good strategy. As this becomes more stabilized and as this pushes out, okay, it becomes, it becomes a different game, and maybe we need a little bit of a different game. Maybe we need a little bit different of an interval. This thing surprises you, though. You guys know this is the deal. I'm preaching to the choir because you guys understand Harmony One. It will light you up, kids, right? You will wake me up and it will light you up, right? Yeah, everyone just immediately like, it's lit up. And you all know that, huh? So it's fun to get involved in it. That's why we're involved in Harmony. And everyone celebrate that because it will just literally, everyone's getting woken up and it's going crazy. It's going crazy, and that's just Harmony One. That's what it does. That's why we like it, huh? That's why we love it. So, you guys know that. That's part of the fun. Everybody's like, yeah, that's what it does. So you want to get the good price, but you want to pepper in along the way, and you want to understand, okay, we do have a position here. And whatever your position is, you want to be able to have a heavier position. Now, I think it was Jan in the comments who said, my position is here. It's real heavy. Good. That's great. That's great. I hope it picks you up. I believe it will. It likes to pick up the heavy positions and redistribute those to all of its clients. And now you understand the role of a market maker. He picks up the heavy cash positions, and he facilitates those being redistributed at higher amounts of higher prices. Okay? But you can't always tell him what to do. You guys know that? Okay, what do we have? It keeps saying chart went wrong. Excellent. You're welcome, Eric. Peace out, Eric. That's cool. Good day, mate. What's up? What we got? Let me look at the comments real quickly. If you guys have any questions, I want to make sure I get to them. No, TradingView won't work for you guys in Binance. That's weird. It works here. Love the stream, brother. Hey, glad you're here again, Jim. Great, glad you're here. I just bought all my one shares at this price. Good night. For real this time. Well, are you scheduling in? Are you tearing in, Eric? He may just be tired. You get to the point, it's like, whatever, and then, I hate to say, you have to have a trading floor, Eric, or anyone else who's listening. You have to try and get a trading protocol and something you can schedule in trades. Okay, if you have the ability to schedule in trades and program trades, it almost gets to the point where you don't want to trade unless you have that ability. Okay, you may not want to trade if you do not have that ability to schedule in your trades, to place limit orders, limit on the amount that you are willing to pay. You designate now, you will pay X number of cents or dollars for at any point in the future. Allow them to pick that up and you get that so you don't have to watch your screen all the time. Otherwise, this becomes extraordinarily difficult, guys. So I want you to understand that that's a dynamic that you need. Yes, you can have all the discipline in the world, but you cannot necessarily just stay up and watch the screen and push and push and push. You can't do that. Entry point, Lita 99999. Yeah, you got that information by now, I think. Big cash on the table, always picked up, even if it doesn't drop for more than a fraction of a second. He always get the big money. I rarely see him pass up the cash. Later, smooth. Okay. Any other? I see the pump in a day or two. VeChain and One are even now. High usage in contracts. I think VeChain's up. I'm sorry, is VeChain up? I don't know. Let's see. I say that almost like it's a sin. I don't see that you guys are a taboo. It's like, hold on, you're talking about something that's up. Hold on, I want to talk to you guys because that. No. Not in this commentary. Not in our discourse. Not in anything. You guys have this is the donation right here. I'll put back in. That's the donation if you guys want to capture that. It's a pinned tweet on donation. I'm going to go ahead and put in the. I'm going to put in the. Let's put in the discourse in at the top. If you need to take a screenshot or anything of the of how to support, you can do that. Now let's do the discourse. Let's go ahead and put that in. So make sure you guys have that, because we have phone conversations, we do all kinds of things, and it's just important. First of all, that all donations to channel go through that Coinbase, okay, in Bitcoin. So whatever you would like to donate for our time, we want you guys to make money and it to be a no-brainer that this is fun. We want this channel to last, and we want a good group of traders. Well, shout out to Yoski, who has gave that giveaway in the Discord. That was phenomenal. Let's see what we have. Mike, you made a limit order for 12.78. Let's see where 12.78 comes into play. 12. All right, you're playing the under. You're playing the under on the double down into the zone, aren't you? All right. That's that next level. Michael's playing that next level, double down. Good job, Michael. You're playing the strategy, brother. That's the kind of strategy that wins. Is that long-term, no haste, long-term, come pick up my money and go make some money, right? And if you don't pick that up, if you do pick it up and you don't make money, pick up 3 or 4 times that and go make money. Go do your job, market maker. Because these levels become important financially and structurally for the market to continue, for this thing to continue, and it wants to continue. Okay, you'll see with Bitcoin right now pushing up through $60,000, etc. It wants to continue. There's so much money being thrown at this market. New all-time market cap high of $2 trillion. It wants to continue. It wants to thrive. It wants to keep going. So I mean, you're going to have to fight the 7 C's to get all this stuff to crash down. I mean, possible, sure, but I mean, it's raging, guys. The whole thing's raging. 2 trillion. I mean, it's phenomenal. You guys know that, huh? So anyway, that's not a tagline. That's just the truth. It's impressive to me. I find it impressive. It may sound like a sales pitch. I find it personally. On a professional basis, I find it impressive. That's a good question. What time is it? Yeah, it's probably time to get going. I wanted to walk you guys through these details so that you could, because we're running into. Hey, what's up, Joseph? I appreciate the guru comment. Got out of Pundex to study this chart. Good. I appreciate that, Michael. This is a good chart to study. It's a really good dynamic in terms of regenerating positive sentiment and stability in a market after exiting a channel. You guys will never forget this, okay? I like that, Joseph. Harmony one time, you get that right. You'll never forget us exiting this channel, okay? And you'll never forget, hopefully, the strategy that was employed after a retracement, the strategy that has been employed, which is also confluent, okay? It is in coordination with, let's say, foundationally, the science involved, the basic ratios, the basic percentages of how pricing action functions. It's literally in harmony with, it's in concert with all of that on the overall trend, okay? And that's important because at the same time, it's reinforcing what? The most positive pricing dynamics that you have achieved or you have sustained. And by that, I mean that you have achieved this stability within here. If we did not have, I'm going to say this, if we did not have the subtle approach, and there's a reason why this has been done, okay? The overall, the aggregate conforms too well to the Fibonacci to not implement this, okay? In my own opinion, it's an opinion, okay? Educationally, it's an opinion based upon my studies. So to employ this and direct it upon the exit of a channel which has been frustrating people on a price, it's very functional. And I hope that we experience something here with a price action on the upside. I may be sorry I've ever said this, but I hope that we can remember and refer to this time to see at least the value added, and I know we will in this regard, at least the value added as you all decided to streamline some nice little pepper of money. It doesn't take much, you see. Just a little pepper of the money along here. Just look what you did, guys. Because this could have easily gone where? Back into that channel? No, taboo. Taboo to go back in that channel. Instead, you guys have slowly walked this beautiful price action outward. Look at that, guys. Look at what let's just slowly, very professionally walk this on out here. We don't mind picking up some bigger orders now. We discussed that, no problem. We'll pick up some larger orders. We don't mind touching this greater level of interest. We don't mind that. Because on the timing duration, okay, we're getting to a point where, I'll tell you the truth, we've had such a nice, long, slow stroll, it's becoming interesting as to whether or not we really have enough time, okay? Enough time to, really reach any kind of really lower levels. Now, we'll put in, because we're disciplined and we trust the market maker, right? We're going to go ahead and keep our strategy, okay? We're going to keep our strategy of acquisition in and around this level of 14.45, in and around, which should have been implemented if it hasn't been on a double down or triple down basis. I would anticipate it would be by anyone who understands risk, elimination of risk and maximization of profits, okay? We want to acquire more, yet we still want to participate. Just pepper it in. Just give that market maker something to kind of run his clock on, okay? His little Rolex. Give him something. This automatic winder, it's flowing smoothly. Just automatic. It's beautiful. Beautiful. Just let that just run sideways in time for a minute. Let's get out of this channel. Look what we did. That's essentially what it did, is get us out of the channel. So yeah, let's go ahead and let's kind of trust the market maker. That's fine. But look what we're doing now. It's almost like I have to say, now this can always change. It's almost like we've decided to kind of walk along this direction some more, right? We've kind of decided, well, we're just going to hang out and take our time like some professional investors and not get anxious, not get angry because it's not performing. No, we're kind of enjoying this little walk. Yeah, a little price walk out to the right. We'll dip down to pick up some orders. And now we have another little walk. I guess that there may be some more orders. You see that? There may be some more orders here. I don't know at this level. No, I don't know. I heard there were some more orders around 13.6, 13 something. That's fine. Nice weekend stroll. Huh? Now what you have against you as a market maker in a directed time kind of component to this, where they have price targets, right? They have price activity. The overall market demands an interest. So it's programmed up against you to some level, but you have maintained an interest so well at a lighter level. You're not overexposed in terms of, and it's funny when you say you're not overexposed now, what potentially in terms of the upside, you're not overexposed to additional profits, because we do want to maximize your profits. But looking at the risk, while we want to minimize your risk, we want to minimize risk and maximize your profits. So there is still a risk at the higher levels always, okay? Always of additional deterioration in price. That's why you go heavier as it goes, as it drops. We go heavier. We follow basic economic principles. Lower price, higher demand. Higher price, lower demand. But you still have our interest. How would it not have our interest at all? You see, that's the other thing. How at this higher price, and once it gets into a reasonable level, how at the higher price would it have no interest? I mean, you guys have studied, you've looked at economics, huh? It is a demand curve. The higher the price, there's less demand, but there's still a demand, right? We're going to put this kind of on an economic market demand curve and let this thing just work out. I think it has a better chance of returning us to the positive, to the upside. And as we look at this, it's just, you guys are seeing that play out. You know, you're seeing that play out. The people who wanted to collapse through the floor, there are people, you know that, who want the bargain. You know, they didn't get in at 2 cents, I'll tell you that. And I think they see the potential of it. That thing goes up 30%, right? It went up 50%, right? So they want to get in. They want as many coins as they can get. So some people are bargain shopping, and they are bound and determined to get this thing to the golden pocket. I'm going to get this thing at 10 cents. You know, that would be phenomenal, guys. That would be really phenomenal if we let's get this sucker at 10 cents. Like, that'd be phenomenal. It can happen. It can happen. It's a structurally important number. If up here, if I told you guys, check this out, I'm going to do something, I'm going to get you guys this coin at half price. Like, whoa, really? What are we going to have to pay for that? You know, well, that's not the business we're in, right? No one's in that business of driving down prices. If you set your demand there, it does make sense. If you have more, okay, if you have a higher level of demand at a lower price, you're just part of the normal market function. But at this level, just recall what we've done here. We have marked this territory as potential bull reversal, okay? And I'll say just a recontinuation of this bullish trend outside of this retracement channel, okay? And this may have been necessary after Binance did what they did with the restrictions, etc. But we have marked this territory, all right? And I like this. We've marked this territory in line with the Fibonacci's. And you guys will never forget the Fibonacci accumulation schedules that we have put into practice. Okay? You're getting a lesson in, if you haven't already gotten the lesson, you're getting a lesson in accumulation and buying the dip and restructuring probably your portfolio and your order basis. Some of you may be waiting completely till the end. The ones who are waiting to the end to get their perfect price, I'll tell you, you guys understand this, the ones who are waiting, okay? Some of you are on the sidelines. I'm not buying it. I'm not doing anything up here. I'm talking about peppering in a little bit of activity. Why? Now you see why. Even you guys who are waiting here, you wouldn't have been able to potentially wait there at all. Now you think it's convenient. But I'll tell you, some people are going to pay their dues right in here. Just a little bit, not much, just a club entry fee at the, it's kind of like a, the nicest like country club that's like a public park in the world. I'll give you here you go, this little tip for the door. You guys are doing a great job here. A little tip at the door, no problem. I'll give you a little tip at the door up top, no problem. It's like the nicest public country club in the world. Anyone can go there. It's better than the private clubs, right? Just a little bit of something up front. Just a little light, just pepper it in. Because you see what it did? It brought you out away from this channel. Okay, it makes possible a different trajectory for those who are going to be heavyweight and say, yeah, that's what we want to happen. We want that to occur. We're going to do that so you can get us out here. No. You be a classy person, right? You be a classy member of the community. You go to that nicest country club in the world as a public country club. No dues or anything, right? No, you just pepper that money in there. Now you see what the other people who did pepper the money in have done for you is they've created this territory for you. So you're going to have to question, you guys, with the strong wallets and the strong discipline. Oh, we disagree with that, or we disagree with the other strategy. We're just going to pick it up down here. I'm going to tell you, you guys know this. You may not be on your turf. You're on somebody else's turf right now if you did not adopt this strategy. And you just know at some point with the turf that the turf may decide to kind of move without you, okay? And not in terms of a rug pull or anything else, but at some point, if you have that strategy, you're going to rely on other people and their coordination, everything else. You don't want to be a part of it. And everyone's a part of things in different ways. But I'm bringing this aspect up. You guys who set this stage, someone set this stage. And it may not be the guys who have the hard orders in down low. They may technically not even be a better trader at this standpoint, because to the extent it's allowed to go to the upside, okay, who has facilitated that? Well, look whose turf. Someone laid this turf right here. That's important turf. Okay, as we look back and whose turf is that, we kind of know whose turf that is, right? I'd say we know whose turf that is. That's the disciplined approach. That's the, falling in line with a strategy and willing to just pepper in. That's, again, the nicest country club, public country club you can find. This is the nicest investment we can find, right? Anyone can trade this thing. That's beautiful. We just got to pepper just a little bit in, So that's what the dynamic that's been created, okay? Now, this is the other dynamic that's been created kind of down here since we've kind of started in here, all right? Is that an effect of the time squeeze? Possibly, yes. Now, as we look at this dynamic, we're right on the line of increasing our positions. You guys know that. On an exponential level. Again, peppering this in. It's important for me to see this hit right here. Okay, it's very important for me to see this hit. However nominal this hit was, because this becomes textbook. For everybody in this community, this becomes textbook. Okay, in and around 15.5, textbook. Now on the other chart, this hits between the 1 and the 4. We match up on every level. Period. Some are looking at the 4, some are looking at the 1 hour. We match up on every single level thus far. But this is textbook right here. Accumulation, acquisition, laying down the turf. Boom. Accumulation, acquisition. This matched up perfect on the 1 versus the 4. So I'm not worried about that. Some of you looking at the 1 hour, some of you looking at the 4 hour. I can't get into your systems and tell you exactly which one to use. We'll match it up back and forth, and that's fine. A little of your own opinion and work. I like to see you're doing your own work. That's important. It's crucial. Right here, what has this turned into? This is turned into textbook, guys. Textbook. And what are we doing? Well, we're pushing. We're pushing away from. We're laying turf away from what? From this channel. Boom, boom. Right? And at some point, that price action's going to pick up. Now that's the question. The pricing action. We may be sorry we ever did this, I always said, we may be sorry we did this, huh? Because we're creating a textbook function. Okay? And I mean sorry because who knows? Maybe this thing will get, too many views, or maybe, your names will be all over and a bunch of people will watch what you wrote or something. Who knows? I don't know. Who knows? Maybe we won't. Maybe we'll be really happy that we did this, right? But that becomes textbook because it's hitting our Fibonacci retracement. And you guys are learning the Fibonacci strategy on the acquisition side. Okay? That's what you're learning, is to schedule in, peppering in at the top. You pay it's a public course. It's no charge to play it all, to enjoy the country club. Well, come on now. Come on, we're classy folks. Look at this. Look at what we built. Yeah, look at what we built. Yeah, we're real classy folks. Look at what we built. We could have built this a little longer. I can tell how much people listened to this or not. You see? Right? And what happens? Well, the further we go out here, we be bulls. Right? Yeah, we be bulls making money, huh? And so I can tell when the community is listening and when they're doing, still listening, still crucial right here. Crucial. Okay? Critical, crucial. We can if you want to match this up exactly. Where's the top here? Okay. We can get this around. These are going to match up on the 1 hour versus the 4 hour. I think you guys flipped in between that. That's fine. Use the 1 or the 4. I'll flip in between them. That's whatever you guys choose to do. We'll take a consensus vote. Crucial right here. Boom. I like to see that. Now, if you're on your, I believe, 4 hour, which we are 4 hour, I love that. Boom. Beautiful. Now this. Again, at this level, and this was at the level of 14.9. Why is it crucial? Because, guys, we had a lift. We had that next level, okay, of dynamic. And what is this proving to me? You guys, turn on your thinking caps. Turn on your memory bank right now. Because remember how we're light in the green? Everybody's like, yes, 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 sir, yes, sir. I'm saying that to you guys. We're light. I mean, we pepper this in, right? We pepper it in, guys. It's nothing. I'm telling you, it's just coordinated, in line, coordinated in line with the technology they're giving us. We're using their technology. Beautiful. This zone, bam, bam, just a little bit. Operate with a demand curve. Higher price, well, lower demand, but there's still some. There's still some action there. Right in here, yeah, there is. There's some, right? And look at what we did. What I do like is the dynamic that you'll see here. This dynamic, take a screenshot. Someone take a picture. Why? Because at this level, we show what? We show a double down of this level. We show a double down. Now we have to look at a different time chart, etc. But somebody put some orders in. A few people decided, enough people decided to put a double down in here to prove a point of what? You guys take a picture. Take a picture of your screen right now. Do a screenshot. Why? This proves, okay? This proves what? We double down here. What do we do here? We triple down. You sure? I don't know, because if we double down here, we'd show a little bit of a, if we put some orders in here, we'd show a little bit of a rise in price. If we doubled or tripled down here, you see, we'd show a much more dramatic rise in price, wouldn't we? Yeah, we sure would, huh? It's enough, huh? It's got us back what? Back up into the other zone. It's going to play around. It's going to dance around where it wants to go. But you see what it's flirting with right now. You see that effect. Now the market manager, the market maker, not the manager. The market manager is probably different than the market maker. The market maker probably has a manager, a VP, director, etc. They deal on broader based institutional levels. We'll go through all those foundational issues, etc. as they're laid out. We'll have a bunch of different discussions. You guys can teach as well. I'm sure you guys are intelligent. You know, you guys have been through. You're able to run your portfolio very well and your limit orders very well. Now, as we're doing this, we still exercise a great degree of patience because we know this is still developing as we continue to run out of this time interval, okay? It becomes more pressing to where you're going to start to wonder. People are starting to wonder and now understand what the market maker can do. You guys are very wise because you understand what the market maker can do, in addition to what you could have done. Because now you're looking at, I'm going to just ballpark say 5 on 15, right? Right, you're going to get about 5 on 15. You're going to get a fifth of a penny. I just want to do the math on this quickly. I don't want people in and out of this. It's going to be annoying. That's not part of the routine. Yeah, because you're about 3%. That's fine, huh? Right when I pull it out there, huh? Right when I pull this up, it wants to just jump up for me, right? Sure. It just give you a little bit of a better measurement, huh? You ever wonder about that stuff? You pull out something to measure and you just, it's going to go up another notch for you to get a better measurement, huh? That's fine. So, yeah, you're about 4%, 5%, okay? What you're doing in this meantime, okay, is you're cooperating with your trading community and with the market maker in order to facilitate where this price action is going. In terms of the nature of your investment down here, you're reinforcing, and pay attention, you're reinforcing your larger positions here at a higher level to effectuate their occurrence, okay, and to effectuate your position here. If you're a bull in and around the 13.6 mark or that 0.78, the lower level of the Fibonacci, if you're a heavy bull there, it would sure be nice to see your bullish conduct beautifully along here, along the way, to support the market. And to the extent you don't want to, you are operating to some extent on someone else's turf. Because I'll tell you, Binance can take you sideways 8 ways from Sunday, guys. Okay? They can take you sideways. They don't have to let you make 20 times your money. Do they? No, they don't. They should. Well, they should. Yeah, they should. Yeah, they don't have to do anything. So in terms of peppering this in and creating some collective price achievement on the levels of what they give us in their own program to work the market with them, guys, this is how nice markets are built and great gains are achieved. You guys understand that, right? Markets are built. Great price actions are constructed. Now, we know how he constructs them? Are we going to work with him as a community to help him construct them? You see? Are we going to facilitate out of this channel? Yes, we are. We're facilitating right now with purchase orders. Getting sideways, over. We're moving over out of this channel. Okay? Now we see the positive price dynamic. Still in flux. Getting soon, guys, getting soon to a level. Getting soon to a level where he may start to say, okay, I want to make this market. I want to start to make this market. I'm going to begin to push these orders. I have these push orders. I want to sell these now. I'm gonna raise the price a bit. I want to sell these. I see people are participating. I want to make this market, huh? I may want to reward the individuals who are waiting down here. I may want to reward this market function and ultimately drive price in the direction that they have set up. Because along the way they're facilitating a beautiful, price action that we can accommodate. Because some of this, I got to tell you guys, some of this you get into. Why does the price fall? Why does this always fall apart? Because how many charts have you seen? Just look at this. Listen, guys, how many charts have you seen that they're parabolic up to the roof? Just a steep north face of Everest, right? It's just impossible to get up. You just can't. And what's the problem? It's unsustainable. People start to churn into this and churn into this. It becomes unsustainable. You can't even get into placing the order from the market maker's perspective. Everyone gets angry. They limit things. They cut them. They shut off the market. They literally stop the orders. Have you thought of why that occurs? Why does the market maker literally cease all of the orders? We'll do an entire lesson. I'll bite my tongue before I get into too much detail about that. Literally. Why they stop orders. Why they cease activity. But look at what's going on here. Look at the nice, smooth, methodical style of, and I'm going to bring up this level right here. Okay, the nice, smooth, methodical within the channel, within the Fibonacci channel. Okay, the perfect, okay, levels of acquisition. A perfect, again, compound. You see that compound? What immediately goes up? Compound, beautiful level of acquisition. Now I think you changed again. I'm gonna bring this up so that you know. I believe that you changed. I almost know that you did. Okay, you changed in between. And let me readjust my fibs. On these fibs, be careful because you have to redraw them. All right, you have to redraw them. You always go to the peak. All right, you start at the base right here. You go to the peak. So I know that you guys, and you see here, we're okay. We are okay on this level. We've reconfirmed on. I think since we've gotten into this, it seems like people have gone back to the 1 hour after I stated that you need to be on the 1 hour. We've been on the 4 hour, which is conformed essentially, but you see that we are firmly on the this area. Seems like it was taken off on the 4 hours, right? On the 4 hour charts. Fibonacci's changed slightly. Make sure in terms of your entry positions that you understand which one you're on and why. If you have alerts set, etc., based upon any type of price appreciation or anything, make sure that your alerts are set to the time frequency interval with which you have market orders, etc. Okay? You don't want, just be careful about that stuff. And that's why it's nice to have these scheduled in orders, these market orders. It's not a problem. That's easy, London. Why? Because we can read the same technology as you. You guys are like, yes, we get this. This is their technology. Of course we're going to support them at a higher level. We're market participants. Of course. This is the nicest public country club, man. Pool, nice food, everything beautiful here. We like this. Oh, are you going to make 30% on our money? Hold on. You're gonna multiply our money for us? Hey, I didn't know it was that kind of club, right? That's a real good club. That's a real good public course to be able to trade on or be able to enter into. Yeah, so we want to support some nice little consistent market activity along the way here. But show them an increased value and walk this in the direction it needs to go in. All right? So the direction it needs to go in is up. Yes, 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 it needs to go up. That's what they want to occur. I can't say that as matter-of-factly as possible. That is what they want to occur. The market maker wants his book to increase in value. All right, his overall book of all of his concerns. Call them financial concerns. He wants his book to go up in value. Right? Yeah, the management team, CZ, wants his all of his coin interest to go up, not just all the ones he holds. Can you imagine that he holds every single coin that Binance sells? These guys hold these coins. Can you imagine they want the coins to go up? Can you imagine who all may be buying or not, or watching the price activity of players in the market just elegantly put forth a trading strategy and in a disciplined manner say, yes, we're going to use their technology they offer to be a participant and to lower our risk and to maximize our gains, to achieve participation. Let's start off participation within the pricing interval. Okay, we're going to participate within the interval fully. We're not on the sidelines, right? Fully. Zero at top. Okay, the first level interval, lightly pepper it in, right? That's the strategy. As we go down, double down. From something very light, it's no big deal. A little bit more, yeah, a little bit something, right? A little significant, something significant. How significant? Well, about double down here, triple down in here. As soon as you hit that level, bam, you're hitting up. Okay? Okay. So, let's see. As we get into here, now guys, this is where it's heavy. And you understand this is the heavier point that you're talking about. The only question left, and it's probably late, I just want to know you're fully participating in this market. I had to catch the other phone here for a second. Sorry about that delay. But you understand that you have to catch this entirety of this market. You're responsible for the pricing action on it. You have done a phenomenal job. I don't need to coach you guys anymore because you get it. You understand you need to be involved in this pricing mechanism, that you are of service essentially to the market maker and allowing him to go in and sell what you're accumulating. Even right now, what you've accumulated, even at a light load, okay, that goes into what he's able to offer to other people, right? Yeah. Now you are creating a pricing event here, right? You just are. Now that's okay. That's all right. It may be the trajectory effect of whatever's attempting to occur. Now what I think is interesting, to a level, to a degree, okay, is that this moving day average has been flirted with. It has been collapsed through, and there has slingshotted up a 30 to 50% slingshot, right? Big old rocket went off, right? Yes. Wham. Now we have flirted with this again. We have carved through the 20-day moving average, right? Yes. So now we are going back up, and we did mention that. We mentioned that down and around here, and now we're moving back up and trying to climb on top of that. It would be an interesting phenomenon to see if it just doesn't like that, if it just doesn't like being below that. It's possible. After this kind of a walk, that's a beautiful little walk, huh? And it's on our channel, okay? It's on our specific line, Fibonacci line. It is not on or along the 20-day moving average. So when you look at the moving average, we always say, well, that's important. We have to look at that. Well, look at this. Guys, we just drew this. This is a calculative phenomenon that you guys wonder, should we use this or not? Should we trade on this in incremental levels or not? Look at it. It's not a question if we should or not. We are. The market is. We, the market, are. Yes, we, the market, are trading on this interval. Right? Okay. So, if people choose to take this in a direction of, I got to get down here. I'm just, period. I don't want to participate in it along here. What you've done is created a dynamic here. We on the channel have supported the Fibonacci structure to the point. That's what they gave us. We've decided to say, okay, we'll use it, right? We'll support the price structure up out of this channel. We want this to make money. We want to support the market maker, the exchanges, the overall community. Dare say that the holders who've had this since 2 cents don't appreciate the traders on this one, because what we have done to date is walk this up out of the channel. Beautiful. Okay? Beautiful. Okay, so as we get into this, let's just understand this could have derailed. This could have gone down immediately. This could have been soft hands and people who wanted to turn their back and go find a different investment. That didn't happen, guys. It didn't happen at all. To huge credit, okay? To huge amounts of credit. It looks like it needs to look. I think it looks good. I like it. We did dip a little bit to get into some different ideas. Now, as you look in, kind of where's your dipping and where's your dipping done, right? When are we going to get to? Don't worry about the details. I would say you're going to be pressed to flip a quick, I'd say 10% on this, because you're running into a major time interval. I say you're running into a major time interval. Okay, we're expecting it to go somewhere soon, right? You can see RSI. Okay, you can see that. That's fine. Okay. I don't like the RSI on this. I don't like the relative strength index. I believe it to be a little bit too skewed and too relative. Let's see what we have. I want to just review on cheers to the community. Yes, Harmony's moving faster than the competition. Let's see what else we have in the comments section. I want to review the comments. Let's see what we have. Well, okay. Well, from what we do see, you guys understand the dynamic that's going on. The most recent, I may need to get my other platform real quickly. The most recent significant question we have is someone who has an order in at and around, say, 12.6. 12.6. That's the bottom of the golden pocket, right? That's the bottom of that. Let me get my my Lenovo kind of screen share. One second. Okay, excuse me. Okay, we got that. Let me pull this out so we can understand the dynamic real quickly. You guys see that you're being pushed out here further along to the right, okay? That's a nice dynamic that you have created. You're all responsible for that. You have done your own homework, not financial advice, because I'm not telling you all of the risks involved. And people don't understand that. I'm not here to tell you the risks. I'm not here to have you sign off on arbitration agreements or educate you about state or federal laws on investments. I'm not here to do that. If that were a big part of what I were doing and I were, adamant on doing that, I might just, be behaving a little bit more like someone who's giving you financial advice. That's not the case. So you guys know to get that information, you're going to have to go get formalized, signed off on financial advice, right? Yeah, nothing wrong with that. Go get that information from them. I'm going to talk about pricing structures and educate you on some of the details as they apply to the markets, and that's just what I do. It's what I'm doing with the crew. So it's nice to have the crew listening to that. It's integral to success. So let's see what we have. See if we can get, there we go. All right, I've got my other screen up now. That should behave. Let's see if it's behaving. There we go. let's see. You guys are funny. You're playing with the demand structure of it right now. I'm reading. If it does drop, I'm going to buy a massive bag. That's good. That's what you need to do. Now, if it doesn't drop and it's higher, are you guys willing to pepper in? Are you peppering in along the way at increased levels? Okay? Are you saying, yeah, I'm going to buy in and around this level? Not in the red. We never buy in the red. The first one down, yeah, we may have $100. Just 100? Yeah, we may have $100. What about the second? Well, we may have. And I mean, once it hits, okay, once it hits the second level, we may have 200, okay? Just 200. What's the total there? Well, that's about 300. Well, what if we double it? That's 600 in this level. Okay, 600. All right, that's fine. What about the next one? Well, we're going to probably double all that. We're going to double down, triple down. The next one, maybe, I don't know, for 1,600, maybe 1,800. That's the complete aggregate. We're going to double it all. All right, 1,800. What are you going to do at the bottom level? Well, at the bottom level, I guess we're going to probably do like, I don't know, something like, let's look at what we got. Maybe like, what is it, 5,400? Something like that. Let's see, 1,800, yeah, 5,400. That's the scale on the overall broader interest level. It may be $54 instead of 5,400. It may be 5.4 million. But what that does is give you a graduated, okay, an increased level, okay, at which you can visualize and do your own figures, manage your own risk, look at what you're determining for yourselves. But you're determining the fact that you are heavier weighted on the bottom, but still involved in the entire process. I'm talking about, yeah, just pepper it in real life, guys. Give this market something to feed on. Give this market maker something to look at and be like, well, we got an interesting little level of, consistent consideration walking this thing sideways. Huh. Okay, you're gonna just walk this thing kind of sideways. You're acting like people who are, not at the same levels, but you're interested like you're operating in a strong bull market. You're giving them indications, the market maker indications, that you're operating in a bull market and that you're bulls. Okay? Now, he may know you're bulls way down here, I guess, but now you're acting like bulls. I mean, with $100, think about this. Yeah. With $100, you're operating like bulls like that. Just a slight little amount of money. And it may be 10 grand at the bottom, maybe 50 grand at the bottom, whatever it is, just pepper in at the top, boom. Maybe 500 at the bottom, it may be $10 at the top. I'm not kidding, it may be $10. It may be $1. It just may be something along this level here where you're looking at the 15.5, this first green line on top here, after the pale section here. Huh? Yeah. Some action, some price action, coordinating with the levels that the market maker has given you through the exchange software. Bam, bam, bam. Just nice and pepper up top. Look at that, the sideways action that was created. Okay? That's our strategy. And it's really not ours, it's the computer strategy. It's the financial strategy. It's the calculative mathematical strategy, the Fibonacci built into all these programs. So let's use it. Let's coordinate with it. Let's say, yes, we agree with it. We like it, but at a light level, So as it goes down, yeah, we're going to double that here. Yeah, we're going to double that. I'd like to see that more. On the other chart, we have to flip back to the 4-hour. Okay, on the 4-hour, you guys hit that perfectly. Okay, very important. I have to redo the Fibonacci's. We'll have to make a rule about the 4-hour or 2-hour. We may have to vote on it, or the 1 hour. See, that's probably running the 2-hour in between, right? What do we got here? What do we have? Okay, so getting into, and we have to pull this down, and we have to get the scalpel out, literally fine tune this bad boy, because I want to see, yeah, they did it, we did it, okay? I wouldn't have minded seeing a little bit more investment along this line, a little bit more, but that's okay. We still have people participating, not much, just a little bit, participating at this next level, you see? This is where the market participation becomes bullish. Well, at every level, people are buying. It may not be a lot, but look at this. At every level down there, they're entering in orders. We have them waiting. Look at this. There's cash flowing in. What can the market maker do with that? Well, the market maker can go out and generate more volume through sales. He can push this to other people. He can hold on to this inventory for a moment. There's more out here. Okay, well, we'll fold this inventory down into the next price level. We'll shoot up a bit, and then we'll decide, once there's been enough accumulation, we'll decide to go out and maybe we'll start to market this, right? Through pushing, say, notifications, it's up X number of percent. Starts to show up on hundreds of phones, thousands of phones, computers, people involved in the marketplace, right? Yeah, a lot of programs, okay? Trading programs start to catch wind of the fact that there's an accumulation going on, okay? It's bullish behavior that's going on. And at this lower level, you've already kind of expressed, now there may be more now that understand this philosophy, and okay, so as it goes down, double or triple down, then the aggregate, doubling down that, okay, I see, yeah. Because what are you doing? You're getting a better price per coin, okay? A better price per coin, and if you triple the bottom level, I'll just tell you, if you triple the bottom level, or if you really go in a lot heavier at the bottom level, you're gonna get to the point where anything you could have lost on the upper levels is completely outdone, okay? Particularly when it's well coordinated, and coordinated in that you're willing to operate within the structure that they give you in the trading program. Literally, I mean, and this is as coordinated as you can get in that you're using their program, Instead of just fly by the seat of your pants, just go ahead and invest anything you want to. Well, whenever you want to, however you want to, it just doesn't matter. Just coordinated because you're using their program. This is their program. So work with their program. You did beautifully, huh? Up top on the 1 hour, phenomenally well. Beautiful peppering in. I haven't seen that from you guys. It's phenomenal. Extremely well done. Here, again, perfect. Could have been a little bit better, but it's okay. It could have been absorbed into the price structure as well. We can look in terms of exactly what happened. We can look at that. We can diagnose that if we need to. Here, just beautiful. It's a higher level, right? It's a higher level of orders. It doesn't have to be much, but every time that thing goes up, you're just like, that's just nice, right? It's just nice. So when we hit here again, we may see another rebound. It may be one of these additional walks along. People down here may say, you know what? I didn't play at all. I really didn't play at all, and I understand what London's saying now, because this turns into someone else's turf, huh? Do you never want to worry about the direction of something? Do you just want to hop into the next buzz ticket affair where people are making money? Because if that's the case, I'll tell you, it takes a while to learn another price chart. It takes a while to learn another investment. You can be very quick with it. You can be a quick study. You can get into that, right? You can do that quickly. But a lot of people focus in on specific charts. They get to know something very well. The psychology of the participants, the psychology of the market maker, etc. People focus, especially something 20 times your money, people begin to want to focus. Like Harmony One, huh? Yeah, people want to focus. Yeah. I mean, that's just, that's the nature of this, the beauty of this entire thing is you get to know the instrument quite well, and you don't want to just give that up, right? You don't want to necessarily just move on, say, well, that's it, we're just moving on. Yeah, that is a fact. So to the extent you guys recognize that, beautiful. That's kind of a key, okay? What I just said there is kind of a key towards your overall profitability. I just put a key in the box there. You guys know, because you have to understand and you have to know what you're trading. You have to understand the chart and the psychology, understand the frequencies, all this stuff you have studied along with me for hours. We have been involved in this. We enjoy it. It's fun. It's why we're involved in trading, right? But just to say, well, whimsical is the day and I'm just going to move on. We get involved in this. We support the community, the market action, the holders, everything. We support our own positive interest. And the people down here now who have not looked at this strategy and have said, well, I just have a big order in down here. I don't care about accumulation along the way. They're now seeing, they are now convinced almost, I would imagine, that, you know what, I have to say, yeah, I see how they kind of walked this over here. And that's a nice facet. They've walked this over here. They've hit their target. They've hit their target again. And I can see how this is increasing the chances that you're going to return to a bullish market. The guy with the strategy may know what he's doing. The guy with the strategy is a big-time investor, big-time institutional owner, multiple, let's say in trillions of dollars, okay? So I'm making use of that strategy. Some of my best friends have used this strategy, okay? I've used, I go a lot quicker on maybe a more unhealthy strategy, but 10, 15 seconds in and out with seven-figure, multiple millions of dollars in and out, swing trading through high pressure kind of stuff, guys. That's my background with what I have done. So this is a nice breath of fresh air to understand the nature of this. Like Harmony, I just like the name, I like everything, I like the returns, and we kind of, I want people to recognize as they're in here, and they don't have to compromise, but see what this strategy has gotten you. And let's go back to the 1 hour. As you see the hit, particularly here, for a fact, that hit, because that's our level. That's the market maker's level. That's the exchange's level. Well, it hit here. That's our level. When has it been our level? Since the very beginning. Since right up here. We called that out. These are important to double down, triple down, bam, bam, increase cash. Yeah. Start very light. We pepper in here. The red zone, we don't buy anything, right? Yeah. You got it. That's right. So that's been our level the whole time. More cash at that level. People want to know, well, come on, London, how did you really call out this level? We need to redraw the fib a little bit. This level, you got 30 or 50%. Yeah, we sure did. We talked about it for a week before it hit, right? Yeah, increased cash, big time increased cash. 600, 6,000, 60,000, 600,000, whatever that is, an increased cash position, okay, in respect to what we already have in the market. We're always ready to double down. That gives us our insurance. That's going to cover anything that could have been lost, right? Yeah. Okay. So when we look at that, we're participating with the market. Okay. We like to see this activity here. This is just a textbook confirmation. Okay. And we're just going to go real quickly, then I'll go back to the other time frame in terms of, that's beautiful. That's another slight investment. There's some people with some orders on the books. I know that for a fact. Telling the market maker, we're here at this level. Hey, we showed up at this level. We want to say hi. How you doing? Letting the algorithm, letting the trading software know. I want to let you know we showed up. We're at this level. We're here. We're participants. We're not just fly by the night. We're not the people who you need to advertise to. How about that? On your trading software, this might get you. These people who are dug in down below everything else, and they only want their price. They don't want to support the journey here. No, they just want to be down here. Well, that program may start to teach you when to buy or when to sell, because it may be treating you as somebody who just imagines themselves to be kind of a non-participant. This other thing, the program's going to figure out. The exchange software is going to figure out. Now, this one is going to get the right kind of notifications or alerts. This one, the one who's participating along the way on an increased scheduled basis, he gets it. This guy's going to make money, huh? This discipline's going to make money. So it's interesting to me what kind of notifications you'd get if you're just waiting down here, and that's okay. If you guys are structured out with high-tech platforms and rigs, you can kind of get away with that. Just don't want to go down that rabbit hole too far. So that's beautiful here. Then the double down, triple down approach here. Bam. Beautiful, beautiful. Now on the 1 hour, let's look at that 1 hour just to reconfirm once again. Okay, now we have to redraw these fibs. Always be careful on your fibs, which time frame you're in, and that you haven't lost your pricing. Okay, because you can lose your pricing. See, you have to move it up. Things move when you move your time frames. So always be careful. You have to maintain this stuff exactly. I don't know what that is. So when we do this, this dog that has gone for a walk here, guys, that's a pretty nice walk, huh? That's a nice walk, huh? That's a nice walk. Look at that. 1, 2, 3, 4, 5, 6. Essentially 6. And we zoom in and perfectly get the scalpel out. About 6 hits up along here. Bum, ba, bum, ba, bum, ba, bum, ba, bum. Just market participation. That's all it is. Market participation. Look at that, huh? That's beautiful, huh? I love charts. I love to see market participation. This is the kind of stuff that is just beautiful, man. It's just beautiful. Now, it's beautiful also because when the price goes down, you're very lightly involved, right? That's what makes it beautiful. You're very lightly involved. You expect it to go down to pick up your additional heavier acquisitions. Your double down acquisitions, which are already scheduled up. You expect it to maybe go down to pick up your heavier acquisitions. If it ramps up after this, you're still involved a little bit. There's no rush to make, huge excessive returns all the time. This thing's hitting every 3 or 4 days. That's fine. Let's recompose the character of it. Right? We talked about that in some of the previous videos. Let's recompose the character of this. We need to recompose the character of it. So we can do that. We've been doing that. It looks like that is going on. Right? That's exciting. That's exciting that you guys are capable of doing that. And all we're doing is capable of using this structured software that they give us. You guys realize that? We have to be capable of using the software that they give us, huh? So yes, we're using their software. And the market maker understands that software. Okay? So this is expected, in and around you guys having a larger position following the strategy. Okay, the strategy we've been discussing. Having larger amounts of cash available and input at order levels as we go down these levels. Mixed up in between 4 hour and 1 hour. We're on the 1 hour now. This 1 hour shows the complete confirmation here. This is coincident on both levels. This level varies on the 4 hour versus the 1 hour. It hits perfectly on the 4, not on the 1. So that's okay. Some people put their orders in on the 4 hour and not the 1 hour, oddly enough. Okay. So it shouldn't matter. Don't worry about the calculations behind it. Don't worry about it. I'm on the 1 hour right now. So as we look into the details here, let's make sure. Let's see. Let's make sure. I don't mind moving this exactly over. That's fine. I don't mind that. That's fine. So when we get into where we're currently at the larger amount of investment, which just temporarily went on. Okay, this temporarily kind of went on. We're supporting the market function right now. You guys find a good creator, you want to support them, right? Yes. They help you make money, you want to support them, yes. If you can support something that'll help you make more money, it's a good investment, So that's essentially what we're doing here with walking this back up. And, you're quickly getting into, here you go. Now you've participated with the market maker, correct? Yes. Now the next question is, what will you do in response to what he does? Where do you fall in line with the market maker? Okay, because the market maker has received orders from you placed upon our pre-designated. This is this level here of heavier investment. Okay, 14.5. Okay. Now that 14.5 cents, all right, that's a heavier investment. It's double from the double from the double. Okay, very light on top, doubling that, and then doubling the full amount from on top. Willing to double down. All right, it's not a gambling strategy. It's a stock market strategy. Okay, it's an investment strategy. You cover all of your potential losses from upside. Very, very lightly involved on top. Very lightly involved. Very lightly. It begins to compound as you get into better prices. You're willing to pay more and expand your position. Okay? That makes sense. Now you're getting into the effect of that right here is that what will he do and what will you do in response to what he does? Because the market maker will take your orders. He will take your orders and your volume and your money. He will say it's time and the software is program, the execution of the trading program will take that and begin to disperse this out to people. It may be the people all over the world, guys. You have no idea the number of platforms that all of this is on. Okay? So they will take this and automatically generate sell signals or essentially bells and whistles, notifications go off in terms of the potential clients that they can sell this to. Okay? So they will go and market this via the platforms and the applications they have established. And they will go and sell this now. They will go offer this and show a 5% return. So that 5% return, that it's going to borderline a 6% return. Okay. Now, if you went in heavy enough, you can say, well, come on, London. I just put in I just put in, I got to tell you, I just put in, instead of 600, I put in 6,000. Okay. So a 6% return on 6,000, it's, that's decent money, What's 10% on 6,000? That's 600. Yeah, so I just got 5% on 6,000. So I made $300, I just made $300 in 10 minutes, or in an hour or 2 hours. I had that pre-set up. I just wanted to do that because it's more money. Okay. Do you want this to be the pricing event? I'm just curious. Do you want this to be the pricing event? Huh? Because I said we're due, right, for a pricing event. You guys know that? I was like, yeah, he said that. Now you can choose, okay? You can hunt and pick and choose, but at some point you're playing on somebody else's turf, okay? Because who built this infrastructure for you right here? I want to talk about this. Who built this infrastructure? The guys that got you out of the channel, out of this downward channel, right? Yeah. So at some point, you can be your own bad self if you want to. I'm not going to tell you how to trade. It's always your decision to take your profits. No one ever went broke taking profits, unless you kind of get left behind on a few things. All right, and it's tough when you're looking at like day traders and what you're telling them to do or not to do, and some of them are playing with enough money it becomes difficult. Okay, when you're throwing around 5 to 15 million back and forth with 10, 15 seconds or 10, 15 minutes or within an hour or 2 hours. It's just the amount of stress that is gone through is difficult to manage. It's difficult to bear, and it's difficult to watch anyone go through it. So I understand you guys that are trading heavily. I don't discount that fact at all. I'll tell you, if you can relax a little bit, I'll tell you, I've run guys like you, okay? I've run the best that there are, okay? Literally the top guy at that I hired out of, he had been at First Boston, okay? Number one guy on the trading floor. Okay, the guy rocks it, okay? You want to talk about a trader, he rocks it, okay? I tell you, from working and kind of managing the best in his capacity that he was in, okay, private hedge fund I'd set up, I can tell you, even with the very best, the best advice I gave him that allowed him to win was just, man, if you can just relax a little bit, just chill. You're gonna win. Just relax. You don't have to gut it out like that. Just relax. This is just money, man. This is just a market. You're very good at what you do. Just relax. People pushing for the 5%, the 10%. I'm gonna get the 20% today. Then we're gonna get, on the million. I just got 20 grand on the million. I'm gonna get 5,000 more on the million before I go to bed. I'm gonna get whoa. And we get in that mode because we want to maximize our returns, right? Yeah, we want to. We want that 5% on the. I get 5% on the mill 4 times a week. Then you're gonna be off to the races, guys. Big time off to the races. I've managed people like that. I've been in charge of people like that. The very best on the street, from the street. I'll say from the street. And the best advice they need is, man, it's gonna be okay. It's gonna be fine. You mean the returns are enough that, yeah, you're fine. You're fine. And believe it or not, guys, I'm going to tell you, the returns, when you do the calculations correctly, the returns, and you may adjust the numbers a little bit, but the returns from being fully involved and kind of relaxed with your orders, etc., yeah, those are going to be okay. You're going to see, it's like, okay, it's going to be okay. Yeah, it's going to be okay. You're in a good market, and you're acting like we're just, we're scraping up pieces, off the concrete of, whatever. We just, get your fingernails out. We got to get this stuff up quick, whatever that is. I mean, the dynamic is there's not enough. There's just not enough. And that's the whole market psychology operates on that. There's just not enough. We have to get more. We got to get more every day. It's got to get more. What's the next best? The next best one's right in front of you. We're looking at it. And we're trying to develop kind of a mentality where we can, kind of peacefully go through it, and have a good experience with it. So that's the best advice I was able to give, and I know that's what, say the king trader from Wall Street that I hired direct, okay? Best guy on the street, guys. What did he need? He needed to be told, hey, it's okay. Hey, it's okay. So it's that push mentality, and surprisingly, the best guys on the street, you'd be surprised, they're not 500 miles an hour in the mouth. They're not swinging Jim Cramer. They are not, guys. They are not bulldog in your face, bull. They're very sophisticated. They're very intelligent. They're, very well composed, educated, and they just understand the market dynamics. But they're smart enough and they're geared up enough towards profit that they just need to be told, it's okay, it's okay. And the worst thing, they never want to lose an opportunity to make money, right? That's just, and they learn their lessons. This is just a strategy, okay? This is a strategy here. We're getting what we anticipated, okay? And I'm going to bring that back up because what did I bring up? It was about maybe an hour ago, and I've stayed up. Oh, there it is. All right. And it's right there. Where did we have it? You guys remember where we had it? You guys can look back, right? Yeah. Right there, right? Yeah. That's where we had it. Let me make sure that's the right one. We should have a bigger one over there. Yeah. Okay. So we put that literally right there. You guys review the tape if you want to. Just rewind in the deal. Okay. So that's because this is going on right now to the extent, and because, as I stated and did the frequency analysis, we are running long on time to not have any type of a pricing event, okay? This likes to move within a period of time of 2 to 3 days, right? Essentially 2 to 3 days. And if we're pushing this, we're at 3 days, we're going to be at 4 days. We're going, like I said, as we get into this, it's going to be 4, 5, 6 days, right? Now that exceeds the normal interval on Harmony 1 for returns, okay? It just does. Let's put some something beautiful in there. There we go. Get that blue. 5 days. Okay. Okay. But that's exceeding the standard. If you get into the mean, standard deviation, et cetera, of the time intervals, we can go through the calculations. But the standard, the average, let's say the average, and the price inputs are going to show a trajectory in and around, 4 days, 3 days. There's another maybe 4 days, 2 days, 2 days, 3 days, 2 days, 1 day, 3 days, 2 days, 2 days, 1 day. Okay? So when you see that, the reason I was able to put this up here and let you know there's going to be some sort of a pricing mechanism. There needs to be some sort of a pricing mechanism, not to create an anxiousness amongst you at all, but to inform you that the expected interval, the periodic interval within which we expect, based upon the pricing history, okay? What we learned from the pricing history. Let's go from peak, or from let's go from leg to low. Okay, this is the beginning of the leg to the peak and to the low. Okay, so we're going to measure it along the top from leg to low. Okay, that's what I want on there. 2 days and 2 hours. Okay, you guys see that? From leg to low, we're at 2 days, 2 hours. Okay, now let's do another from leg, beginning of the leg. Okay, from leg. Well, this is kind of a little bit messier, isn't it? This one is messier. Let's go back to the basics. That's when Binance was messing around with things. Yeah, these are just easier components. Let's just go from essentially we're leg to low here. Essentially, now this is 4 days, right? This one's 4 days. All right, that's 4 days. This one is 2 days, right? Yeah, that's 2 days, 4 days. This one is, 2 days, right? So as we do kind of a, an analysis, another, 2 days. Now Binance gets involved, they have some sort of a fallout. Technological fallout. May have been overheated, who knows? Maybe the whole Maybe the computers were smoking, right? They're printing too much money. Who knows? We really don't know, to tell you the truth. This one, 4 days. Okay, so we have 2 days, 2 days, 4 days, 3 days. Okay, different price actions that we're looking at. So it's just telling me that in the context of looking at a few options for 2 days and 3 days, etc., we're getting into something that's looking like, well, we're already 3 days. What are we going to run into? What are we going to run into? And that's why I put the rocket around here at 4 days, straight up the middle on 4 days. Yeah, you're going to run into a situation where it looks like we're going to be running into a timing issue. Let's see what we have. Let's get into now this upward trajectory. Okay, so that event, this pressure that I involved you guys in with looking at the kind of this pressure situation where the overall interval here, the duration, within respect to this nice support line that was established, and this next nice support line that was established, and this next nice, trading element here that was established, okay? These lines of support, beautiful lines of support, compounding and interest that's been implemented, okay? That they're creating a tension with the residual amount of time left before an anticipated and calculable. It's specifically calculable. We have roughly estimated. We've gone through the kind of the ballpark statements. Now we've gone into the technicals. We have estimated them. Yes, we have. Have we done a full testing of it? No, we haven't gotten scientific with it. We have on the individual increments of what those durations are. We have not computed them beyond that in the aggregate for an average or a mean or a deviation. We haven't gone to the calculus of it and the statistics of it per se, but we have gone to the specifics of it. On the specifics of it, the specifics are suggesting, okay, the art of it, the art of the matter suggests that we're in a flux here that is going to potentially want to achieve a pricing dynamic. And for those of you who are new and haven't listened to that portion of it, that's what we got into. There's kind of an elasticity here, kind of this demand curve, if you want to say a demand curve on the product, and that elasticity is essentially going to push this thing up. Okay, now we said that in and around, when it was literally here, so it has pushed it up. I talked about the type of event that it would be, whether or not it would be, and now what we like these types of elasticity events, right? Highly elastic, high movement, right? Yeah, we want high levels of movement. That's right. Yeah, we want that 36 to 50% level of movement, right? You betcha, right? That's what we want. Everyone's like, yes, sir. Yeah, me too. I'm like, yes, sir. Where's the market maker? What are we gonna do? We want that same here, right? You got it. That's what we want, right? That's how we stay involved in this pretty little story, Harmony One, right? Isn't that nice? Yeah, that's another 34%. Sir, yes, sir. We like that. All right, now we like this one too. There you go, 53%. That's right. All right, you want to keep going down here? It's easy. Those are the types of events that we want to see and that we have seen within this dynamic. 60%, right? Yeah. So those are the dynamics that we've seen on the previous intervals. There's huge velocities coming in, 50%. So these have been accustomed to running up 50%, no problem. What did this run up? I know for a fact 50%. This last one. Why? Because we called it perfectly. You guys know that. We perfectly called it. Perfectly. We're just using the program. That's all we're doing is using this program. So we anticipated that we would be running into this stretch. We asked the question as to whether or not we're going to run into a smaller pricing event. The smaller pricing event being the equivalent of 8% here, okay? This 8% within what time frame? If you guys will recall this debacle, right? This was just a debacle. I have to say that. That was within 2 days and 18 hours, okay? Now, we didn't find that here within 2 days and 18 hours, okay? We've already been, I'm just going to say, We have already, and that was misbehaving up there. We had problems with buying it. We're 4 days into it, right? So this is it's a different animal, right? Everybody's like, it could be a different animal. The good thing, if you're involved in it already and you've been following the investment strategy, the coolest thing is, well, we're already covered, right? Yeah, you're already covered. All right, because you're already involved slightly, at light levels. You walked it across, you got involved, just, kind of pepper that cash in there. Put a few orders in, no big deal. Right at this top level of the Fibonacci. Yeah, $100, equivalent there too, maybe 1,000. Doesn't matter, maybe 10,000. I don't know what your investment level is. Could be $1 million, right? But underneath you have twice that in this next level. Yeah, we're going to double down in there. Oh, I see. We're going to walk it across, make sure we stay out of this channel. We're going to use the program structure that the exchange is giving us. The exchange is giving us this program to use for different levels of support. Okay, good. So then we go down here. Okay, so we're going to take the aggregate amount up there, the 100, say the 200. If we double down, that's 300. We're going to double that. Okay, so that's like 600. Yeah, or 6,000 or 60,000 or 600,000 or whatever that is. Remember, we moved on this swing. Remember this. We moved on this swing. How much did we move? We moved, I want to say 300,000, 300 to 500, no, 300 to 500 million. Yeah, that's right, 300 to 500 million of a swing on a $1.5 billion concern. So 500 mil on a 1.5 bill concern, right? That's easy. That's easy, right? Done. No problem. We did that. Boom. Cool. What's next? All right. Well, what's next is that doesn't phase us. That's ordinary business. No big deal. We should expect that level of consistency, perfection, accuracy, notifications, everything. You guys are already subscribers. I know that. But we are looking at whether or not we can suggest that within a period of time, a longer period of time, now, as opposed to even a 2 days here, we're going to have a positive pricing event as we try and dictate, or we try and literally dictate to each other, as we try and bring this up. What is the level of pricing event that we can expect? We don't care. We just don't care. If it's something that gets Harmony back into a bull roll like this, a real bull, just a rocket ship up, we're not going to be able to control everybody. I want to say that. We can't control all the traders and everything else. But what we can do is we can try and achieve that through just our strategy. Now, we're kind of getting there a little bit. We're kind of getting there, all right? To the extent that will hold and continue to go up, that's going to be for the market maker. Well, looks like I might be cutting out. Well, if I'm cutting out, you guys let me know if I'm cutting out on the stream. I've got, I think I'm running down on battery on my Lenovo deal. I've got a Lenovo glass product, and it doesn't like to always, if it's not really charged up, it's got some issues. So irrespective of that, as we look at this procedure, this pricing procedure that's taking place, I want to bring up the RSI real quickly again, okay? Let's bring up the RSI because I want to see how inconsistent it is. And I want you guys not to rely on things like the RSI and the determination of what's good for your strategy on this financial concern. All right? We've done a whole lot without any RSI, I'll tell you that. Now, it looks softer, right? And you can get into kind of the nature of the move and to gauge the degree of acceleration to kind of understand the way it's being guided, right? You can see the level of acceleration, which is the change in price over the period of time it takes to change that price. The degree or the measure of the change in price over the period of time. That'll give you the acceleration in the price. So on this event, we had a huge acceleration, right? Yeah, we had a huge acceleration. So, and we capped out in and around the top, right, of the RSI. Now, we've done similar into around here. We may recreate this type of an event, right? It's possible, but it doesn't look like we've achieved that much acceleration, okay? So it's relatively weaker here than it is there. But let's go ahead and draw that out, because I don't just want to recreate another event like, like a 12%. I guess if we have to and get close, I guess that's okay. But then what happens? Well, everybody falls back out. Everybody wants to sell. They want to make their day trading in and around our golden pocket. How dare you day trade around our golden pocket? Okay, that's exactly what's happening. Why? Because that's hitting the 0.618, which is the golden pocket, that between 0.618 and 0.65. Okay, that's a 65% retracement up to a 0.618, or a 61.8% retracement from the low as measured to the high. Retrace 61.8 to 65% from that point. That's called your golden pocket. Very important structurally for any type of investment. It just is. That's the way it goes. That's the way the market works. Don't ask why. Just adopt what they tell you through these trading programs to understand that's what you need to learn to operate with. So it has hit let's just call it they call it the golden pocket. We'll just call it golden pocket. That's it. But it's hit that because that is here. All right? That's literally here. It hit that here. Okay, double touched, perfect on the double pocket, or on the golden pocket. Yeah, essentially a double touched. So I can't tell you not to make money or not to take profits on your double pocket, on your golden pocket, right? What do I always tell people? Don't let your what? Don't let your diamond hands do what? Burn holes in your golden pockets. All right. Now you understand why? Because I'm enough of a trader. Okay, I'll get you into, and me. Okay, I just like to educate people. Okay, I'm not your trader. I'm not giving you financial advice. I used to own a hedge fund, but I love trading. That's just what I do. My deal is, do not let your diamond hands burn a hole in your golden pockets. All right, why is that? Because diamond hands just want to hold. That's all they're going to do. They're going to hold, period, right? So what that means is exactly what's going on right now, okay? And I have to be true to form. I have to tell you guys how that. I'll say something sometimes you guys don't know what that means. This is what that means, okay? Look, now if you're involved at a higher level and you're playing along with the whole routine here, and you're additionally continuing to support this community and the market maker, this becomes a more interesting discussion. All right, I'll just say it becomes a more interesting discussion, because I'll say, typically I will say, do not let your diamond hands, okay, burn a hole in your golden pocket. Now, what does that mean? Well, your golden pocket is right there. All right, that's what was achieved right there. All right. So that should be an important statistical mathematical level, and you'll see you literally bounced and reconfirmed out of your, you bounced on the downside up to the upside, and then literally up and out of your golden pocket. Let me adjust this slightly. Now, I know which lines need to match up. Is the difference when you're pulling this over or adjusting your program specifically to view this. Okay, I'm not making these match up in line with this, okay, W formation. I'm not doing that. The program is giving me that, and I know it's giving me that. So some of these lines you may think match up a little too perfectly. No, I know whether or not they do and whether or not they need to be brought into a different time frame. That's just it. So, and I know when I zoom in, it always gets more difficult. You have to get the scalpel out. So let's see if we can get, let's see, we're a touch high on this. Hold on. Let me drag this down just a hair. I can't stand when my charts are off at all. That should be right on. Okay, so what this means is you reached the floor, okay? You have reached this coincident factor, this golden threshold rule, wherein you have attained the 61.8. The 61.8 retracement over a beautiful time period, guys. And see, when it's done this way, look at this. You're thinking about retracing the 61.8 on the aggregate, and everyone is flipping out, right? You're flipping out. Everyone is just going nuts. Why? Because that's going to put you down. Where's this? Down into, where's the 61.8 on this? Let me make sure that I do not mislead anybody. Let's do it on the, let me clone this. Let me pull this out. Let me pull the golden pocket out. We're going to apply it to the overall aggregate. Let me just clone this. Wait, undo that. You guys will like this discussion because it will show you kind of the larger paradigm. Let me just come here. You have to be careful when you're customizing your program because you might not ever get it back. I don't mean to say it like that, but you can have a very difficult time resetting the program details in terms of how they come out of the box and what you decide to do with them in terms of the modifications. And some work very well and some don't work very well. And other people recommend that you change them, and sometimes you should not follow their advice. Let's take this on down to the, there we go. That's ballpark, and I'm just gonna say ballpark, okay? We're gonna have to, I'm gonna have to clean this up on the 4 hour. We've been on the 4 or the 1, now we're on either, okay. So when I pull this out, I want you to say, when we talked about going back to the golden pocket on the larger, okay, now that's this yellow labeled, concern down here, in and around, was it, I think we talked 10 and a half cents, right? When we talked about doing that on the aggregate, everybody's flipping out. Everybody's going nuts. We're losing all our money. You're talking negatively, all this different stuff. Okay, let's put that aside, because that's a key ratio. Let's put that over here. We've gotten to that multiple times along the way, on the way up, but no one wants to get there on the aggregate. They just don't. They refuse to think that it needs that when they're shedding and bleeding cash. Okay, they're bleeding cash after these episodes. Bam, bam, bam. Too much cash. I mean, it's a phenomenon. People get involved with too much money and they make it and they want to keep it, and I don't know what they do, but that's okay. That's okay. It becomes chaotic. Let's get involved. Let's look at the fact that now it hits it within here. Yes, I mean, it's the same level that you just saw up top with the overall slope, the same level of retracement. It's the same right here that we just hit this smoothly. And we're like, seriously? Because it doesn't feel the same at all, does it? No, it doesn't feel anything like that, huh? This is really smooth, huh? This is really nice. This is something we can kind of get used to, right? Pepper it in along the top, no big deal. Just, okay, here you go. This is a beautiful way to build a price action. We barely even felt this. You guys understand that? We didn't even really feel this, huh? Did you guys feel? I mean, it wasn't uncomfortable. It wasn't anything bad, huh? So we've hit that key level, right? Yeah. And what I mean, typically you could say, it's my saying, okay? I made this up. Don't let your diamond hands burn a hole in your golden pockets. Because you can, why don't you guys interpret that? The first interpretation is, if you hit your golden pocket and you go up on it, okay, now you could really go up on it, right? Really go up. But don't hold on to it past the point in time to where your profits get eliminated from it, right? You see what I'm saying? Those diamond hands, you hit the golden pocket, that's half of it. Now, if you got those diamond hands, be careful, because it could be, it could be different. On this situation, it could be different than on the aggregate, right? Than on the aggregate, on the overall, right? If we showed this level down in here as being your golden pocket, if you were to get down here, well, maybe diamond hands is good for a while, right? But maybe not for like the whole while, right? You're not just going to hold on and hold on. I mean, it may be important for the trajectory of the price. It may be a great place to pick up additional product, additional Harmony 1. But you guys you see the analogy, huh? And you see it can also work a few different ways. Just don't let your There goes my shifter. Don't let your diamond hands burn a hole in your golden pocket. So, and that can be viewed a few different ways on the way down as well, okay? So we're seeing this pricing event, okay, in line with what was stated. So you guys know that you're on the right, kind of path, channel, etc. in here. That yes, we're getting a price action. Is it that much different than the price action that we kind of already received? Maybe not. It's at more of a critical level. We did get that same level of just slight activity here. What's that? That's 4%. Okay. What's this? We're getting into. Well, yeah, guys, we're at 6. I mean, we get 6, 7, 8. We get into that. This becomes really something that the market maker is more likely to go ahead and promote. That's 6 point, I'm a ballpark around 6.35, okay? So he's about to go hop shop that around, okay? If he's not already done it, he's willing to shop that around. Now it's the dead of night. It's 3:38. We're the hardcore traders here, right? We know what we're doing. We know how he's going to take advantage of that. We got in. We meaning the market, all right? We got in at the golden pocket. We decided, okay, great. We're going to go ahead and enter in larger at the golden pocket at the 61.8 to the 65. Those are where our orders are. The market maker decided to bypass this. Now, this was perfect along the line on the 4-hour, perfectly hit on this next level. Increase, doubled down. We doubled down all of that. Essentially, we've tripled down by this level, by the 61.8. We're at, what is it, at $1,800 or so? Okay, ballpark, $1,800. We do have other peppered in investments up here. That's okay. What that's also kind of designed to do is create a dynamic where you're going to make more money on the amount invested here when it does spike, even if you want to take your profits, okay? Ideally, there's a solution to that, okay? But you want to get into a frame of mind here to where, yes, you can take your profits on the larger amount of money invested, okay? No problem. You absolutely can. That's your prerogative. You count on, and the rest of us who will say, no, I'd rather just see this thing solidify up. I don't want 10%. I'd rather see it, and this 10% becomes crucial. If you want to talk about, because I have said within the last 12 days, some people have multiplied their money by 2. You're like, oh, I don't know. I don't know about that. We have to see that. It sounds too good to be true. All right, man. I gave you XRP at 80, right? Yeah, it's what, $1.50? Like, go do the math. It's it's going to be whatever it is, down to 130 now. That's fine. It was $1.50 yesterday. You're going to get there. You listen, and you pay attention. We're probably going to get there. It's not a difficult market. It's in a bull market. So as you look at this, the solution to this on the standpoint of wanting to capture that 30% gain is you have to measure whether or not you need the 10 now or not. If you want to count on, in your overall, as we look at the overall potential, do you want to count the 10 and book a 10 now? And say, we got another 2-3 days, that's fine. I want to book a 10 right now. We got to get another 30 with another 2. We might make it down to the real golden pocket. Okay, you can do that. You can. There's nothing wrong with that. Now, what are we going to do? We're going to hit a bigger level of investment right here. Okay? The market maker is going to decide how big of a concern he wants this to become. He took your buy-in levels, which should have been, now everyone agrees with me that this should have been light along the way, kind of a double down, a little bit more, but not much. This, about double down, getting into it a little bit. Now this double down everything up in here. Now you see, if you're sitting at the poker table of life in the form of the Wall Street or in the form of your investments, now you exactly see what I've been telling you exactly. A multiple, and you look at that tweet that I sent around, okay? Twitter is The Kingdom, TheKingdom. Search and look under people, go directly to The Kingdom. It is flat out The Kingdom. That's us. You follow us, okay? I put out a detail on this today in terms of the levels, okay? The multiple times that this gets into. Times what? Double or triple? Times what? Okay. Follow the Twitter, okay? Just write a note on that. Also the Discord. The Discord link is in there. It's at the top of it's the pinned comment, okay? Yeah, people are excited now. We've got a breakout. Good. It's good to see that. Huh? Shout out. Yeah, shout out to you guys. Let's see. You're looking at target sell price, not a huge amount, this and that. Everybody pushing vet, that's all right. Once you guys, it's all right, but you can do vet in the Discord. You guys can do vet in the Discord. You can talk about it here. It doesn't matter. This is probably the top crew right now to talk with. This is probably the top group to talk with. Keep it professional. All right? Keep it very professional. So when you look at this, where you're gonna have to ask yourself if you want to book 10% now, or 5 to 10% now, if you want that and you want to double, or you're comfortable with just 230s. Because I tell you guys, some people, and it's probably the top 5, maybe top 10% of good traders, not everyone in the group, but the top 5 to 10% of good traders multiplied their money by 2 times. I know this between here, okay, since the 27th of March, since the 27th of March on through today, April, we're on the 11th, yeah. So during that 3-week time frame or 2-week time frame, and we've gone some days out since then, but during that time frame, okay, during that, it was 10 days. I think it turned into 12 days. During 12 days, I know people doubled their money. On what? On something that was going sideways and retracing. We doubled. Okay, because we called this. We let you know about it. So notifications, yeah. Plug in, yeah. This is the group. It's a good group. You guys make it a good group. The science makes it a good group. The technology makes it a good group. So 30%. Then we got into, well, what about this? What about this right here? Because that was the problem was that was like an abnormality that developed due to some outside, non-discussable issues, right? And so, yeah, those were like non-discussable issues. Is all I want to say. That's something we just don't want to revisit. That's 9%, right? So see, you got 9% there. Very, very planned and executable. Okay, it was very much of an executable. Let's go into here and just kind of see what that was. Let's see. I want to do a retracement on this to give you an idea. All right, let's get into, so I can pull this down and we can do a comparison to, yeah, that's lower rung stuff there. That's the last effort. And again, that was our quadruple down when we literally talked about that. And the point in time we had called this perfectly. We literally called the duration of this down to the hour. I mean, literally, I don't know if it was more specific than the hour, but it was on the chart on here. You guys look at the old video. It was, that was perfect. So in terms of capturing that, yeah. Now, if you sold on it, I know some people did. They made money, okay? It fell into a free-for-all because there were just some issues. There were just some issues on it. And nothing we did, nothing you guys did wrong at all. We couldn't have prevented it at all. We cannot unwork, bad magic. I'll just say that. Sometimes you run into something like that. So that was clearly identifiable. This one, clear target, 10%. Clear target in advance. A double down. Not much money, a double down zone. People doubling down. Another one, bam. 2 10s, okay? So in between the 30 and 2 10s that you had, you doubled your money, okay? 30 is expected on the that is essentially, that's a repeatable function of this. And the 30 was really 50 depending on how you took it or how you approached it. So I want you guys to know that, okay? Literally within this 12 days on the channel, all this other stuff, that's easy. We're talking in chat rooms, we're doing different stuff. Everybody's going to multiply their money by whatever percentage. Everybody's going to get 2x, 3x, 5x. Everybody. I'm not talking about that. I'm beating the odds. We're beating the odds here, okay? We're beating the odds in terms of while it's going sideways and retracing, you're doubling your money. You bet it. You betcha. That's what we're doing. We're playing off the consistency of the frequencies of the previous moves, period. Very easy. Predictable frequencies, okay? The changes in price structure and the periodic nature of them. We are predicting precisely within that. We capture that, we capture the 10, we capture the 10, we capture the 10, we capture the 30, spot on with all of these literal, pre-directed moves there at the price targets, specifically at the price targets. So that's where you get is you just made, and I want you to get in the mentality, you just made that. We weren't scheduling in. We weren't playing a hard retracement like this. We weren't going and doubling, tripling necessarily in at this level. We were just doing it on this larger level, right? Yeah. So now it's a little different. Now you've seen that we can double money in 10 days, 14 days, right? And you see exactly how, right? You know exactly how. We just hit the golden pocket, right? Yeah. So you see that. We just made 30. And you just made, all right, you're at 6. Maybe you're at 6, you're at 7, whatever. You entered in at the bottom level of this golden pocket at the 65. He picked up your orders, right? He decided, okay, I'm going to pick up from the, he's going to pick up the gamut from the full. And I think it bounced along that full gamut. If I'm incorrect, I remember that chart wrong, but I rarely remember charts incorrectly. And we need to pick that up a bit. But yeah, no, he picked up everything from the 65 to the 61.8. As expected, okay? So this is the demonstration of the golden pocket in terms of how you guys can always remember this. And again, like, I can't say I need it to coincide with such and such. I never need to say that. What needs to coincide with is the value, okay, that you attribute to the fact that this is a key figure here. Now, it would not have been as important. Recognize that it would not have been as important had we not established a different playing field here. Okay? So some of you just decided to get in at the golden pocket and that's it. Now you're going to be looking at some people that set your floor up, right here. They just set your floor up. They just walked this sideways for you. And I'm just going to tell you, we did this. We, the market, literally set this floor up for you to reestablish a bull pattern, a bull trend. You know that. Yes, people know that. That's a phenomenal supported retracement. That's when people are willing to put in a little bit of money, okay? Starting to hit in this area a little bit more. Okay? Down in here, a little bit more. Let's say a little bit more down here. Just peppered enough. Just keep that line going perfect. All those orders, 6 different lines of bam, 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 bam. Love that. That's quality right there, okay? You've just seen how we doubled within 12 days. Okay, what are we going to set up as we get out of this trading channel? How are we going to get this sucker back into bull mode, right? Because we like that. I mean, it's nice to trade and make 2x in 12 days. That's nice. It's also nice to buy, hold and go ahead and make it 2x, 3x, 4x. It's no problem. Now, as we get into that, I bring up because you want to know, well, should we sell? The people who want to know, should we sell right now, are the people who just got in at the golden pocket at this price target of 14 cents, and they're going to ask that question, and it may, I don't know, it may be a situation or not. It may turn into something that's being realized, or you may already be seeing people sell, or they may decide, you know what, that's okay. Let's ride this out. Let's go ahead and ride this thing out. I can't change what they're going to do. People with program trades and going forth, and they just want to make a couple grand tonight. They want to get on with me here or with someone else, or just on their own computer, and they want to make a couple grand. I can't change that. That's just what they want to do. Or they want to make 20 grand. I can't change that. That's it's a great investment instrument. So that's their right to do it. I do know that we set the floor. So in setting the floor, do understand that if you're not taking advantage of this, whatever 5 to whatever percent it goes up to, if it gets 10 or whatever it is, just understand that the market maker and the exchange, etc., understand that your interests need to be satisfied. Okay, I understand that as well. We're trying to satisfy that through walking the sucker out of that channel smoothly taking it along a little ride, getting it out in this direction, and people are going to want to know now, well, if this doesn't hold, if this rocket ship, and I said if it reaches, we'll turn it into a big rocket ship, right? Yeah. You're going to wonder, well, if we do drop off from that, where do we look at things? Well, that it's up to you guys. You can re-engage along with this reaccumulation pattern. If you've exited out of this, the people who exited out of this probably aren't going to reaccumulate here. So they're not playing by the rules. As much as we can walk this along the road here, these people don't want to play by the rules. Are those people within our community, or are they kind of externalized and they're just going to play any retracement that they see and automatically set up an order when they see a spike in price on 15 different coins tomorrow? And no big deal. I'm just going to set these purchases up. I want 5% on each one. I'm just going to blister it out. Whenever they hit, that's fine. I'm going to go ahead and pick up that 5% on these 6 coins whenever that occurs. Okay, that's a strategy. You can make money that way, right? Within the group here, the dynamic has been on our pricing targets that you want 10%. 10% you're happy. So I don't even know if that qualifies right now necessarily for to fit within your what I would say is attributable to you. So yeah, if I were to put it through the detection office, I'm no detective, but they have detection offices. I wouldn't necessarily detect that you guys are after just a quick return yet. If this gets up to about 10%, say yeah, if you can get that back up to, and that would look a little different, huh? We'll see what it wants to do, we'll see what it wants to do, and we'll see how much cash you put in and how much the market maker wants to run this. Now, when you get into the issue of oversold, I want you guys to know he's constantly throwing, if there's a movement like this of 5%, it'll be on the books. It'll be on literally he'll push that out to his potential customers. You'll create the 5%. The market will create, the demand will create the 5%. He'll push it out and create additional buy orders based upon the news. Okay? They can hit that hammer down. They can really slam the hammer down on that, and then you can get into a position where you are, those orders are too much, right? Or they're not enough. You can get into something where you're oversold. You can get into something where you're overbought. That dynamic, when you don't always understand what relative strength index is, you need to understand that there are real hard orders, etc., that are coming in just programmed. Like let's say, for instance, your just your own direct interaction without being solicited to. You can understand when you start getting solicited to, when you start getting notifications, that things change quickly, right? Things can change quickly. And so this dynamic a lot of times is showing you what the exchange is doing, what he's doing, and how people are jumping on the bus, all right, or jumping off the bus, etc. It goes down, a big press event, it goes down, everybody jumps off the bus. It's down 24%, everyone wants to get out, right? It's that market psychology he's playing with. But a lot of people don't understand what relative strength even means, right? They build that strength, the overbought, oversold position, through pushing out notifications and potential purchase or sale positions, buy or sell positions to their potential clients. That's how they do that. So you have your kind of hard orders, particularly the kind of the hardest or the limit orders, the preset orders. Then you have the ones directly kind of interacting with just the raw nature of your portfolio. Then you have that mass kind of chaos that is developed around that. And that's how you get, some strong oscillations in your RSI. So that's a dynamic you don't always think about as well. After it goes up some, then they're pushing it out to all the customers. Then it starts to generate a different level of interest. Then you get into a potential overbought, oversold position, and we need to kind of recorrect that. So, again, I'll bite my tongue. I don't want to discuss too many things that go on potentially inside of any specific company. I don't want to discuss that. So, I trust you guys understand that. Let's hear, what do we got? I want to read through what you guys are talking about, just in case I miss anything. Let's see. Going on. Keeping the price low. What do we got? Just shout out, Victor. Let's see. Shout out to all you guys. Shout out to Joseph's still around. Hey, BU, what's going on? Shout out. Nice to see you back. Damien, shout out. Nice to see you guys. Nice to see you back. We'll remember these days when people are doing very well, continually, sustainably. Okay. 138. That's cool. You guys are discussing laddering down. That's nice. It's okay. Cost accrual. Maybe 13.5 entry. Okay. Yeah. Shout out to Brian Van Ekelin. That's nice. Brian, how are you? Shout out to foreign crowd. That's nice to see international folks. Very good. Okay, nice projection there, Mark Smith. 50-cent minimum. I like to see that. Let's see what we have. Shout out to all you guys who are putting the time in to understand the psychology. Okay, understand the dynamics, the details involved, the decisions you need to make, and the psychology of the overall broader market, not just yours, but also the psychology of the market maker in the exchange. Okay. Let's see. Let's see what else we have here. Okay. BTC liquidity swap. Dominance to roll over. That's right. Yeah, you guys on this overall market dominance with BTC. I mean, you guys all see where it's going, don't you? I think everyone does that's involved on the other side of the coin here, literally, and we're just kind of like, yeah, you know, between Ethereum and Binance and some other cats, this could drastically change. And it might be good for the overall technology. I'm not sure, because there's a lot of great technology that is developing that I'd like to see become front runners, you know. And BTC has the $1 trillion $1 trillion price tag with it. So aggregate price tag, that's kind of rare. But you know, Ethereum, hey, these other ones, you know, you could basket up a few of them, and all of a sudden you've got I don't know, you've got an interesting scenario. We'll see what happens. So that's what we're going through. That's where we're at. You guys have hit your comments up, and hit me some likes if you guys could hit some likes. If anyone didn't like this, if you put a thumbs down, that's not nice. If you want to take that away, we'll feature you on a special promotion of someone who decided to be harmonic in the Harmony One chat room. But otherwise, you just continue to be disgruntled or whatever it is. If you guys can, hit me some likes up, some thumbs up, so I know that how many people are here versus how many people have stayed the whole time. This will let me know kind of a fresh count of anyone who hasn't pushed the like button. It's not a big crew. It's just a very accurate crew. And we don't advertise. We don't do... shout out Jericho Polvera. What's up, brother? Let's see. There you go. And what else do we have? Readjust my charts. Was still moving with the downward channel. It was testing the top. Still looking bullish. Okay. Well, what you guys have is a little bit of that pricing action in terms of the trajectory that we decided to take. The market maker is going to decide, guys. And he already has, I'll tell you this, okay? He already has, and you need to figure this out. He already has, most likely, your orders on the books, right? So it's already been calculated. This is what people don't understand. It's already been calculated, this move, how much it'll be marketed. And I just promise you, they already know their return ratio, okay? They know 2% of the people that they send out notifications to will go ahead and push buy at the ask price. That's fine. 2% of the people, they're going to send it out to, they've decided, and it's pre-calculated, they're going to send it out to 100,000 people or 1,000 people. the time of day is involved, real engagements. I mean, it's down to a science, guys. None of this is guesswork for them. None of it. So they know once they've hit your cash in, that cash position, they know the orders are there already. Okay, they know the percentage of orders that aren't there that are going to come in. It's all 100% predictive. They know what's waiting at the lower level below it. They know whether or not they are going to go and pick it up. Okay, so all of this is predictable in terms of how much they're going to market this, how much they're going to, how much interest they're going to get on the buy side from new purchasers from that marketing. You start this ramp up. Does it keep going up? I don't know. Are they going to really bite onto it? Maybe not. Do you have a lot of orders in here? Maybe. Do they want those? Probably. Is that going to be the one that kicks it all the way up? If you follow this investment model here, if you follow this entire sequence here, yeah, it should be. I'll say that because we have a nice profile here. We have a very nice, drawback. That's very nice. You have to look at this. This is a nice surprise. Huh? Very nice. This upward movement. If it retraces, that's fine. Will it re-kick? And I'll bring that up because this kicked along a support, okay? Twice on that 15. Is that 15? Let me look closely. Yeah, 15. That kicked twice. Will this kick twice? Maybe. I don't know. We're still, if we just kick twice and this looks at just like kind of a normal event within the trading range, and we're not really, we're kind of due a 10, like a 10%. We're used to having a 10% price movement within this period of days. So within this interval, we're used to having something big. So this may not completely squash that. I don't know. You guys can take that for what that's worth in terms of your strategy and planning. The good thing is we don't have to change anything. This doesn't really phase us. That's fine. We have, what is this? We have an increased amount of, you guys call it laddering in. That's fine. Laddering in, laddering out. I don't like saying laddering. I just don't like saying that. So it's an accumulation phase, double down and triple down. I know who says double down and triple down. They're big dudes, big cats. So that's why I say double in and triple down, double down and triple down in terms of the investment approach, accumulating larger amounts of quantity at lower prices. So you guys may have orders just stuck in, let's say this area down here and around the 13.7, right? Someone commented earlier on 13.7 that they have that. Let me see what else we got in the comments. Sure, no problem, Jericho. I appreciate helping you guys out. And hopefully this is great. Definitely appreciate your education. Yeah, Patricia. Hey, Patricia, welcome. Welcome. Shout out to Patricia and Jericho and Victor Jones. Let's see. So, yeah, this is the, these are the fundamentals. This is our investment approach. If you guys listen back through, and I tell you, it's not the most professional in the world. I used to spend time in California, Malibu, etc. Had big showcase cameras, all this different stuff. I got tired with it. I also did a lot of professional business, and it was always a hassle for me, the cameras and everything else. So I really kind of moved away from that whole tech side of things. So I've just gotten involved in this because I really like Harmony One and crypto. And I was involved in some very, very high level stuff for the past few years that I'm not involved in right now. Just thank God. I just move on. I take vacations in life from professions and other vacations. I take vacations from vacations. So this is a nice element for me, and it's very simple. If you're listening to any of the previous streams or anything else that are highly informative, it may take a while to get through them. It will change your investment. It should change your investment career in terms of the personal investment career you have or otherwise. If they're a bit fuzzy or you get a crackle or something's hung up, just try and have the patience to get through it. I'll upgrade some stuff at some point. I don't want that cumbersome weight to carry around. You ever just travel light and you want to keep it light? If I want to go to, if they open, I don't know, they open a new cruise, or Four Seasons wants to fly people around the world on an airplane. I want to travel light. Whatever I've got, just real light. Then we're gonna do that world travel deal with different countries, fly around the world. That's always nice. So that's what we're into. We'll probably wrap up here. We're still in bullish zone. Yeah, the overall trend is extremely bullish. I'm going to bring this up one more time so that you can see it. And look at that, huh? Wow. It's nice. It's nice to get that uptick, huh? Now, what do I like about this, huh? What I like is that we're entering into the dynamic of, okay, of this. Okay, let's zoom in. Let's zoom in. We're entering into the dynamic where we have certainly gotten out of that channel. This is essentially the measure of the height of this specific. We'll just bring this over here. Okay. We're getting into the position where, let's see. If we're to kind of gauge out, and this is about a 30% return at some point, you know, we're just building into another level of a different downward channel that's increasing because we have these structured, planned acquisitions in. You see how this pushes this out and how that makes it more bullish? I mean, at some point you're just going sideways and you're just waiting for a massive influx of capital and you're going to be fine, and bam, you know? At some point, it just takes a little bit from everybody. Just go ahead and pepper this in at the levels they predetermined on their level of calculation. I guess calculations is not necessarily calculus, it's ratios, percentages, okay? But in line with those Fibonacci's, it's just play ball with them for a minute. You know, it's been going in whatever direction. Let's just play ball. Let's kick this thing sideways. It goes down a level, a little more cash, kick it sideways. Go down more, kick it sideways until they decide, okay, it's time for liftoff, right? Now we have liftoff. Houston, we have liftoff, right? Up and through, yeah, we're going to get some liftoff. So there's a reasonable time period within which we hope to get a new, first time we said this all night long. It's been a while, huh? All night long. First time we can hope to get what? A new high. Hey, bravo, everybody clap. Just clap wherever you are. Hey. A new high let's say a higher interim high. Let's say a higher interim high. There you go. Because the high is back here. But a higher interim high. Okay? That would reestablish a bull trend, right? In a formalized reversal from the retracement. Okay? So that's nice. It's an about face from the retracement. You don't necessarily need a reversal from the retracement. Kind of like an about face, you know, 10 hut, about face. Okay, turn around away from this retracement. So if we can do that in short order, and I'm going to give you a time frame within which we can do it, if you have your higher level of investments, okay, if you have your higher level of investments and we maintain the same level of orders that has been projected thus far into these calculations that we have discussed, if that's maintained, period, you will all get your good price. Okay, I'm going to tell you, if you maintain, okay, it's like if you behave, you'll get presents for Christmas, right? You see this corner down in here? All right. Now we're into some logic. Now this logic can deviate at any point in time. Warning, huh? We don't like it to. It never should, right? It doesn't need to. So let's go ahead and pull this. Let's pull this and mark this so that you guys have, I think, been rewarded through some application of logic here. I think that's good. From here on through here. I have learned and learned and learned. You guys know what you learn is to take a pattern as far as it will let you take it. I mean to maximize out a channel to the very last hour, day, minute, second, everything. Yep. If you have a pattern, you maximize that pattern to the very last hour, second, day, hour, I should say day, hour, minute, second, down to it, That's how you maximize your accuracy and you get better projections. Now there, okay. So we have, in order to maintain this next channel, okay? We're good. in order to maintain the trajectory and this next channel, we would like to see a liftoff. Okay, now, I'd also like to continue to see a further recruitment, okay, and installation of the ongoing, I'll say, validity of the 61.8, which is the golden pocket, which if we can get a bounce is beautiful, and it may even push this back further. But in order to reach a new interim high, okay, a new interim high of the equivalent scale ideally would be in and around, let's say, that 18, to achieve that 18. Now I'll tell you, we'll get above that. If we hit this, we'll get above it. This is not the candles. We hit well above this 30 percentile. These are hard current or hard price targets that will remain on the chart. So yes, we will get over that amount. But I'd like to see that. Per the charts, it's telling me that technically it needs to kind of see that it would indicate there might be an opportunity for a beautiful price in and around below 13.8, 13 cents and 13 and 8/10 cents, okay? And that is a zone which is achievable while still facilitating the channel work that's ongoing, which could even be higher. But I'm gonna stick with this channel right now because I like roughly where it's going. That's a rough channel to roughly like where you're going, because we may have it's played around though. It has expanded in the past down through this, so it may even deviate from this. I just see within the next, it looks like day and 2 hours. That's really nice, huh? Within the next day and 2 hours, it'd be nice to, I'd say the best way to put it is either continue to maintain its trajectory and soften up on the downside, and I'm not big on it reaching the 13.78, and I'm talking 13.39 to 13.78. I'm not even sold on the fact it needs to reach that. You guys get that? The 13.34 is pushing it. 13.34, 13.40 up to 13.78. Okay, there's a possibility of that given the dynamic of what it's been trading in. Okay, within the next day and 2 hours on up through the time period of, let's see, April 12th. That's 7 a.m. Maybe. Yeah, April 12th at 7 a.m. All right. So that's tomorrow morning at 7 a.m. So that's okay. That's kind of the max out function of what we're looking at. Of those of you who are trying to get your orders in, okay, your limit orders in. And that's just the nature of the game, guys. Understand that is the nature of this game. That's what you enjoyed doing. Well, if that's going to get you a 10%, 30%, double your money here and there, and you like this challenge, and this is what you're built for, this is what you're built for. You can't necessarily just change that and wish that away. That's no problem. I'm not going to be involved or interested in this anymore. It's got you. This is what you're doing. Let's make sure you do it the right way and with some intention and discipline. So that's the time frame. We hit the golden pocket here. We kind of got a nice little double bottom, but you guys understand what a golden pocket is now. We've been through that. You can rewatch these, you can rewatch any of this that you choose to rewatch. I'd like to see this not flirt with the 20-day moving average like it's going to use it as some sort of an indicator, because it's had nothing to do with the moving average. So I'd like to see this go ahead and go to the upside or whatever it's going to do, because it has never used that as, to my knowledge, it hasn't really used that unless it wants to kick up again, unless it wants to use this. It dropped back down and then it had to thrust back up and it got, a huge, a monumental lift. If this were to continue to go and it were to repeat just based upon that would be phenomenal. Now the acceleration here is showing me that we've got a little bit more of an issue, because we're already about halfway up. Let's see where we are. I want to see. Okay, halfway up. I want to dig into this RSI real quickly. On the previous jaunt up, right? I'll tell you, we were kind of high. Well, not that high. Well, I don't know. At halfway, we were interesting. We were about what is this? That's interesting to look at, huh? 14.42 from 12.7. So you had a ways to go on the upper path of that, but just the trajectory, just the velocity and the steam was just rolling. So yeah, I can see that. Looks like, you know, the RSI again. I don't like the RSI on this. So if it levels out and continues to move, you know, outward here, if it continues to push outward and slowly upward, that's fine. But I do see this as a critical time period in that maintaining that 30%, etc. We're going to need to maintain some sort of a trajectory to try and set a new interim higher high, and not the ultimate higher high, but an interim higher high. You see that? I just want to see an interim higher high, and for that to occur, we're going to have to do something by, you know, dead level. You know, we don't want to push it back 5 or 6 days and still expect to get that real new higher interim high. So that's kind of where things are looking. Rough trend line. That's giving you the logic to look at. Go draw your own charts, but you can see why we drew that additional trend line. We just literally went ahead and clicked on clone. Let's clone this sucker. Let's pull that out because we do have an additional kind of point of interest here that needs to be recognized. It wants to be recognized. It's doing something to grab our attention. It could even be recognized something along the lines of, you know, the downward channels here on, you know, Harmony One, they like to expand. We're also using kind of an exponential approach to investing. That may be one reason why I would like to expand. That's a nice looking channel, huh? That's a much better, if you look at, as the sentiment changed at all. Yeah, if we were heading down, in this fashion, and now it seems like we're flattening out about like that, that's fine. I think that's nice. That's not bad. So we'll get into the details. Let's hit this up tomorrow. Any residual questions or comments, you guys flutter up the thumbs up. I appreciate that. If we can get 5 or 10 more, that'd be fantastic. And let me just read through your comments here before we take off, and we'll see what all you have. Let me see what all you guys have left. Almost every day, yeah. Position sizing, I like that. Good. One of the things that will make you successful in this trade. Good job. Appreciate that, Victor. Risk management will keep you from taking any losses while maximizing gains. Love to hear that, Victor. You sound like you are on it, brother. Way to go. Let's see. You guys are big on BTC. I gave the crew that has the notifications, gave you guys XRP, okay, at 80. Not before, but right as soon as it went off, and we did a great little expose on why it's got a ton of upside. I know that some people got involved in XRP, and it's a hot little cookie. I'm glad some of you got involved. It's not one to trade, it's risky. I say it is risky. I mentioned foundational money when it was lower. It's going to double, but that BNB, you guys are involved a little bit in Binance Coin. I measured down, just so you guys know, I did measure down in Binance Coin today after some gains, and I just believe it might have a little bit of opportunity to pull back and to capitalize on a discount. I love Binance Coin. It's a phenomenal team and a great investment instrument. It's really outperformed, and I think it has the potential to turn into almost a NASDAQ. And I know it's not a component piece, but with Binance being the largest exchange, literally the largest exchange, okay, of crypto in the world, I literally would not, think it would be out of the ordinary to see it at a multiple level, kind of like the NASDAQ has, big value. Yeah, something like that in the future, and us to really highlight, I can foresee that being some sort of a potential go-to. But what's the exchange doing? And I'm not sure. We'll have to see. But what's listed on the exchange? We have that now with the NASDAQ, with the Dow, etc. So consider that as you look at other things. For now, Harmony One's doing great. It's producing well for us. Let me see. Good job on XRP since last year. Our big dog. What's up? Let's see. Just bought crypto and not sold, traded anything. That's so nice, Patricia. We're so happy to have you. That is so nice. That is so cool. Just so it will help me, guys. Make sure, let's do 2 things before you guys leave, because you're the hardcore. You guys are understanding all this. You're learning. It's a pleasure to be able to interact with you. If you can, first of all, promise when you get off of here, the last thing you'll do is make sure you stop by the Discord, sign up, and just stop in the welcome and say, hey, we're here. You have the invitation. It's pinned at the top of the comments. And before you get out, let me know where you guys are from. where are you guys from generally? If you can let me know a state or a country, if you're overseas or something like that. I'll start doing that earlier on so we get a better picture. But we have people from all over the world. We stream for a while, and all kinds of people, pass through, and we, maybe 1,000, 2,000 will pass through, and stop for a minute and get some education. So yeah, let us know where you're from right now, and let's see what we got here. I'll read through. Do something with your crypto. One is an excellent hold investment. Learn to trade means losing some money to begin with. Sometimes, yeah. So let me know where you're from, and give me that shout out in the comments. I would appreciate that. And let's see what we have. Any more additional information? I don't really think so. Let's see. Netherlands, there we go. Nice to see that, Zero Gajen. Netherlands, love that. Melbourne, Australia, hey, welcome. España, ¿cómo está, hombre? Ya viví en España. I lived in Madrid, in Barcelona, in Marbella. Santi Lang, good to see that. Guys, I've traveled around the world 4 times, so this is fantastic. Tax-friendly crypto country here. Good for you. New Zealand, what's up? Manila, Philippines, how are you? Shout out to you guys. I'm just seeing these messages now, a little bit of a delay function, but yeah, back in Philippines with you. Fantastic. Beautiful Philippines. How awesome, huh? What a cool group, huh? Who would know that we would all get around to discussing all this great stuff. Minnesota moving the Puerto Ricanos next weekend. All right, Patricia, have fun in Puerto Rico. That is exciting. That's fantastic. The principle he's teaching is the best thing you can learn, and will protect you from taking any losses. That's right. That's what our goal is. Well, guys, you have been Texas. Hey, what's up, Rodriguez? Yeah, Tejanos we are. Iceland, how are you, brother? Good to welcome New Nola from Iceland. This zombie Hardcastle. Corey, what's up? I appreciate the subscription. I don't know why there's a zombie running around on my screen. It's some program. It's not hacked. It's a theme I chose. I had no idea there would be a zombie going around on my screen, so I have to change that to something nice, like harmonic, because I have no idea what that is. Maybe that's all the other coins that are going to underperform. Maybe they're going to underperform Harmony One, possibly, but I'll change that up by tomorrow for sure. London, UK, what's up, Pac? I used to live in South Kensington. Love South Kensington. Shout out to London, UK. Bahrain, Saeed, huh? What's up, Saeed? Kifak marhaba, eh? Kifak, yeah. Alhamdulillah. Bahrain, welcome. That's excellent. So, what a great group of people we have. And guys, we're learning to trade Harmony One. We apply this to anything and everything. We can trade anything. The trick is when you learn on something and you get the nature of it and you understand the details of it, it becomes easier to trade that one thing. So you don't want to necessarily overextend yourself to any chart, any situation. You have to know kind of the push and pull of the individuals involved. And yeah, South Ken is lit. Absolutely, Pac. Shout out to you. And AG, shout out to you. We have Brian Rivero, shout out. Jericho Polvera, shout out. Hayden from New Zealand, shout out. Santi Lang, shout out. Michael W. from Melbourne, Australia. Zero Gajen, Netherlands. Big Dog Patriot from South Georgia. BU from London, UK. Love that, London, UK. I was in South Kensington over by Ennismore Gardens. I lived on this old street where JFK Jr. Used to live, so I was very lucky when I stayed there in London. I really enjoyed it. Let's see. California, LA, what's up? Old Stomping Grounds, Malibu, California. Love that. Colorado, beautiful place as well. Hats off to you, Joseph. Hats off. And you guys are doing awesome. This is great. South Canada is lit. Absolutely. So, hey, you guys are doing great. I appreciate all the feedback. And we'll stop back in again. We'll bring you more information. I encourage you guys to listen when you can. Listen and just educate yourself as much as you can. Write down the principles of what you will and you won't do. Don't get lazy. When you get lazy and you decide to just, when money doesn't matter for a minute, just understand it. When it doesn't matter for a second or you get lazy, you're going to lose it. Okay? That's the way it works. When you get lazy for a minute and you decide it just doesn't matter, when you do that in your investment account for 1 second, well, it just doesn't matter. Or you get in any kind of a rush, that's you losing money. the more calculated you are, okay, the more scientific you can get with all these programs, with all the calculated, not just the trend lines, etc., but the ratios. These are pre-ordered events, okay? Sarajevo, hey, shout out to Tom Baum. Sarajevo, I studied nuclear weapons, very interesting. In addition to some intelligence and other stuff, very good. And say any thoughts quickly about using a crypto broker rather than an online exchange? Would want to know which broker you're using, and if you are, it would be nice to be able to explain this to someone and have them just do it for you. So if you have a broker that can facilitate that, that'd be great. Or if you're talking about an aggregated broker, like an aggregated online broker versus an exchange that lets you swap as well. I'm not sure exactly what you mean by that, or you're talking about an individual who is someone who's going to give you investment advice. As you guys know, I am not giving you investment advice. This is not investment advice because I'm not warning you about, I'm not having you sign off on documents about warnings in the market or, possible, violations or not of federal, state laws or international componentries. That's nothing about what I'm doing. My intent is not to give you the full picture. I'm talking about some of the educational aspects that are in line with kind of a financial analyst, something like that I would just bring to you and bring to anybody that I can, given my background and hedge fund ownership, private hedge fund ownership. So that is it. Guys, bring these questions up. This is the other thing I'll tell you right now. You can go to the Discord. Plug in quickly. It's a phenomenal place to get ideas together. I didn't like it originally. It's a very upbeat environment. Ours is. Go in there and you'll have a place there where you can ask questions to London. So type in your questions that you have. Any questions you have, type them into the Discord. Follow the link at the top. There also will be opportunity to donate and support if you guys would like to donate or support here in the future. We'll do that as time rolls forward, and we'll build a good community. And you guys seem like the right kind of people to keep together. I like the international componentry of this. What I'll say is always wait for the right price as we close out. Always wait for the right price. Never get in a rush. Okay, so always wait for a right price, and never trade to lose. And there's a difference here. Never trade to lose. Never set up a trade that you're going to lose. With our strategy here, and there's a fundamental approach, okay? With our strategy, we don't trade to lose. No trade that we put forth on the table is going to lose. That's just what we look at. If it does, it's covered by insurance. It's covered by our next level insurance. So the more you guys can get into that, the more you'll appreciate it. And we'll just let you go. We'll try and do a stream here soon. I know you guys are subscribed and turned on notifications. And just enjoy yourself. It'll be a fun run. I guess the Coinbase IPO, I believe, is Monday. So we'll see how Bitcoin wants to respond to that. I think it's going to go where people want it to go, which is up. But I'm not going to hedge too much on anything on Bitcoin right now because it's just been a misbehaving market, and I love the altcoins. So we'll leave that to all the experts with Bitcoin. I'll just let them roll with it. I have a position in Bitcoin, but I'm not going to make the channel all about Bitcoin. You guys enjoy yourselves. I appreciate all your time, and get those questions to me in the Discord, and just take care of yourself. Be good to the other people that you've invested your time and years into, not just the stock market.